Good morning.
The problem is they have to keep their balance sheets getting worse and like this because they keep screwing up. So I mean, it just keeps piling on, piling on.
They need to tighten that supply chain.
And that's why there's a new CEO, right? Who's having to lay off employees, and can't get the labor strike right, and is now having an issue even more debt. So it just spiral.
That was a hard job to come into, though.
Oh, yeah, of course, 100%. All right, thanks, guys. Appreciate it. A lot of stock moves here. When we come back, we'll look across the world with Mr. Jeff Kleinsop, talk some China, talk a little crude oil and commodity moves. Got plenty for that discussion when we come back. A lot of volatility in the China trade. It was a bit of a heroic comeback earlier this month, and then it was a pretty nasty give back the last 2 weeks.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their head.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now that
Good morning. Morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, the 15th of October. Don't forget, tomorrow we have a VIX expiration. Many professional sites that I follow are looking for a correction in the short term. So I'll be focused on taking profits off into strength. Day trading a little bit more. When I say correction, I'm talking 3 to 5%. I'm not talking about, anything larger than that. We have a very call heavy monthly, October monthly expiration. Okay. And that is this week, the third week of the month. OPEX on the 18th, this Friday. Very call heavy. So probably not a bad idea if you have substantial profits and short-term swings. I'm talking about options mostly. Okay, I'm focused on options. Been more aggressive with options lately. Credit spreads, verticals, directional verticals. Swing trades, you don't have to manage it, micromanage it so actively. I'm talking about TRBCX and long-term funds like that. You buy dips. I'm looking at on the watch list. We have SPYD, a high dividend SPY ETF, focuses on high dividend, paying S&P 500 companies. Let me show you that. That looks really good. SPY D. This is one that was brought to our attention by Yoda many months ago. This continues to do very well. Buying the dips.
Does that mean we should be welcoming the crude oil drop here, Jeff? For those
That's SPY D, the high dividend ETF, focused on S&P 500 companies that pay high dividends. Okay, so Apple is up this morning. Apple much higher this morning. Talked about the strength going into the close yesterday. You can see right there in the middle of the screen. Okay, in the white area going into the close, right around 231. We close at the high of the day. Looks very good. If we look at Apple on the daily, we can see nice pattern. We've been basing. It's trading 234, 235. We should run into some market makers. Let's see, Apple 235. All right, so 235 is a major level you need to keep an eye on.
A big announcement on stimulus. A lot of details were expected. They could really set this record straight with where they were allocating fiscal stimulus of $2 trillion or more. Didn't happen, and we saw a very, a further decline.
Watch IWM today as well.
They didn't give any details. There's still the potential for detailed fiscal announcements at key budget meetings later this month or early next month. But I don't think they have their act together. I don't think they're sure what they want to do. They don't want to fuel a return of a bubble in housing. They don't want to address some of the issues on the consumer side. They really continue to focus on green tech and semiconductors and a lot of supply side issues where the market's already oversupplied. So I don't think the stock market's going to wait. And as we've been saying, stocks continue to give back the gains as they did following those prior stimulus-driven rallies. You can see it in the chart here. Already stocks are down 12%. Not surprising to see this continue. And yeah, that's part of the backdrop disappointing oil investors today.
Okay. Yeah, the crude situation and its connection to China seems like there's a thread there. Maybe not like the, with all the geopolitical stuff, maybe not one-to-one, but I do think it's an important point to connect. And it also just seems like if you're trying to apply a Western world framework of policy impact on economies, it just doesn't quite work with China.
Yeah, China doesn't respond to market incentives the way a normal economy would.
Exactly.
It's still very top-down oriented. And look, they are focused on longer-term strategic goals of, self-sufficiency in a lot of areas where they're being cut off by the rest of the world. You talked about the chip issue this morning. That's an area where they want to allocate a lot of resources.
Okay, Apple, we got 235 as a major call level. All right, so you know that the dealers are stacked up short They're short calls, Apple at 235. Already starting to see a little profit taking right now. Okay, watch Apple, 235. When we get to 235, as we ease up to 235, the dealers are short all those calls. So if for some reason we manage to make above 235 aggressively, we see volume coming in, you can see histogram's already starting to turn dark blue. If we get above 235 today, that could force a squeeze on the dealers who will have to, one way of hedging is to buy shares. That turns into a short squeeze. That's if we get above 235. 235 anticipate resistance for now. Tesla is also higher this morning. Tesla also higher. Okay, let's take a look at Tesla going into the open. We've got about 4 minutes to go, 4 minutes to go. You know, the first 15 minutes of the day, all I'm doing is taking profits off the table. You can see that major resistance here at 221.50 on Tesla. All I usually do in the morning is take profits off into strength. How many times have we seen these gap ups where we see selling into strength and then a B and C pivot thereafter? All you have to do is look at Micron or NVIDIA yesterday. Both of those did the same thing. Okay, let me turn off extended hours. Okay, so you can see yesterday we had the run up in the morning, sell into strength, the pullback, B and C pivot. Yeah, we did move a little bit lower, but you had a nice run up. Okay, Micron, same thing. Okay, Micron, gap in the morning, sell, rebuy on the pivot low, wait for the buyers to step up. You can see the buy orders down here and the sell orders overhead. All right, so you know exactly where dealers will be active. Okay, 2 minutes to go, 2 minutes to go. Okay, Apple at the highs. All right, so the first thing I want to do is take Apple off the table. Okay, Apple. Trump Media, DJT. That one was up after hours last night. DJT. Okay, you can see DJT way up here. Okay. All right, let me put a sell order on this one.
All right, Jeff, great stuff as always. Thank you very much.
Thanks, Oliver.
Much needed perspective. Jeff Klein's Chief Global Investment Strategist coming up. Opening bells and some movers here. We got KG, Caroline Wood standing by, about 2 minutes away.
Okay, Apple, Micron. All right, let's get ready to open. Let's get ready for the opening bell. Super Micro on the move a little bit. Super Micro. All right, let's get ready. About to open.
Buy it as is or customized to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
This election season, stay out of the muck and the mudslinging. The Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Neil, how's my favorite client?
Quick question, Carl. Can you
Okay, we're open. Okay, Apple.
Yeah, at Schwab, I can get full
Nice.
wealth management advice and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil,
Okay,
tell me-
NVIDIA, watching NVIDIA. Keep an eye on Nano Nuclear. That might get something going today. NVIDIA back into yesterday's range. Meta pulling back.
From every click to every tip,
Okay, Tesla, nice move on Tesla.
Anywhere, on any device, for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Okay. All right. Seeing a lot of profit taking. Just wait for the opening range. First 15 minutes, algo's taking care of imbalances.
Swing is going to be in the Russell. These numbers start printing about 20 pips. Really not much to say. Probably just move right on from it. 58.62. S&P's smooth sailing.
A lot. But it's having an impact.
DJT higher.
Well, because also down.
And Karen Lynch is doing a good job. And I don't
Okay, Micron on the move. Micron popping. There goes Micron. Watch NVIDIA for a pop. Micron popping. Okay, look for buyers to step up on NVIDIA.
Almost 4% on worries about utilization, as you might expect, sort of exiting this year at a more challenging 2025. Why? Well, because of UNH and what they're seeing there. Again, want to get more info. I know Bertha Coombs follows it closely for us as well.
Okay.
Medicare Advantage and the like.
Let's take a look at Micron. Micron popping this morning. Buy order blocks. You can see them stacking up underneath price. Buy order blocks. These little red and green shaded areas.
It is getting a real boost here in the marketplace as a result of
Okay, Tesla. Big move on Tesla. Tesla ripping here. Tesla's ripping. Tesla.
related to the Village MD acquisition. Huh? Oh my gosh. Jim, that's like Intel.
There goes Tesla. Microsoft on the move. Looks good. CrowdStrike pulling back, giving an opportunity. CrowdStrike.
And they took a hit of 5.8 billion, an impairment charge of 12.4 billion, but a hit of 5.8 billion on something that they invested 5.2 billion in.
Tesla. Big move on Tesla.
No, but this is Tim Weber.
Let's see. What do I want to do here?
But I would say, David, the 1200.
Still have the Iron Condor that expires on Friday. Moving back into the range, kind of the opposite of what we did with Microsoft on the fade. Not Microsoft, with Micron. Tesla's on the move. Tesla looking good. There goes Tesla. Okay, into the gap. Okay, watch Tesla.
Obviously, a positive response they're getting in the stock market to that plan, although I think many had it anticipated as such, right, as well.
No, but still, it's good to see. He's going to, and there were people who were talking about that it was the next Boeing. Hey, Boeing.
Okay, Bitcoin looking for a break higher in Bitcoin, looking for 70,000 in the short term.
So if you want to figure out your multiples, now that is an adjusted number.
Okay, Micron.
Keep an eye on the healthcare sector.
They're going to make it. I think that's the takeaway. And the CBS is not down because Walgreens is going to make it. CBS is down because they own Aetna.
Because of UNH.
And
right.
I have great faith in Karen Lynch and Aetna and her be able to pull this off. But
Micron, okay. Micron looking good. Keep an eye on Tesla. See if we get any kind of follow through.
No, there's a lot of moving parts there and good difficulty. How about Boeing, Jim?
Okay, Micron following through, pushing through this level, the 200-day. This could start to accelerate once it gets above 110, 111. Look for resistance around 114.70. AMD gapping down. Oh, there goes Apple. Apple on the move.
So that adds up to 35 billion that could be available for the company. You made the point yesterday.
Apple on the move.
Certainly worth repeating. If you're gonna
Okay, Tesla's still going. Crushing.
And here we are, and they just keep telling us they're
Crushing the bears. We got Tesla ripping here. Watch Tesla. Wow. There goes Tesla. Listen to Kramer. He knows everything. Uh,
I mean, honestly, they think it's like underneath someone trying to sell a life insurance policy or something.
I guess if you're a neophyte, you don't see the flaws in a lot of things that Kramer says. I agree with you, Cayman. He's probably a closet billionaire recommending stocks to hedge funds, shorting. All right, there goes Apple. That would be illegal, though. Micron looking good. Tesla, Microsoft trying to hold up. AMD dropping off. Apple still pushing higher. Apple. Okay, the NASDAQ 100 is about 50% green, a little bit less, about 45% green, trying to add more. Marvell, yesterday we had all chips. Today we got a mix. We got some retail in there. We've got gaming stocks, Electronic Arts, Dollar Tree, Costco, Starbucks, Costco. Let's see what Costco looks like. Costco. Okay, Costco on the move. Okay, Costco on the 4-hour chart showing a directional change perhaps on Costco. Let's see what Costco looks like. Costco. All right, so you're buying the dip, looking for a follow through. CrowdStrike still moving lower, so is AMD. Broadcom. Okay, looking for dips to get bought. All right, watch the Tesla.
Usually trying to talk about how big companies are that no one's ever heard of. How about Broadcom?
One of the biggest. AVGO, punch it up, and you'll see it a market value that is, amongst the top 10, right? $842 billion.
VMware, which is starting to really kick in. They do have cell phone and they do have PC. Those will kick in 2025. That stock is still a stock to buy even up here. Broadcom.
While we're in the neighborhood, Commerce signing a preliminary memo on Wolfspeed funding,
I saw that.
and another $750 million with an Apollo-led group that would build some in North Carolina and New York, couple thousand jobs.
Extraordinary. I mean, look, Micron putting up a $6 billion plant in New York. There's just I hope we have enough workers to do all this stuff. I mean, we need robots so badly. It's really incredible. We just do not have enough people to do these things.
Well, we have a presidential candidate who conceivably is going to be deporting a lot of people.
I'm not familiar with it.
You're not familiar with it.
Maybe
My
you're
point
familiar with
is,
DJT.
Oh, yeah.
Which has gone
I like
from
the way
12 to 30 since September 24th.
Okay, I'll give you a little conspiracy theory. Let's say you developed a short squeeze, and then you wanted to be able to say that you raised more money than the other candidate.
Apple on the move.
The board let you do
Apple on the move.
shelf. Well, then you can claim you raised more
It
money
looks
than-
good. Apple.
right, that's true. Well, there's a lot of money in that, for sure, to your point, and the stock continues to move up with the betting odds that Trump will be victorious in the upcoming election.
It's not an earnings story.
No, it's an election story. It moves with the likelihood of a Trump victory. Back to which I said, you talk about a shortage of labor.
Why are people, these talking heads, so aggravating lately? It's just really getting on my nerves. All their opinions. I don't care about your opinion. Just talk about stocks. Oh. I wish there was a show that talked mostly about stocks. I got to tell you, Yahoo Finance on well, I'm not sure if you have it on your channel lineup, but Samsung has it on their channel lineup, and they're pretty good. They do have some managers, portfolio managers that come on, and I'm sure they're talking their book too, but I don't know, it's just not as aggravating listening to opinions. Just talk about what you're doing. Anyway, don't mind me. It's just irritating. Okay, Tesla looks good. Nvidia, we got a bounce yet? Not yet. Okay, looking for a bounce in Nvidia. ARM Holdings pulling back a little bit. ARM. Okay, so I'm looking to do something with ARM. Okay.
Let's talk about that. Small form reactor, because you've been a big leader in the nuclear move.
Thank you. I have, yes.
ARM looking for the bounce. Okay, ARM had a good day yesterday. So I'm looking for buyers to step up, shake the tree, watch ARM Holdings. Very good day yesterday, ARM Holdings. It's an inside day now. It can come back to the 9 EMA. I mean, we've seen that. We've seen dips. So looking for a dip to buy on ARM Holdings. If we get that dip and we start to see buyers coming in, and if I'm not paying attention to it, please let me know. I know, Frano, you're in it. I have a vertical on it, 160, 165. That expires the 8th of November. So I have time on that one. Okay, Microsoft pull back. Okay, we got a VIX expiration tomorrow. Many are anticipating that we should be open to the idea that we could correct a little bit, 2, 3, 5%, and then rally again into the election. After the election, we'll see what the Fed does, but the Fed's probably not going to do much of anything between now and the election to upset the apple cart. At least that's what many professionals are looking at. We got an iron condor on the S&P 500. That was posted in the Gamma channel. I believe Mikey also posted those levels. So we'll probably ping pong between these levels. Okay. So 58.85 and 58.35. Okay, so these levels right here are where we'll probably stay between. Ping pong in between these levels. It's an iron condor, 10,300 contracts. Okay, so if we get up to, okay, we already hit what level here? Okay, we hit the high, starting to see some profit taking, 59.13 on futures.
Look out for a price hike. It's been a couple of years.
Thursday, I'm telling you, the analysts are just going to go nuts. I mean, they just can't seem to.
Okay, you see these orders above and below the S&P.
I wonder whether Apple will finally address
Prices will stay between there most likely.
They just won't do it because it's just not significant enough.
Okay, Apple's above 235. So what did I tell you about Apple? Okay, what I told you earlier is that if we got above 235, that we could run. Okay, short squeeze.
I'm so cranky. I'm River Park, right? Oh, you are, huh? Yeah, that's a great show.
Meanwhile, elsewhere in consumer, Jim, we did get this downgrade of Etsy over at Goldman.
Yeah, oh my God. I mean, and to a sell, and I don't even know how to put it out of its misery. Brooklyn's own. I mean, the margin compression is not good. Obviously, it would be difficult to anyone to buy the company. Those of us who use it would just kind of hope for the best here at this point. It's really incredible because they can't seem to do it. They can't seem to get the margins right. Josh Silverman, used to be a former growth stock. It sells 12 times earnings.
Wow.
That was bad downgrade.
Guys, we went through a lot of the financials at the very top of the show, and as expected, Goldman is up a bit, but really the gains
Looking good.
Muted. Bank of America up 1.5%. I would note Citi shares are down. Jim, I haven't had a real chance
Apple.
to go through the numbers. I'm sure Leslie Picker will join us at some point.
I'm still worried.
Oh boy, Apple looks really good.
Citi did also report stocks down almost 2%.
Tangible book value. Now, David, did you see the Citi? Tangible book value is $89.06. In other words, you close the bank, it's supposed to be $89 there. David, I need that explained to me. No one has ever. My quarterback did not explain to me the difference. And the actual book value is $101. Right. Can you explain to me how that's possible? Where are the regulators saying, listen, we want this gap closed. We want it closed now.
It just, moving the needle at Citi has been a Sisyphean task, I guess is fair to say, right? Jane Fraser, the CEO now for a while, is quoted in the release saying, in a pivotal year, this quarter contains multiple proof points that we are moving in the right direction and that our strategy is gaining traction. She said,
all right, looks good. Apple looks good for the short squeeze.
For each of their businesses, share gains and fee growth. That said, as you see, the stock is down.
The Treasury and Trade Solutions is worth a great deal. It is. It's a great division.
Yes.
They print money. But you know what? I have to tell you that I look at these banks other than Wells Fargo and JP Morgan, Goldman, I think the Banco Santander really measures up. I think Anna Batista, when he made it's $5 stock. It's not a speculance. Speculance. I think yields 4.45. Largest bank in Europe. Really an untold story. It's fantastic. They've got great numbers. Spanish Bank.
Okay, Apple, nice move today.
Today, Carl, as you well know, is that Charlie Sharp is going to be on Mad Money.
I hadn't heard that. That's
Congratulations. I can go up to Hudson Yards and do that interview.
I think that is the biggest story in banking today. Is take a look at Charles Schwab having a great morning.
Charlie Sharp and Charlie Schwab.
Get those two together. That's a show. The market would be doing a lot better if energy weren't down 3%.
Somebody downgraded BP. Why bother?
Well,
I mean,
Looks good. So far, looks like dealers are having to buy.
They would not go after oil or nuclear facilities in Iran. Netanyahu, they pushed back a bit against the
To cover, to hedge.
Low 70s again, and every time you buy these things, they just come right back. I feel badly for people who are trying to speculate. If you are wanting to be in this group, I suggest that you just go buy Chevron. I know it's been a laggard.
Chevron. Why not just buy Exxon?
Well, I was thinking about you.
Just asking.
Why do you come at me like that?
Why do I? Because somebody has to.
Exxon has got a 3%.
What do you come after me like this?
Wholesale.
All right.
Flirting with 2 once again.
You know, when
70 days ahead of Christmas.
Almost every bank CEO that I talk to mentions one of the things that's really helping us is the price of gasoline. So I think it's really, I'm glad you pointed out, I should have pointed out earlier, it's really important to bankers.
201.
Yeah, it's just a major JPAL.
Speaking of gasoline, Tesla shares are up 1%. You see we discussed this yesterday, the fact that the robots, the big event, the robo-taxi event, some of them were human controlled, at least to some extent.
All right, Apple. Nice push on Apple.
Happened previously as well when
Okay.
I unknowingly showed a video some time back of Optimus doing something with an egg, I think, and it was actually controlled by a robot.
Is that like the dogs that picked up Jello that I saw in a video? No, those were actual metal dogs.
Yeah, I don't know. I mean, so it's not fully autonomous, I guess, is the point. Although when it talks to people, it's pretty amazing. Anyhow.
It can make, of course,
It's a key component of the investment theme that Musk is stressing there in terms of saying these will be on the market in the not too distant future at what $20,000 to $30,000 a piece.
Well, Jensen has talked about everyone having a robot. I would love a robot.
What would you have it do?
I don't know. There's this new rotisserie chicken down the block. Yeah, chicken.
So food run.
Pretty good. Yes, down on Pine
Beer
Street.
run.
I don't want to go there. This is robot. All right. Get this here.
All right, there goes Apple.
The streets of New York City. That thing is not making it 2 blocks.
David, I'll let you borrow my robot.
It's gonna get run over. It's gonna get hit. Some old lady's gonna be beating it with a bag.
Robots.
What?
Charlie and I were talking about the need to have robots.
Charlie who? Not Charlie Schwab?
How is Charlie Schwab? Is he coming on your show tonight?
So, David, immigration.
Dow's down 200. Third rail. Bond market gets back to work today after the holiday. Empire was fairly weak, the worst since May. And we'll keep an eye on the 10-year, which was about 406 this morning, has eased up a bit to 404. Don't go away.
There goes. All right. Apple doing exactly what you would expect to do once it gets above 235, short squeeze. The dealers are short those calls. So what will they do to hedge? Well, they'll buy shares. And the rest, as we can see, is pretty evident. Okay, looks good. Okay. Thank you. Thank you, Cayman. All right, looking very good. Tesla looking very good too. Tesla with a nice bounce. Those iron condors we took for the Robotaxi event, those are doing well. Okay, the calls are worthless. You can close them for about $3, $4. The puts, the 220 puts are becoming worthless. All right, looking good. Bitcoin. Okay, there goes Bitcoin. Thank you, Timmy. Thank you, Timmy, for reminding me to look over there at the topmost screen in my office. Bitcoin. Wow, look at Bitcoin. All right, so I need to let my son know because he's Bitcoin. He's got Bitcoin. I've got Bitcoin. Oh, that reminds me. I need to go log on to my Coinbase account. Keep forgetting to do that. Put in a limit. Oh, there goes Bitcoin. Bitcoin blowing up. There you go. Whoa, look at that sucker go. Wow. There we go. Bitcoin blowing up.
Election night 3 weeks away, and we want
All right, looks good.
We're going to be right here at the New York Stock Exchange. We'll watch the numbers as they come in, look ahead to see what it means for your business, your taxes, the stock market. It all begins at 7 p.m. Eastern Time right here on CNBC Live from the NYSE. Up next, it's Stop Trading with Jim.
All right, nice, 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 nice. This looks good. Looks good. Tesla. Okay, let's see. All right, looks good. Looks good. Apple, nice. Nice, keep going. Keep going, Apple. All right, nice morning. Looking good. Apple. All right, Apple aware. Apple.
Download the app.
It's time for Jim and Stop Trading.
This course race between Apple and Nvidia is officially closed right now. I think that Nvidia is coming up that you would say lame or hung versus Apple, which is up 5. I think that my colleague David Faber gives me an IDC report about how Apple enjoyed a 3.5% year-over-year growth in shipments this quarter, fueled by strong demand from previous models and launch new iPhone 16 lineup. That's very contrary to what most of Wall Street's thinking. So that's put people short Apple. Own it, don't trade it. And if you don't own any video, you might want to buy it ahead of tomorrow when I have my
Okay, nice. All right, start to
wait to be with you on election night, which is I've been covering elections since 19.
starting to
Be the most exciting night.
see a little profit taking. Apple, see a little profit taking right now. All right, let me go check this out. Let's see what do I want to do here. Apple monitor. Apple, Tesla.
You did. He was the master of Kinderhook, where David has a country house.
You used to play golf with Taft, didn't you? Yeah.
No. I play golf with Eisenhower. Which party tried to nominate Eisenhower? Both.
Okay, Tesla looking good. Micron a little pullback there.
You know, Wells Fargo. Charlie Sharp has never done.
Okay, Bitcoin going ballistic. Bitcoin looking good. Looking good.
Just believe me, I'm going to go outside with the demonstrators if they're still there. It just doesn't give me a real beat down.
Jim, congratulations. Look forward to it.
Thank you.
Everybody does.
Thank you.
Mad Money tonight, 6 p.m. Eastern Time. With the Dow down 260. When we come back, B of A's Brian Moynihan with Sarah breaking down the numbers this morning. Don't go away.
Okay, Bitcoin. Wow, look at Bitcoin. Holy smokes. Let me send a text to my son. Out riding his bike. Bitcoin. He was going to sell Bitcoin yesterday. I said, no, don't do that. I explained to him what happens when prices get back up to a bag holder level, where people wind up buying at the wrong time. They're sitting there waiting to break even. They sell and then just watch it as it just keeps going. We've been waiting for this breakout for at least got to be since May. No, since March. March, April is when it peaked out and started this descending channel. It's been in since April. Now it's starting to break that upper channel. Bitcoin, it's most likely going to rip now. You don't want to sell now. I mean, why? Why would you sell now? Right? I mean, now you're starting to see smart money goosing this back up to the highs. Okay. All right, let's look at the 4-hour chart on the right. 4-hour chart. Okay. Let me go to the daily. Actually, you know what? Let me go to the weekly. Weekly is easier to see. Easier to see this channel. Okay. So we're breaking the upper channel line, subjectively placed, of course. I usually just take, a bunch of pivot levels. I don't usually use wicks. If I pull this down to the bodies of the candles, it's a little bit, it's okay. Let me take the bodies here in the last few months. Okay, like this. It's still pretty good, pretty decent little channel. Okay, more importantly, look at the upper trend line, look at the TTM on the weekly. Okay, this is just getting started. You don't want to sell here. This is exactly where you want to be looking for the follow through. Maybe add to your position. Not at the high of the day, but over. Okay, look at Bitcoin over the over intraday time periods. You could add to your position on dips. All right, looks really good. Bitcoin on a move, looking good. All right, watching Coinbase. Coinbase is making a nice turn. Okay, let's go look at Coinbase. Coinbase had a big pop yesterday. Okay, no surprise there. Coinbase, big pop yesterday. Got 3 white soldiers, Coinbase. Okay, this looks good. Wow. Wow. Coinbase. Three white soldiers. big reversal pattern.
Take a look at stocks, mixed picture, because the Dow is down 293 points, but a big part of that story is the 10% drop in United Healthcare weighing on the Dow. The S&P 500 is actually
Coinbase looks good.
going inside the Dow. UNH dragging 380 points off the Dow. Caterpillar another 30, and then Chevron 18. So some of the weaker spots there, and that's why you see a mixed picture. In the S&P, what's leading? Real estate, financials having another good day after better bank earnings, consumer staples, discretionary, and technology all higher. NASDAQ is up about a little more than 0.1%. Energy, healthcare, and industrials are your losing sectors.
Nice job, Frank.
You've got some strength in Apple, for instance, on the tech side. Tesla's higher today. That's all helping the NASDAQ. Take a look at treasuries. We reopened after yesterday's closing for Columbus Day holiday. The 10-year yield, a little bit lower, under 4.1%. Remember, we've been worried about higher yields creeping higher on the back of better data and less expectations of Fed cutting. The 2-year yield a little firmer at 3.9. And then energy as well in focus, of course, as always with geopolitics, having a sharp move lower, down 4.5% on WTI crude. Brent crude down 4%. We'll talk about all of that. 30 minutes here into this training session. Here are 3 big movers we're watching. A number of healthcare names on the move on the back of earnings. So Dow members, United Health, as I mentioned, and also J&J among them. United Health, the worst stock in the Dow and the S&P 500 right now, while Walgreens is the biggest gainer on the S&P. And then CoverGirl parent Coty under pressure after a disappointing forecast there, and more results out of the financials. Goldman Sachs, Citi, Charles Schwab, and Bank of America all reporting this morning. We're going to break down the numbers, the stock reactions. We're also going to talk to Bank of America Chairman and CEO Brian Moynihan a little bit later this hour. As far as what's top of mind, though, in the macro setup today, we did get a Fed speaker that I always pay attention to, which is Fed Governor Waller, because he tends to be, sort of one of the leading thinkers on the Fed, and it particularly surprised me that he backed the double jumbo cut that we got at the last meeting. So here's what Waller is saying right now, and it's a little more Waller to me than a double cut. He says, "Well, we do not want to overreact to this data or look through it. I view the totality of the data as saying monetary policy should proceed with more caution on the pace of rate cuts than was needed at the September meeting." What is this data he's referring to? Well, it's good data. It's the data we've gotten since the last Fed meeting, which on balance has been better. Upward revisions to growth, more job openings, better wage growth, lower unemployment rate. The chart today that I
looking good.
is the Citigroup Economic Surprise Index. So this shows where the data is coming in relative to where the economists expected it to come in. And you can see, when we're below that zero line, that was when we had the growth scare and when the data was getting worse and the Fed was gearing up to cut rates. But lately, it's really been on the upswing and it's climbed. And we'll watch it because there's a little bit of a tick down. New York manufacturing today, Empire activity was weak, but still the data, Carl, has looked better. And now Waller, I would say, he didn't use the pause word like Bostic did.
Okay, nice move on Bitcoin.
Pause, or we need patience or anything
Okay,
like that.
Bitcoin with the major breakout here. Holy smokes. I keep forgetting to text my son. Okay.
You mentioned some of the B of A numbers yesterday, looking at things like mentions of weak demand on earnings calls, rail car loads, the so-called corporate misery index, all of those things.
Okay, let's see.
I don't know, the fund manager survey this morning, or if you built anything, but largest jump in investor sentiment since June of 2020.
No, things are looking up. I mean, it wasn't supposed to be this way just after one little rate cut, right? And in this period of the cycle, what I pulled out was the spending number from Bank of America, because we got a retail sales.
Okay, Apple's still going. Wow. Apple, you're impressing.
This is a consumer-led economy.
Impressive, Apple.
Bank of America says we're gonna
Big move on Apple. Okay. So don't get too giddy. I try to contain myself when I start feeling giddy and start singing. We have a major OPEX on Friday, okay, for the month of October. We have very call heavy. So you know what dealers want to do. Dealers want to suppress all of those calls so that they can not have to pay up. So they want to keep prices lower. I would say below 5,900, maybe 5,875. many are looking for a correction. I'm talking 2 to 3%, maybe 5% max before the election, and then a run up into the election, and then another potential dip or follow through after the election, depending on who wins and what the markets think of it. But yeah, short term, I would be taking profits off in the strength bank. Some of these profits that you have, okay, we'll still be looking for BNC pivots. You know, the fewer positions you have open, the less concern. I'm talking about day traders and short-term swing traders, not investors. Investor time frame, I'm not really that worried about investments. I don't want to micromanage them. If you take TRBCX, for example, the T. Rowe Price Fund is making new highs. Okay, so here is the daily, weekly. Okay. Continuation, RGAFX. All right, these long only funds are looking very good. You know who's in here? Apple, Microsoft, Nvidia, etc. Tesla pulling back a little bit now. Tesla. Okay, Apple at the highs.
Makeup company. They own CoverGirl, Max Factor. They estimated same-store sales growth below the prior forecast.
Okay, looks good.
In the United States, they say while beauty remains resilient in many parts of the world, U.S. market growth has slowed. So, look, more caution a little bit from the commentary, and that sort of jives with what we got in places like the Beige Book, you know, which the Fed pays really close attention to, where they get anecdotes across the districts, and it has been relatively soft, despite these numbers and this economic data, which continues to paint a picture of strength. It's a little confusing.
And we'll stay on top of it. Let's get to the bank.
Okay, looks good. DJT pushing higher. Trump Media pushing higher. It's just a stock. Relax if you don't like Trump. It's okay. It's just a stock. Just trading the stock.
But I turn to you for some of the answers.
Yeah, that was a bit confusing to me.
Making money.
With sources who are also a little
Okay, so we got Bitcoin starting to show. Look at all these fair value gaps. Some of these are going to have to fill, I would imagine. Okay, Bitcoin looking good. Bitcoin. Okay. ARM Holdings starting to turn the corner. ARM Holdings. If you're looking for the dip to buy, watch ARM Holdings. Nvidia pulling back. All right, so there's a gap from yesterday's open. Looks like we're going to fill that.
Comparing to a very strong 3Q of last year, so that was a bit mixed across the street. Goldman Sachs kicking off its earnings call a short while ago. CEO David Solomon saying the backdrop is conducive to its business of helping clients navigate risks and position for a range of outcomes.
As I look at the operating backdrop, the U.S. economy continues to be resilient. Inflation has been coming down. The recent unemployment data is supportive. And while we've seen some softness in consumer behavior, the tone of my recent conversations with clients has been quite constructive. The beginning of the rate cut cycle has renewed optimism for a soft landing, which should spur increased economic activity. More broadly, clients remain highly focused on the trajectory of rates in jurisdictions around the world. Policy implications of global elections, particularly in the U.S.
Who's this talking? David Solomon, Goldman Sachs. Conference call on Goldman Sachs. Tesla pulling back a little again. Tesla pulling back again. Okay, a lot of volatility. Popping up. A lot of profit taking. Okay, watching.
Today's call kicks off in about an hour's time. You can expect to get a lot of NII questions on that one, guys.
All right, Supermicro. What's that doing? Supermicro. Okay, trying to turn the corner. Supermicro. Supermicro trying to get above that 50-day. Okay, mixed volume. Looks like mixed sentiment. Okay, let's go down the list of stocks on the NASDAQ 100, starting with number 1, Marvell. Marvell. Okay, I don't see any news on Marvell. Gapping up. Marvell.
So I think they're a little hesitant to really give some very clear
Let's see.
predictions surrounding net interest income because there is such a clear correlation to kind of the rate paths here.
Okay, Leslie, we're going to talk more about this. Thank you very much. A lot more from banks and with bank executives in the next hour. Do not miss Bank of America CEO and Chairman Brian Moynihan.
Okay, Marvell, number 2.
Stock up 1.5%, and then Charles Schwab.
Number 2 on the list, Warner Brothers, turning back up. Okay, Bitcoin's holding the highs. Ross Stores, dress for less.
Notching its 46th record close this year. The Dow closing above 43K for the first time ever. Joining us this morning.
Turn the corner, Ross Stores, number 3 on the NASDAQ 100. Apple, number 4. Breaking out above these pivots, 235. 235 is a major gamma level, so dealers needing to buy shares, a little pop up to 237 and change. Once it got above the call wall,
would be sitting at 4,600 right now, as opposed to 5,800 and change. So what's happened that I think is very interesting, and it just speaks to the animal spirits and the high degree of confidence that investors have. We've had a 4 multiple point expansion in the
watching Apple appear at the highs above the most recent call wall update. Okay, Nvidia still dropping off a bit. Nvidia, Micron dropping off a bit.
Earnings are still going up, but we're tracking what maybe 5-6% year-over-year earnings growth for Q3. Stock market's up 34% over the past 12 months. So the price action of the stock market has outpaced the actual earnings momentum, call it by 8x, which when you look back at the data.
Okay, let's take a look at.
One in 10 event. That's what we're living in right now, a world that is extremely rare.
Let's take a look at money magic levels. Let's see. 235 Apple.
Worried about a repeat of inflation, or can you maintain your classic deflationary stance?
Apple pulling back a bit now. Apple.
Over inflation, because you can't just forecast inflation with one curve. You can't just do it through demand. You also have to have a view on what the supply side of the economy is doing. But the longer the economy stays strong, and I would question actually the veracity of a lot of the data that has been coming out. But if your view is that the economy is staying resilient or strong, in a 5% policy rate world, then what it has the Fed thinking is where's neutral, and right now they think neutral collectively is 2 7/8. But what's going to happen is that the momentum is going to build that the neutral rate is probably quite a bit higher. Ergo, it's not so much about inflation; it's about that the Fed will not have to recalibrate to a lower neutral.
What's Trump media doing? Okay. All right, let's take a look at what's moving. Okay, we talked about Ross Stores, Warner Brothers, Marvell. Electronic Arts are also up. Electronic Arts. Home Depot following through. Home Depot. Okay, Home Depot. Higher this morning, Home Depot. ARM Holdings looking for the bounce. ARM Holdings dipping now. ARM Holdings. Could get back to the 9 or 21 day. ARM Holdings. Let's see. Let's take a look at ARM. Okay, big reversal. Probably gets back. We're at 152. Maybe we're looking for buyers to step up. Okay, so that'd be an opportunity. It's a bullish trend. Micron pulling back too. Almost feels like institutions selling into strength, doesn't it? Playing the game, they get you excited. We push prices higher. take some profits off into strength. You see selling the next day. Short term, we've got a call heavy. We have a call heavy expiration on Friday. So dealers will want to suppress prices. Bitcoin, nice move.
And in real inflation-adjusted core capex orders and shipments on a 12-month trailing basis, they're all flat to negative. Now, of course, these are private sector data, and the base book does not interview the government. It's a private sector piece of information based on anecdotes, but it does go back to 1970. But what you asked me what I missed. What I missed was the gargantuan fiscal deficits that are still providing support to the economy. I was not factoring in 10% growth in government spending. I was not factoring in for the second year in a row that the deficit GDP ratio.
What's Nano Nuclear doing? Nano. Yeah, that's off. Nano. Back down to 16. Nano headed back towards support levels. Okay, watching Nano Nuclear. ARM Holdings, looking for this dip to get bought.
The United States continues to run a deficit GDP ratio in excess of 6%. And that, of course, has an influence on GDP because government is part of GDP. So if you're going to ask me, where was I off base? That's where I was off base. I didn't think that we'd be actually running up the fiscal tab as much as we have over the course of
NVIDIA still pulling back. NVIDIA.
And implications, of course, for the election that we're going to have in 3 weeks. David, more next time. Appreciate it as always. Good to talk to you. David Rosenberg. As we go to break, roadmap for the rest of the hour. Boeing taking some big steps now to shore up its balance sheet. We'll get you some details.
Plus, healthcare stocks getting hit this morning on the back of some key earnings. Dow member United Healthcare, of course, key amongst those. What investors need to know.
And an interview you do not want to miss. Bank of America Chairman and CEO Brian Moynihan joins us first on CNBC to talk about the company's latest earnings outlook. Of course, what he sees in the economy and with the consumer as well. Big show still ahead. Squawk on the Street will be right back as the S&P joins the Dow in negative territory.
All right. All right, just watching profit taking, looking for a bounce, Had a nice start to the week. All right, let's take a look at the S&P 500. Remember the levels that we need to stay between on that iron condor. Okay, let's go take a look at that again. Ooh, 58.35, 58.35. All right, let's look at S&P 58.35. Okay, so we're right in the middle of that iron condor. So it's bouncing around. Most likely going to see some buyers here shortly. Okay, stocks, people getting scared early morning. Bitcoin off the highs. Okay. Okay, it's almost an hour into the trading day. It's 10:19 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Looking for a bounce. We are looking for a bounce. Okay. A little shakeout after a nice run up yesterday. We'll keep it on the S&P now. Okay, what's IWM doing? IWM, we'll go take a look at IWM. IWM. Okay, IWM looks pretty good. So while everybody's watching the S&P and the big cap tech names, IWM is getting a nice move here. 3 white soldiers off of a reversal hammer. Okay, so you got a hammer on Thursday, a big bullish Marubozu candle on Friday. Follow through today and yesterday. That creates 3 white soldiers. Very nice reversal pattern. Above 220. Above 220, we are bullish. Okay. So that looks good. Above 220, we're bullish. Look for dips to get bought. IWM.
Off in the street, Boeing's making some big moves to strengthen its financials. Shares are sitting down more than 40% on the year. Phil LeBeau joins us with the latest. Busy morning, Phil.
Busy morning. 2 moves from Boeing, Carl, that we're going to talk about. First of all, the company announcing it has essentially opened a $10 billion credit line set up with 4 banks. They haven't tapped that credit line yet. The other move that Boeing has announced is a $25 billion shelf registration, extends over 3 years. So they've got 3 years to use this as the vehicle and ultimately saying, look, we may raise equity, we may raise debt, but they've got the moves in place now so that when they decide to tap either of these, they'll be able to move as quickly as they deem necessary. So what they want to do here is to have the means in place in order to come up with the money to help out their liquidity. And when you look at their liquidity, they ended the second quarter with $12.6 billion in liquidity. Most believe they're now down closer to $9.5 billion. They don't want to go much below $10 billion. They've always said that's sort of the bottom as far as the threshold, where once they cross that, they're going to have to look at raising capital in some fashion. The debt level at the end of the second quarter was $52.3 billion. And remember, they're just a hair away from being moved down to junk status by all of the credit rating agencies. What happens with the strike? That's the big question here. It's 33 days long, and there's no indication that it's going to end anytime soon. More than a few people have said, look, don't be surprised if this goes into November. And the cost right now is estimated to be about $1 billion per month. That's one estimate that is out there in terms of the impact financially for Boeing. So if you take a look of shares of Boeing, keep in mind that they report their Q3 results next week, and they pre-announced on Friday. So we know the numbers are going to be ugly. There's going to be very few surprises that day. The question becomes, what other greater detail do we have, both in terms of liquidity level as well as debt levels at the end of the third quarter? And again, that's the results that we get next week. Guys, back to you.
Meantime, Phil, any suggestion that the machinists are going to get back to the table with management?
No suggestion of that. And we know that the labor secretary was out in Seattle meeting with both the union as well as the company. Look, everybody believes that Boeing needs to get back to work as quickly as possible. The country, you hear this all the time from people. The country needs Boeing to work. Well, that's fine, but the machinist on the line, their opinion is 30% is not going to cut it. We need more than 30%. And there's no indication, based on their most recent negotiations, that the company is willing to go substantially above that.
Backlog is still there, I guess. I mean, if there's one bullish thing to say or positive thing to say, would that be it?
That is it. That is it. But look, the production level, David, on the flip side, they're not going to hit 38 per month in terms of the 737 MAX. That's the target that was out there at the end of this year. They're not going to get there. So you're not going to get the 38 per month. How long will it take you to get to 38 per month? And by the way, that's the cap that has been set there by the FAA. You want to go above that if you're Boeing? The FAA is going to have to approve that in the future.
I'm just doing the calculations. I mentioned this earlier. So November 1st is the October non-farm payrolls report, which comes right before the Fed meeting the next week. So Phil, I mean, it will impact the data, right? You should see this in the unemployment rate, and maybe we're already seeing it in jobless claims.
Absolutely, it will have an impact. You're looking at about 33,000 striking machinists right now. And as you know, when these unions go on strike, we saw this with the UAW last year, they then are often reported as, no longer part of the payroll. And that impacts the jobs number.
Okay, Apple's starting to bounce, perhaps.
A lot going on, a lot of boiling pots. Watching one of the world's largest manufacturers. Thank you, Phil LeBeau. Meantime, Google, the latest tech name to bet big on nuclear energy. We'll get some details after this. And a quick programming note, we are 3 weeks away from election night. We want to invite you to spend it with us. We're going to be right here at the New York Stock
Okay, let's take a look at NVIDIA. NVIDIA, check the liquidity levels below. Okay, we're looking at levels to buy. Okay, you can see these green shaded areas. This is liquidity below. Okay, we had a nice March higher. Yesterday was a huge day. So some people taking profits off, looking for a bounce. We do have a call heavy expiration on Friday. All right, so taking profits off in the strength, not a bad idea. Bitcoin, nice pop. Bitcoin, a nice pop. Let me see. Let's see. Let me just check here.
Long-term investment where we know that their cash flow, they have a very strong conversion of that free cash flow. They have, judicious use of debt, and they're firing on all cylinders. And we think that while it looks fairly priced right now, we think the long-term trajectory of the multiple expansion here is going to be a phenomenal story, and a needed story. Like every building in New York City is going to need new HVAC, and them as well as 2 or 3 others are the suppliers.
Yeah, fair enough. Right now, it seems like the market's warming up to the idea. Pretty good year behind this. Shifting over, though, to more of a consumer approach. We'll get retail sales later this week. You guys like on the ticker, the shoemaker, and the stock that's done pretty darn well here.
Yeah, this is one of these old-fashioned stories where, I ran in one of the, Central Park, run for charities, and I'm looking at everyone's shoes. Everybody's wearing this shoe now. Even my kids, and my family.
Okay.
This is the old Peter Lynch story. Like,
NVIDIA.
Something's going on.
Okay, we're right down to an area of liquidity. Let me see. That's the 1-hour chart. Let me check out. I want to show you something here on NVIDIA.
One of the lightest shoes in the world.
NVIDIA, let's go to the 1-hour chart. Okay, 1 hour.
Less carbon emissions. It's light on your foot.
Okay, you can see an area of liquidity down below.
Recyclable material, and you can
Let's go to the 4-hour. All right, there's 34 million right here. Looking for prices to get back into this area. See if they buy here or here at 123.
All of your other apps on your phone, your shoes are now a subscription basis, and it's just been doing great. They're moving into apparel as well.
Watching the histogram.
So we think this is a
little profit taking. Okay, let's look at the 4-hour chart. 4-hour chart. Okay, see the Bollinger Bands coming together. That's telling you don't expect a big move, a huge move, but definitely expect consolidation here. We had a breakout above this level. These pivots. Okay, remember that we're call heavy going into Friday, call heavy going into OPEX. So there's a lot of calls on NVIDIA that are getting smashed right now. Okay, the New York FANG index stocks are all doing the same thing. They're all pulling back at the moment, except for Apple. Well, Apple's kind of fading right now.
We think that the multiple the cash flows will grow into that multiple, and so we're confident that the business can operate. And continue to execute. Will the consumer shy away? We don't think so. We think that this only has room to grow. they had 57 views of a launch by a famous movie star who was in a movie about tennis wearing on clouds, and we think that trend is on par now. And you also have to think that they're selling these speakers all over the world, not just in the U.S. So should the U.S. go into recession, the Chinese consumer is still very favorable. The European and other places in the world are still really looking at this as a growth story. So we think the consumer softness will be cyclical, but we think that they're executing very well on their diversification into apparel as well.
Great stuff. Well argued. Thanks, Bruce.
Thanks, Oliver. Good to see you.
Yeah, well, fun walk through the stock picks there for the portfolio manager, capital management.
So it looks like institutions looking for liquidity.
To round out the financial discussion, United Airlines in the mix too, and also a little tech, little chip action.
People selling into weakness. Institutions will be there to pick up shares. If they're interested in NVIDIA, I would imagine they are. NVIDIA has earnings at the end of November. Right now, though, we have a call-heavy OPEX on Friday. And we have a VIX expiration tomorrow.
Plus, get 24/7 live help and access support by phone, email, and in-platform chat.
All right, Micron's starting to see some buyers at the low of the day. Okay, I'm looking for day trades. Okay, all right, we're right down to that area of liquidity, looking for institutions to buy this dip. If they do, we'll see it. And we can join them. Patience, there's no hurry at the moment until we see the selling dissipate.
So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks. Can't be that easy.
Supermicro looks like we could see some buying here. Amazon's still pulling back.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Let's get into some earnings, previewing the next 24 hours of reports. Taking a look at United, ASML, and U.S. Bank. We'll start with the financials. Kevin Green's on the charts, Jenny Horns on the numbers. As we get to the financials, finishing up here, USB's up 1.5% going into the report, fresh one-year high, Jenny. So it seems like the market thinks this is a done deal.
Fresh one-year high, but ball off all-time highs. Not to sort of steal the thunder there, but this is seen as, I think, now a pretty attractive value proposition because it trades, I mean, well below its historical averages. 4 PEs around 12, and it has a pretty solid 4.3% dividend yield. So it has been known, or at least per this very optimistic analyst when I was reading, as the largest regional bank. And of course, it covers so many aspects of regional banks that it's seen as a good bellwether. So over the near term, they've been looking for opportunities to grow their corporate loans and overall achieve high single-digit growth in their payments business, driven by their tech-led initiatives and big corporate partnerships. At the same time, again, I mentioned they have a pretty strong balance sheet. They do continue to see, like an improvement as far as their credit is an A from the S&P, and common equity tier 1 ratio of around 10.3%. That's up 30 bips from the previous quarter. But looking into these third quarter results, delinquency
Okay, looking at this area, liquidity
credit stability, I think that loan growth has also been that sign of
for
economic
buyers.
So, as I said, I do think that this is a good read in regionals. We talked about PNC, Bank of America earlier. Again, this bank, I tend to
Okay, we're still seeing profit taking in phase, big pullback on in phase.
is encouraging
Micron, big pullback.
Yeah, and they're looking really good today.
Micron is $5 off the high of the day. Pre-market.
Regionals up really well. US Bank up, financials up. So Kevin Green, when you look at the chart, how do you take the perspective of nice breakdown?
Pretty timely when you look at comments from Brent over at Spot Gamma this morning. Looking for a correction. We got a VIX expiration tomorrow, call heavy, OPEX on Friday. So I'm just sitting and waiting to see if they buy the dip or not. Okay, no sense putting money to work. Most of these are moving lower at the moment, except for Apple. Apple's managing to hold on.
And when you're looking at the RSI has actually broken to the upside here, kind of breaking that downtrend. And then also MACD, the 12 is crossing above the 26 EMA and is above the 0 line. So this is looking at like a pretty good bullish setup here in the near term if they're able to knock out earnings.
All right, and if they do, I mean, basically the high from before the regional bank crisis is right at that 50. So it's like kind of might be home free on the long-term chart too.
Yeah, definitely. And kind of going back to this chart here, you can see a longer term consolidating channel, that descending channel. We broke above it. Now we're utilizing that area of resistance as now an area of support. And if you kind of go off the highs from July, that's where that megaphone or that, that's megaphone pattern is also taking place here too. So we're not outside of that range yet, but we're very close to starting to see volume really starting to pick up. And that 200-day SMA is going to be your key area of support. And if it is,
Feels like sell programs.
Key area to support. If not, then you can.
Okay, IWM. Let's see what IWM looks like here. IWM.
But for right now, this is bullish. This is
Okay.
It's the hard one to fade.
Okay, even IWM pull back. All right, so we're looking for a dip on IWM to get some attention. Bitcoin pull back. Wow, there's a lot of selling across the board here. Bitcoin had a nice pop. Okay, for those of you who did take profits off into strength, first 15, 20 minutes, first 30 minutes, looking for a dip to buy. All right, starting to see wicks on this candle across the board. Some short covering.
Could drag on its earnings. I find that so bizarre because I don't really know when people aren't traveling because of an election. Maybe that's just me, but that was something that they said, and analysts noted too. So still, investors have plenty of reason to be happy with United's, best-in-class performance this year. We do know that, relatively speaking, compared to like American Airlines, for example, it's down about 10% on the year, dragged down by concerns with the amount of debt that it carries. So it's a aggressive discounting.
Okay. Be nice if every day was an up day, right? Apple doesn't look bad. I mean, when you look at this, Apple looks actually pretty good. Right now, it's just hanging on to the upper Bollinger Band, sitting on top of the upper Bollinger Band. Volume is okay. All right, NVIDIA did pull back. Okay, NVIDIA. Very skewed to the call side. Overcrowded trade, maybe. We're back to 131. Let's see if we hold this breakout level, pull back to breakout. 140 was a major level. 140 on NVIDIA was a major level for resistance. The dealers have an incentive to keep prices below 140. Call wall. So the dealers are out of danger.
in July of this year, came back, pulled that back to around that $36.75 level, and that's when we broke that high.
Okay, remember S&P. Let's not forget S&P, that iron condor. Okay, S&P, nice pullback. We getting close? Yeah, we are right at that level, right? So
And then I also did a Fibonacci retracement from the lows of August to the recent highs that we just had. And you can look at the 38.2%
58.35. 58.35.
If that does occur. If you get back down to the 61.8% retracement sitting at around
Okay, so we're right at that short strike, 58.35 iron condor. Okay, we're right at that level now.
Above the 26, but if that starts to cross, that's probably when you're going to notice that we are probably losing a little bit of momentum. I would probably say more of a pullback to that 20 before trying to really squeeze even higher than where it's at right now.
Okay. So it looks like we're set up.
So just be patient. Just be patient.
But also is moving at light speed. Then be ready to take advantage of pauses in that surge. Seems like a good way to approach it in the earnings. Let's talk.
Okay, we're looking for support right there.
This might be becoming a big story today as chips are under pressure. I mean, it sort of happened in a hurry here, but the company did give a little bit of a soft outlook and guidance. Chip makers are getting hammered, and Nvidia's now down 6%. So that's kind of a little bit more than random sell-off here. What's going on, Jen?
I know. I actually think this is a really interesting company that we don't talk about enough, and it's massive. I mean, its market cap is like $360 billion.
58.35. All right, where are we starting to see a bounce? 58.35. All right, so this might be an area to try some SPY. S&P. S&P. Let me see if I'll do some S&P here. S&P. Okay, for the bounce. S&P for the bounce. 0-day. Okay, S&P for the bounce. Let's see, 50. Here we go. Here we go. Okay, get back here. Get back here. Okay.
So I was familiar with the Netherlands, but pulled back about 22% from highs. I do think that they've been trying to demonstrate the ways they can generate sales aside from selling their multi-million-dollar euro machines, which have around a 30-year-long lifespan. So they've been trying to carve out this niche as the sole supplier of extreme ultraviolet lithography machines needed to make these most advanced.
All right, looking for a bounce. 58.35.
They blame a lot of the sluggishness we've seen in the industry and for Intel really overall, and for the drop in ASML is that they've seen, I mean, they basically tied them all together. They say that this is tied into the Intel narrative, where then you're going to see the impact obviously hit a name like ASML. So Jefferies actually says they believe that thankfully Taiwan Semiconductor will make up in their orders before Intel. They predict that now ASML
Apple still fading. Apple.
Surge beyond into 2025. So there's various trains of thoughts right now. 13 buys, 1 hold.
Okay, Nvidia looking for the bounce. Micron starting to show.
Also, like the massive nature of the stock price. I mean, I just don't pay attention to ASML enough, I think.
Yeah, we're down 13%.
Nvidia shorts covering. Let me see what I got here. Nvidia. I might want to buy some Nvidia on the dip. All right, Nvidia. Okay, I already have enough Nvidia, so I have January calls, 235, 135, 140. Do I want to add to that? Okay, we're not that far away. We were right at 140, so Nvidia. Surprising, even with that little dip on Nvidia, these January 2026, these January 2026 135, 140s, didn't move that much. Yeah, thank you for reminding me. Thank you for reminding me. You're absolutely right. Should wait for those yellow bars to show up on Nvidia. Okay, they should start to show up soon. Okay. Watch for those red bars to turn yellow.
in order for that trend to continue. Now, the RSI actually did just fall off a cliff there, so it is kind of resetting back to the downside. And for MACD, we are seeing that 12 EMA trying to test below the 26 EMA. It's still below the zero line, which is ultimately bearish. This still looks like it's a stock that's in a corrective phase, but if we do see a turnaround, you would like to see a gap fill of that 971 to, let's say, 1060-ish area to the top. But there's some headwinds there in order to get there. You got to break through that 200-day moving average. You also have some, bear flags that are also taking place there. So bearish chart right now. I wouldn't get.
All right, I have NVDX too. All right, so I have NVDX.
Pretty nasty little drop there. Whole market turning around. So that's our chart master. But KG, while I got you, I mean, we talked this morning about how there was some kind of put flows coming into the market. Do you think this is ASML that's bringing the market down right now, or are we just kind of getting lopsided on the momentum, or what happened there?
No, it's the semiconductors. So it's ASML. You also see NVIDIA, I believe, down.
Okay, we're looking for yellow bars. Looking for yellow bars.
As we talked about earlier this morning, though, 5830 is your negative gamma area. So I'm actually expecting maybe some buyers kind of stepping in at these levels. If not, we can have a flush down to 5800. But this is a key area of support that we were highlighting earlier in today's segment.
All right. Well, the first trip down to 5831 caught a little bit of a bit.
Okay, NVIDIA's starting to see a nice bounce underway. Okay, cool. S&P, keep an eye on the S&P. For the bounce, S&P. 5835 is the short strike on that iron condor.
Negative in a hurry there.
The put side. Royal Caribbean continues to move higher. These cruise lines look good. All right, Bitcoin. All right, giving back some of the gains from the morning. Nice run up in the morning. Only giving it back. All right, looking forward to break out above that channel line. Bitcoin. Bitcoin pulling back to the channel line. Okay, watching that right there. Okay, if you look at the weekly time frame, you know what we're looking at for Bitcoin. Bitcoin, we're looking for this channel to break to the upside. Okay, and looking at histogram, TTM histogram turning red to yellow. Micron, we're waiting for these stocks that sold off. Oh, that's a good, you know what? I completely forgot about SMCX, Mondo. Thank you. SMCX, let me take a look at that. SMCX. Okay. 2-time long SMCI. Okay, looking for the bounce there. Don't forget we have a VIX expiration tomorrow and a call heavy. Dealers will have the incentive.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades in full hours of trading.
5,900. 6,000.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Okay, NVIDIA is starting to bounce. All right, yellow bar is starting to show up, NVIDIA. Okay. Okay, so watching SMCX. Thank you for reminding me, Mondo. Okay, watching Bitcoin, S&P cash. S&P cash right in that upper band. S&P cash on the weekly. Okay, we're bouncing 5835.
Welcome back to Morning Trade Live. We've got stocks turning south in the last 30 minutes.
5835, iron condor, short strike. Okay, that was minus 5835 and Let's see.
Ahead of their earnings that seem to be
5830. There was 10,000 of those.
That and there's that Bloomberg report that the Biden administration is considering weighing, some potential limits to AI chip exports to some Middle Eastern countries, and that seems to be weighing on shares as well. If you take a look, Nvidia obviously under pressure today, but chips overall definitely contributing to the weakness. So the weakness in tech and energy not being offset by some of the strength that we're seeing in other areas of the market, like financials, and actually even before we saw the major averages.
Okay, so we're watching that.
We saw Goldman Sachs and Citi move lower, reversing earlier gains despite reporting better than expected earnings and revenue. So that kind of puzzled me at first. I think if you take a look at the year-to-date performance and just this monthly performance for both names.
All right, New York FANG watching the FANG index stocks to turn. How do institutions get shares if they want to buy shares? They let the market sell off like this, create liquidity, taking out stops down below, and they buy. Okay, so we look for that. Okay, IWM looking good on the dip. Nice job there, Angela. IWM. Okay, the dip getting bought. Okay, that looks good.
Later this week, if you take a look, Citizens Financial, Synchrony, First Community Corp, M&T, Ally, all set to release quarterly results this week, and all are higher heading into those reports. KRE is up about 2% right now, a little bit less than that. So seeing some notable strength in that area of the market. Also, we're seeing strength in travel stocks as well, likely because of the huge drop that we're seeing in crude prices. Airlines, cruise lines higher, but not enough to power the overall market higher, and that's due in large part because of weakness in tech, as you said.
Yeah, good roundup there. Good stuff. Regional banks holding strong, and the Russell also green. So it's not like we're falling apart here, Dan. It's actually quite a bit of rotation, could argue. Maybe not with the best catalyst with ASML's negative outlook, but if the money's going to come into regionals, the money's going to go into small caps. It's not the worst thing.
No, and we're trading off of economic.
Okay, Dow, Trump media starting to bounce. Okay, S&P cash.
Because of that, the 2s is not inverted anymore. I thought that was of note. It's been there for a couple of days, and then the 10 to 3 month is still well inverted as well. Something that I've noticed with crude oils is that an economic indicator is down a ton today.
Yeah,
it did mention that.
That's pretty brutal.
Yeah.
Your point about bonds rallying too after Empire State, that's pretty interesting, and we generally see the Russell do better on the days where bonds are rallying. It's yields though have been moving in a hurry to the upside since the Fed cut. What do you think is different than chop up here? Like, what would be a big move for the 10-year in your mind?
A big move would be above 5%.
Wow,
and that's
a long way.
That's a long way away.
What about the other way? Like what, 3.8 if we go back to where we were in late September?
Okay, getting a nice bounce right now. Look for a bounce. Look for a bounce.
Uncertainty or the Fed taking the foot off the gas, or putting the foot back on the gas, putting more cuts in. They're talking about 1.5 points worth of dot plots cuts between now and the next year and a half. I think that's significant. And they're only pricing in 225 basis point cuts between now and the end of the year. Maybe they should be going more faster.
Yeah. And the short end's really been moving around a lot. And with the pricing out of another 50 basis point cut, market moving away from that, that's where you've gotten the inversion of the curve again.
Yeah, and I disagree with that. I think they should go 50 at this next meeting, and then talk about what they're going to do. Right?
Yeah.
That's just my opinion.
Yeah, fair enough. As far as the news flow goes, you got Fed speakers later on today, but retail sales kind of next up. Tomorrow, we don't have much at all at Caroline, so I do kind of wonder if today's session might be an important one.
Okay, looks good.
Somewhat here for the next 48 hours without much coming down the pike.
Yeah, I think it's going to be very kind of story specific, and we're seeing that play out. Kind of the winners and the losers kind of cancel each other out, even in terms of some of the other big earnings reports that we've been seeing. I mentioned, Goldman and Citi.
All right, we're starting to create some fair value gaps now.
Walgreens is the best performer on the S&P 500 after earnings, but United Health is offsetting that with a steep loss after
it reported results. Obviously, it's weighing on the Dow as well. So I think it's going to be very, kind of story specific. We will hear from more Fed speakers. So far, anything that we've heard does not point to Dan's 50 basis point cut. It seems like that's very much off the table right now, especially with some of the latest kind of slow and steady approach to interest rates based on the data that we've been seeing. But retail sales should be a good gauge of overall consumer strength. I, of course, always like to say that I think of earnings season as a good gauge of overall strength, and we will hear from companies like Discover and like American Express later this week as well, which should give us kind of some better insight into how the consumer is faring. But overall, based on what we've been hearing from the big banks, they're faring pretty well.
Discover and Amex should be interesting. To the point of the Fed speakers, Dan, any potential for volatility?
Okay, nice bounce so far. Okay, we got yellow histogram bars, NVIDIA. Nice reversal for those of you who took
Thanks, Dan. Thanks, Caroline. That's it for morning trading.
the plunge.
Trading 360 with Nicole Petalides is up next. Have a great day.
Okay, the cruise line's looking very strong. I see you guys and ladies posting. Carnival breaking out on the daily, and oh wow, the weekly looks good for 31.52. Here's Carnival. Thank you, Jason. Susie posting Royal Caribbean. I know Acceleration likes Royal Caribbean, so do I. Royal Caribbean just going. Looks good. Carnival and Norwegian. Been on all three cruise lines. I like Royal Caribbean the best. Micron with a nice bounce. ARM Holdings, the dip getting bought. Okay, ARM. Red histogram bars turning yellow. That's what we want to see.
My job as a trader is to just make money. With a history and a geography.
Fun on the move. Okay. I know you mentioned that pre-market.
A lot of the best and brightest students, because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise,
Okay, IWM. Okay, bear flags. Just keep in mind, these are bear flags. So
Look at your whole brain. You don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out.
I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
okay, watching the S&P. Still bear flags until they're not. Okay.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are on the
Okay, fair value gap just got filled right there, looks like, or partially filled. Got rejected.
AI feels controversial and it's going crazy right now.
It is going crazy.
But what does all this mean for the market?
As long as people want to buy it, the price can go up. Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
All right, so semiconductors having weakness on ASML news.
morning. We are 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. So glad you're with us. We hit some records yesterday. We're seeing some selling today and a slew of earnings that we have to dive into this morning. Healthcare, bank stocks, all on the move. We have you covered. In the meantime, our 360 Spotlight looks at the latest headlines with Boeing as it files to raise.
Okay, we're not pushing. Okay, looks like a bear flag on the S&P. We have, we need to bounce here. If we don't, we could get ugly. We want to stay above 5,800. 5,835 is a short strikes for these iron condors.
But the S&P is down a third of 1%, 58.38. The Nasdaq down 1 full percentage point, losing 209 points. Dow is down a third of 1%.
Tesla bouncing a bit more.
Oil 70.04 the barrel, down 379 today.
Not out of the woods yet.
More about the Israel-Iran controversy and that Israel is not planning to hit Iran oil, and that gave a little relief to oil, and as such you see it down 375. Gold on the other hand up about $10. The VIX sitting right at
Okay, let's see.
off that 103 level, 102.93, and Bitcoin 65,530 down 1%. So that's the big
Okay.
picture here. I'm joined by Jenny Horn, markets correspondent here on Schwab Network. We have a lot of names to cover, healthcare names that we are watching as well. Walgreens is a name.
All right, so they got earnings leaking.
Nicole, like the rally that just keeps continuing. I mean, I looked at shares this morning, which were up 6.8%, so not too bad. But now, I mean, just ripping on the session after
ASML is a culprit right now.
meet the expectations for their earnings. This company needed this lift, frankly. So we did see fiscal fourth quarter sales and profit that beat expectations, but overall, I think what the street is really focusing on today is the fact that they said they will close around 1,200 stores over the next 3 years, which includes 500 in just fiscal 2025 alone. The company said those closures will be immediately accretive to its adjusted earnings and its cash flow. So they do have around 8,700 locations in the U.S., a quarter of which they claim are unprofitable.
Okay, Supermicro looking for that to turn up.
They will give them a healthier store base and will enable them to respond to shifts in consumer behaviors and buying preferences. Their CEO did say that overall, Walgreens does aim to employ the majority of the workforce affected by the closures, though it's unclear how
Okay.
many employees stand to lose their jobs. So this definitely comes at the cost of course,
Still too early to call this one.
already surpassed their target of cutting around
S&P diddling with this 5835 short strike. 10,880 of those iron condor puts and calls at this level. 5885 overhead.
And interesting enough, this name also beat its earnings. So what we did see is they reported results that were able to succeed.
ARM Holdings trying to turn.
Obviously, shares still tanking on the day, the third worst performer in the S&P 500. We did see that their spending on medical care for members of their insurance plans was higher than expected. They paid out around 85.2% of their medical premiums to cover medical costs, which is a pretty closely watched metric called the medical loss ratio or the medical care ratio. Analysts have been anticipating a medical care ratio of around 84.4%. Last quarter is around 82.3%. But this higher than expected medical spending will not ease any concerns about the future of overall their Medicare Advantage business, which of course has really been a huge profit turner for them, but it's turned sour this year. So I think, again, that you're seeing more and more of the same, the opposite of what we're seeing with Walgreens, which laid out a pretty significant turnaround plan. And these higher medical spending costs have continued to overhang UnitedHealth stock, which is now, I mean, bringing down the overall sector. So I think that there was no change in any of the recent trends, is why we're continuing to see, I mean, a pretty massive move to the downside. But frankly, this name also has been underperforming, so it wasn't like the bar was set.
Supermicro with the bounce.
All right, Jenny Horn, thank you for a look at both of those names this morning. We appreciate it, looking at Walgreens, Bruce Alliance, and UnitedHealth. Thank you. Let's get some insights in the news shaping the market.
ASML down quite a bit. All right, so interesting enough, the NASDAQ 100 is 60% green 40% red. Is that right? Or no? It's the other way around. 50-50? It's about 50-50. All right. So I haven't gotten used to TOS, what I'm looking at compared. I could tell just by one look in Schwab earlier, Street Smart Edge. But let me just go check this exact. Okay. Index, NASDAQ 100. Yeah, it's like 50-50. There's just a couple more red stocks than green, but we're about 50-50 right now.
The jobs do look fairly stable, and I think that's something that can at least provide a little bit of a tailwind going forward.
Okay, that being
All right, watching those TTM bars down there.
or maybe you're not. You're watching inflation very closely. This is the Fed has a couple of meetings. What do you think the Fed should be doing in the next 2 meetings?
Well, we're still keeping an eye on inflation, just like the central bankers are. But really, a lot of what the Fed's been doing is they've pivoted from focusing. They have that dual mandate, and they've pivoted their focus from primarily looking at the CPI numbers to now looking at the job numbers. To some extent, given the fact that
Bitcoin making lows now. Bitcoin reversing. Okay, we still got rejected once again at that upper trend line. Okay, I can't help but tell you the feeling of taking profits off in the strength increasingly making me increasingly anxious. We have a VIX expiration tomorrow, and we have a call heavy OPEX on Friday. So to me, what I usually do is start taking profits off in the strength. We've been doing that with short-term swings over the last few weeks into this week. When we went into the end of September, we started to see reasons to think that we could see some weakness. Let's take a look at the S&P here. And then the markets just took off to the upside. Okay, so end of September felt like we were going to dip. We did into the first week of October, but we held on pretty strong. Now we're pushing higher. 5,900, 6,000, that's major levels overhead resistance. So with OPEX on Friday, many are anticipating a 3 to 5% pullback. You can see major support right along this area, right around the 50-day, 5650, 5600. All right, let's go look here. Okay. Combo strikes. Let me take a look at this real quick. Combo strikes. 58.50. All right, so we want to definitely stay above 58.50. Right now we're below it, 58.40. Okay, what I'm looking at right here is where does negative gamma pick up? Okay, below 58.40. So we're sitting right on top of that right now, 58.38. Right above this negative gamma level. 58.36 is 58.30. It's right in this area where we flip. Okay. And we get negative. So we want to stay above this level.
We do feel fairly good about their prospects going forward.
CMO has an outperform on Constellation Brands. They did bring the
Okay, got to stay above this level.
From $315 to still about $300.
Okay, NVIDIA looking like a bear flag, starting to roll. Looks like it's starting to roll over again. Apple's still fading. NVIDIA looks like a bear flag on NVIDIA, so be careful. Be careful.
It's a stock that it's taken a dip of late. Right now, you're getting that stock at about 16 times earnings, whereas its beverage peers.
If we get a bounce here, I'd be taking some risk off the table.
They've been a great dividend raiser, and what's really relevant is they've been taking market share. Specifically, As you guys are showing on the screen, the Modelo.
All right. ASML off quite a bit. ASML.
Sales over the last several years has taken over the #1 spot in beer sales in the United States. So you like finding a name that's been gaining share, and they've also been becoming more shareholder friendly. They kind of converged. They had a dual share class structure that they've actually kind of cleaned up to more of a single share.
Trump Media.
So they've also been making
Trump Media, watching that one, squeezing at the highs near 32.
I know you've been working on trying to find value, and that's why you're stepping away from.
Okay, ARM looks like it wants to push. Apple, NVIDIA. Watch these stocks starting to show signs of a potential higher low.
Utilities, industrials, and healthcare. Are you finding value there? Do you like tech, or you just sort of stay away from tech or energy or some of the ones people have been focusing on more? Are you really like searching for value here?
Okay, a lot of histogram bars are yellow. Okay, if you look at NVIDIA, we're yellow at the moment, looking for a higher low and a higher high. Do shorts start covering? Probably. Let's see. NVIDIA watching. Looking for Bitcoin to bounce as well. Tesla. Okay, let me take a look at the S&P 500. All right, we're exactly even right now. Number of stocks advancing versus declining, 50-50. 50-50. Let's take a look at the small caps, Russell 2000. Russell 2000 survey says 1,077 stocks are higher, 580 are declining and lower. So IWM has definitely got a bid today. S&P 500. S&P 500, 361 stocks are advancing. 140 are declining. So the bulls still have it. Bulls still have it. Russell 2000. Russell 2000.
Burns McKinney, great to see you, Managing Director, Senior Portfolio Manager, and FJ Investment Group. Thank you for being with us. Appreciate it. Plenty more to come here on Trading 360. Up next, it's the big three.
And let's look at the NASDAQ 100. NASDAQ 100. 50-50.
Salesforce, Alphabet, and Spotify next here on Trading 360 on Schwab Network.
Okay. Okay, there goes Supermicro. Supermicro zipping. There goes Supermicro. Okay, let's get NVIDIA to do that. Okay, so the shorts start covering. Shorts covering. All right, shorts are starting to cover. Okay. Okay, so we're starting to see a nice follow through. If you bought the dip, some of you bought the dip. Okay, there goes Super Micro. Super Micro on the move, looking good. All right, shorts covering, pretty obvious now. Okay, nanonuclear down to 16. I'm looking to buy some nanonuclear. I won't do it just yet. I'm looking to take risk off the table. So this bounce, if we do manage to see some green, I'm going to be taking some profits off the table.
We're taking a look here at the semiconductor space, in particular ASML. It released its numbers. They are breaking now as we speak, but in the meantime, the stock is down about 13.5%. I will say that third quarter bookings were missing the mark on the estimates. The ASML cut its 2025 guidance on net sales. It cut its 2025 guidance on gross margin. So slower recovery overall for this microchip processor. You could see that the stock has taken a hit. Was trading around 874 overnight. It is now at 735 at the lowest point. It's coming back, but it is at 755 as we speak here. So down about 13.5%. Later in the show, we're going to be talking about a lot of these names, so this will certainly give us the opportunity to revisit this. In the meantime, we also saw other names go down along with it. Looking at an intraday, for example, of NVIDIA, and you'll see that name go from basically 139 and change down to 128.74. So you are seeing a big sell-off, though that too is recovering off the lows, but down about 4%.
Okay, Super Micro, looking for NVIDIA to follow through more. All right, so you can see how TTM is helping you. At the moment, ARM Holdings turning the corner. I will be taking some risk off.
In the meantime, back to the big three. Three stocks, three charts, three trades. Kevin Green will take us through the charts. Here to take us through the trades, Jessica Inskip, Director of Investor Research at StockBrokers.com. Thank you so much for being with us. Jessica, I'll start with just a big picture on how you're feeling on the market between now and the end of the year.
Absolutely. We're heating up in earnings season, and I think tech earnings is actually more important than ever. This year, really at the beginning, the first half was all about broadening the other.
Okay, healthcare has gotten a nice bounce. I see some of you talking some of the pharmaceuticals like Johnson & Johnson. Thank you, David. Johnson & Johnson. All right, so fading from the high of the day at the moment.
Because we see a growth slowdown with the Magnificent Seven and with the other 493 securities from an earnings perspective. So I'm really paying attention to forward-looking guidance. That is my main macro headwind or key insight to growth in a rally. So really a lot to pay attention to.
Yeah, and they gave a warning, right? A slow recovery, the gross margin numbers, the net sales numbers. So that guidance was a little weaker than what was expected, taking down NVIDIA. And before I get to Salesforce, do you view this? I know sometimes you follow some of these names. You certainly don't have to answer. But would you say NVIDIA might be a buying opportunity on a pullback where it was right near the highs of 140 and pulls back today? Or you wait and see, Jessica?
It certainly can. I mean, we're coming up to key resistance for NVIDIA, so that's something that I'm watching. But ASML is a part of that Blackwell chip story. But Jensen Huang already came out on podcast and has a big smile everywhere, indicating that there is still a lot of demand. And even with the fiasco that's going on with Tesla, there is usage from the Twitter X story now.
Okay, got a lot of work to do.
Those chips. So I'm still looking for earnings follow through. I think NVIDIA is absolutely a pullback. Pullback is a buying opportunity. And remember, they are much later on the earnings cycle.
All right. Thanks for going through that breaking news with us. Kevin's standing by.
Okay.
We'll start off with Salesforce. I mean, you've been following Salesforce around 290. Tell me a little bit about where you think this is headed and why.
Yeah, absolutely. So it's still AI. All my themes today are AI. CRM or Salesforce actually popped up on a technical scan. I pulled the 13 weekly moving average, crossing over the 26 moving average. That represents 1 quarter worth of prices and then 2 quarters worth of prices. I want to see prices improve, going along with even the macro view. So there has been this theme of we've had a deacceleration of software spending, but it's starting to slowly improve. So it's gonna be interesting to see how the rest of these forward-looking earnings come out. But if there is still new AI product cycles, if there is increasing or the possibility of multiple expansion, and if there is benefits from that prospects of lower interest rates for these capital-intensive companies, because I'm waiting on this CapEx cycle to start to accelerate because AI is still a theme. CRM pulling up on that technical view.
Okay, ARM looking good. Okay, so far so good. Let's let me put okay, let me put Apple there. Apple still flagging Apple.
Three to 4 months here. So I can understand where Jessica is getting some of this bullish optimism. Now we are actually testing a key gap that we saw back in around April.
Tesla bouncing back towards 220, just below 220 right now. Okay, DJT got back to PMZ.
So even if we do have a little bit of a pullback, maybe testing that upper end of that channel or even testing the 200-day moving average would not be bearish by any stretch of the imagination. It actually might encourage bulls to try to get into this name and then hopefully trying to close that gap to the upside. Once again, 290 being that resistance level, which we're testing right now. Now the RSI is a little bit hinging to the downside in a bearish formation, but nothing.
Okay, above now.
For MACD right now. The 12 EMA is starting to flatten out, maybe going to cross below the 26 EMA.
Okay, DJT is popping right now. Watch DJT. Trump Media on the move. Okay. Okay, watch Nano Nuclear. Okay, I might buy some down here. Let's see. Do I want to do that? Let me just take a look at the Nano Nuclear. All right, starting to show signs. Okay, TTM, big dip and red to yellow histogram bars on Nano Nuclear. Okay. Okay, it's back to the 21-day. Do we bounce here? Looks like buyers are starting to show up. Stochastics are. I might wait. I might wait a little while for this one. Okay, we're back to the 20 EMA on the daily, that dotted red line. This is a 60-minute chart. Okay, this might get some activity. You can see the interest is starting to wane as volume continues to taper off on Nano Nuclear. Okay, so Nano Nuclear, watch that one. NVIDIA, looking for that bounce in NVIDIA.
I think that's really, really going to attribute to positive performance. So in addition to that, when we're going through their earnings call, I want to see increased search strength through AI. How is that following through? Is there stronger search performance?
CrowdStrike, that was a pretty nice dip on CrowdStrike. If I wasn't de-risking, I'd be interested. CrowdStrike, a nice dip to the 200-day.
To the future. How are they utilizing AI? How is that translating to revenue and subsequently earnings?
Fascinating to hear more about how you're actually using these tools in your own daily life, right? With your podcast, you mentioned Notebook LM and how it translates and helps you to do that presentation even better. I mean, it's certainly
Supermicro. Okay, Supermicro.
Right, overall. Google 165, Alphabet, I should say. Kevin Green, please take a look at the charts.
Yeah, let me see if I can give Jessica maybe a little bit more of a bullish tone when it comes to the technicals, because I actually like this setup. If you're looking at a 1-year daily time frame, we have this expanding megaphone pattern here. You have the lows, which is going to create that support line, and then you have the highs, basically that trend line for the highs, and it's expanding. That also indicates that we will see and have seen volatility within this name. Now, we have seen a little bit of a pullback since the last earnings announcement. There's a gap to be filled here. But the reason why I say this is actually a really bullish setup is because we actually broke below the 200-day.
Okay, Trump Media, trying to get back above PMZ, watching that one. NVIDIA.
We have
I don't trust it. It's a bear flag, could roll over very easily. It just feels like institutions are selling, waiting for these bounces to sell a little bit more. They don't want to just sell into the abyss. TTM has changed direction. It doesn't mean it can't go back to red again on another wave lower. We've seen that before. We got a VIX expiration tomorrow. I know I keep repeating myself, but that call heavy UpX on Friday has me thinking, all right, let's take a little profits off in the strength. I'm looking for more of a bounce on NVIDIA so we can take some off. What's Home Depot doing? Home Depot, nice bounce this morning. Okay, Home Depot. I had a limit order on some Home Depot calls I got taken out on that, a sell order. Okay, so we held the 9 EMA. I thought about selling it yesterday. I said, you know what? Let me just put a limit order in. If it does pop at the open, which it did, I'll get taken out in the first 15 or 20 minutes. That's exactly what happened. Ran up. Now it's making higher highs and higher lows. Home Depot just feels like it's going to keep going. I just want to de-risk going into Friday. Reduce my exposure, fewer positions. I'm still bullish. Don't get me wrong. I'm looking to buy some dips into lunch, 1 o'clock. Okay, I need to take a couple of minute break here. Let's see.
We see streaming come across, and we even think about the podcast world. That's
Tesla
blogs that we utilize. And
turning. Okay, Tesla.
Short form content, and even the utilization and wars with TikTok and Reels and that type of growth. Spotify has a hand in that. I don't know if you've noticed it or you utilize Premium, but they're turning everything into small video snippets, even on the podcast world, where it looks like, to me, it's turning itself into a social media platform, even with comments going back and forth. So that type of innovative podcast capabilities, even across on music, sets it up for price increases and subscription tiers. So you're right, revenue growth, improved profit margins, positive free cash flow growth. It's amazing to see, but they're discussing introducing this super premium tier, which could cost more than about $5 in its current premium. So there's an estimate from Universal Music Group that 20% of US subscribers would be willing to upgrade for that. So that's going to translate positively over to earnings. So I really think this is a new innovation that we haven't been talking about much yet, that we certainly will see a trend progress.
Okay. And you noted the change in management as well. Let's take a look.
All right.
Yeah, bullish formation that we've seen for the stock over the last year. Now, we could say that maybe it's decelerating when it comes to stock appreciation, but it has been able to clearly try to break out of this trend line, this intermediate trend line that we've seen from the highs here, breaking higher. And now we're in a flag formation. I think the key moving average for this stock is the 50-day moving average. I have it circled. It's in yellow there. We do see the stock tend to come back, test it, and then bounce back even higher. And in this bull flag formation here, I would not be surprised if we actually do see.
Okay, CrowdStrike turning up. Micron, higher highs, higher lows. Watching for these. Okay, watch NVIDIA. Okay, still looks like a bear flag.
And I think that trend will probably continue, but it is a hard stock to be able to fade here, Nicole. It's very far away from the 200-day.
We have earnings for NVIDIA November 27th, so more than a month away. 140 is a major strike. 140 is a major strike overhead. That's where dealers have the incentive to keep prices below 140 on NVIDIA. You should be aware of that. If you check Money Magic's levels, that's the call wall, upper call wall at 140. Okay, 140 is the upper call wall. So looking for prices to get back up in that direction. So having some patience here. We're $7 off of the high. Looking for shorts to cover more. S&P. What's S&P doing? S&P. Okay, looking for S&P to continue. to hold above this 58.35 short strike on that iron condor. Okay, S&P. I'm going to take a couple of minute break here, and I'll be right back.
Deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Fedelides, live on the floor of the New York Stock Exchange. Glad you're with us. Time to spotlight Boeing. Company announcing today it was filing to raise up to $25 billion in mixed securities offering. It needs cash, right? Ben Socanos is with us, Aerospace Director, S&P Global Ratings. Thank you so much for being with us. I don't think this comes as a surprise because we knew that they had been trying to do this, but it faces a lot of headwinds, I guess you could say. So what are some of your thoughts on Boeing today?
Yeah, well, like you said, I think this was largely expected. It's sort of an administrative step, preliminary to raising capital. I think it's interesting that it's sort of a kitchen sink filing, so they really have left themselves quite a bit of options in terms of the type of capital that they raise. But I think like you said, it was widely anticipated, and I think a necessary step.
The stock's down 42% this year. Are there opportunities? Are you still, because I know you're watching the balance sheet, right? You look at the credit for this company very closely. Are you starting to feel a little better about this at all? And if so, what would be the actual talking points or things that you're watching that makes you feel a little better? Or is it just a lot of worry?
Well, the strike is still going on. I'd say that's our top concern. So resolving the strike, I think, is the biggest obstacle to recovery. Raising capital is another piece of the situation. I think we'll be looking for earnings to be released next Wednesday. They put out a preliminary earnings statement last week, but looking to get some more from management. It'll be the CEO's first opportunity to speak to investors. But I think there's still quite a bit of work to do.
Right. So we'll hear more about earnings next week. Also on layoffs, right? Laying off some workers, that too, trying to control costs. I guess you could say you have a BBB credit rating. Is that in jeopardy, or does that seem pretty solid where we are now?
Right. We're at a BBB minus with a credit watch negative. So that's really indicating that there is considerable downward pressure on the rating, and we are looking for progress on those points on the strike and on capital in order to resolve that credit watch.
Were you surprised to see they were raising up to $25 billion in debt or equity over the next 3 years? Did that seem like the right number to you?
Yeah, it seems like it's a big number, and I think that it's more of a of leaving themselves flexibility. I would be very surprised if they actually raise anything near that amount, but I think it's I think they're taking the steps in order to leave themselves some options.
I mean, you feel that this actually saved them from sliding to junk, right? Doing this, is that right?
Yeah, that is. It's one of the steps that we're looking for in order to preserve the current rating, which, as you point out, is one notch above high yield.
Yeah, and look, the big picture. You noted the strike. What kind of recovery we may see after that? How do you think this? I mean, a lot of folks are interpreting what happens to Boeing and what happens to our U.S. economy. Can you make the correlation, or what you're thinking, big picture, our economy depending to a certain extent on Boeing?
Yeah, it's I think that's a good point. That Boeing has been pretty closely identified with the American economy for a long time. Certainly, it produces a lot of products which we rely on. I think this situation is a little different from some other times when companies have been under pressure. I think generally this is not a reflection of the economy as a whole. Boeing has plenty of demand. They have customers who are really eager to get new planes from them. It's the problem is that they've just been for
Okay, S&P, let's do this.
have not been able to deliver this.
Supermicro starting to move. Supermicro.
And the layoffs of the 17,000 that I mentioned, does that seem like the right number to you?
Yeah, I was
Approaching the 12 o'clock hour.
last week. I think that the new CEO has an opportunity to kind of to reset. So I think this is probably
Okay, all the chips are recovering for the most part, except for ASML.
Overall staffing level relative to production, there probably is some room, but I think ultimately they need to resolve the strike and start building planes again in order for us to feel like they're on the right track.
Yeah, Boeing is really screwing up.
Billion certainly provides somewhat of a cushion.
There was a guy arguing
So it's certainly being viewed as a positive.
for the unions getting what they're asking for, because if Boeing doesn't do something soon, they run the risk of having to file for bankruptcy. They don't have the funding to keep doing this. They need to get the production line going. The Emirates have something like half of the 777s or whatever they are, new planes that have been promised. Emirates have like half of them. So Boeing really needs to get their act together soon.
But to your point, I think while they're not making planes, there's not a lot of discussion on that.
Right. And just quickly,
Apple turning back up.
Boeing versus Airbus, where do we stand in something like that in the global battle? Because everybody always likes to cheer for Boeing. They think about national security. It's our U.S. company. Where do we stand in the competitive space against Airbus?
Well, I think Airbus is certainly interested in taking advantage of their competitors' problems and is doing everything they can to pick up market share. Boeing has lost a few points.
Okay, and S&P coming back now. Supermicro.
Building planes again. I think they have every opportunity to protect that market share.
Meta trying to turn off the low. Meta. Nvidia looking a little iffy right now. Nvidia.
some more. We'll be right back.
Okay, looking for Trump Media to get above PMZ. The top of PMZ is right around 33.29. PMZ is just the pre-market zone. Apple, looking pretty strong. Apple.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime.
Apple's just too strong. Apple is too strong above 235 call wall. Watching that one.
Welcome back to Trading 360. I'm Nicole Fedelides, live on the floor of the New York Stock Exchange. We're watching all the bank earnings that really started last Friday and seeing the XLF, that sector overall, hitting some new highs. We've been getting a lot of good news. Want to get more details here. Caroline Woods is with us, senior markets correspondent here on Schwab Network, taking a look at Goldman Sachs. So the stock is pulling back a little bit, but for the most part, what we've been hearing from these companies is mostly good news.
Good news, yet we're not necessarily seeing that reflected in share prices today. Goldman actually did turn positive again just a bit ago, but back in negative territory. So investors clearly deciding which way to go with this. It was a beat on both the top and bottom line. Earnings rose 45% from the prior year, $8.40 per share. The expectation was for more like $6.89. Revenue climbed 7% to $12.7 billion. The expectation was for $11.8 billion. CEO David Solomon cited an improving operating environment, very similar to what we heard from Citi as well. Citi's Jane Fraser. Equities trading and investment banking operations were both bright spots. Equities trading saw an 18% revenue increase to about $3.5 billion. That was well ahead of estimates, which were actually below $3 billion. Saw strong results in both derivatives and cash trading. Fixed income revenue did slip about 12% from the year earlier, but still managed to come in ahead of estimates. Investment banking rose 20% though to $1.87 billion, also ahead of estimates. And then asset and wealth management revenue rose 16%. That number of $3.75 billion also came in ahead of what Wall Street was expecting. So we're seeing Goldman shares down a little less than 1% right now, but I think it's important to put it into perspective because shares are still up almost 5% so far this month and up more than 30%, about 34% year to date. So outperforming the broader market and also outperforming the overall financial sector. So it's already seeing quite a bit of strength, just not seeing it today.
And we've heard about investment banking from multiple banks. That certainly was a bright spot overall. Turning our attention over to Citi, you mentioned Jane Fraser, and she gave some positive comments about the world economy and resiliency and things like that. Some of your thoughts on the Citi numbers?
Jane Fraser said, this quarter contains multiple proof points that we are moving in the right direction and that our strategy is gaining traction, including positive operating leverage for each of our businesses, share gains, and fee growth. That's the CEO of Citi. There's also a beat on both the top and bottom line for Citi. However, Citi did set aside more money to offset potential loan losses, reported a net build of $315 million in Citi's allowance for credit losses. So that could be what's weighing on shares today. You can take a look. Citi share is down about 3%. But another one, still up about 2% month to date, up about 24% year to date. So still has seen this really impressive run up. Earnings per share came in at $1.51. The estimate was for $1.34. Revenue rose about 1% to $20.32 billion, also ahead of estimates. The banking division revenue rose 18% with a 31% gain in investment banking. Wealth rose 9%. Equity markets revenue rose 32%. Fixed income revenue, like Goldman Sachs, actually declined. The decline at Citi was about 6%. And, so we're seeing shares under pressure today, but has been a big winner this year.
All right. Thank you for that. Caroline Woods, good look at some of those bank earnings. We'll continue to get a slew of earnings throughout this week, folks. So keep it right here. Thank you, Caroline. In the meantime, we turn our attention over to the disruptors, and George Sillis is here, senior markets correspondent, taking a look at Synopsys, a positive call from Berenberg today. But this chart looks pretty choppy of late since the high that it hit some time ago, back in February, March time. Tell me a little bit about the note and what you're watching.
Yeah, Nicole, I was actually going to mention, if you look at the last 6 months or so, Synopsys, along with Cadence Designs, these are two of the largest electronic design automation software and semiconductor solutions companies globally. They've actually been underperforming the rest of the market as well as the rest of the semiconductor space. And I think, it's starting to look maybe compelling from a valuation standpoint, but these companies are actually very well versed globally in terms of chipset designs, integrating circuits together and components like high bandwidth memory, networks, if you will, cloud and data centers and AI. These companies essentially design systems and semiconductor solutions for companies globally, including companies like ASML, which is down about 15%, and it's causing some problems in the semiconductor space, and it's actually spilling over to the rest of the market. But Taiwan Semiconductors, NVIDIA, AMD, Intel all use Synopsys' technologies. And effectively, as the stock has been coming down over the past 6 months, the earnings estimates seem to have stabilized or starting to rise going forward into next year. And I think this is what Berenberg, who today actually initiated coverage of the buy rating. The analyst has a $660 price target, so that would put it at new 52-week highs if it does hit that level. But these are, again, 12-month targets. But essentially, what they're looking at is a company that's very diverse in its innovation, and it doesn't essentially have the cyclicality exposure that actually the hardware or semiconductors do have. If you look at companies like Qualcomm, AMD, even Intel, these companies are facing challenges both from a mobile chipset standpoint and even a CPU standpoint. We know that NVIDIA seems to be in an uptrend when it comes to their GPU technology cycles, but nonetheless, they're actually looking at stabilized earnings and revenues going forward.
Okay, so thank you for all of that. As you noted, we continue to follow the ASML news, which is dragging the whole group down without a doubt. That being said, you have an example trade for us. It's at 534 today. We'd like to hear more about your example trade, please, George.
Yeah. So looking at the overall trend, Nicole, one of the things you have to keep in mind is it's in a 3 to 4 month downtrend. It's still not breached its 200 period moving average. So I suggest that's probably going to be an area of resistance that the stock will have trouble getting through. So I'm not going to put on an aggressively bullish trade. I think valuation is coming in the line, but there could be certainly some additional pullback. So what I'm going to do is I'm going to go out to November with 31 days. I'm going to sell a put vertical. It's a neutral bullish trade, but allows us flexibility just in case the stock moves lower. So I'm going to sell the $510 put, and then I'm going to buy the $490 put below that. So it's a $20 wide spread. And altogether, you could earn about $5 a share in credit or $500 a contract. So the whole objective is for the stock to stay where it's at or go higher, but it could also drift lower by about 5%. Because your break even on this trade is 505. So you're earning $5, but your risk is $15. It's a 33% return on risk, but your risk is below 495, where you would lose $15. So if you think it's going to hold the 510 area between now and expiration of 31 days, you could certainly consider this trade.
All right, back down to 58.35. Looking for a bounce.
Look at Synopsys today, SNPS, which is to the downside over 2%. Thank you. Good to see you. The disruptors every day here on the show.
Apple still showing strength.
We'll dive into the semiconductor space. Of course, we had the breaking news this morning with ASML and the outlook.
Bitcoin starting to bounce.
Taking down other names like NVIDIA. But names in this group that still hold the leadership that could be the winners? What do we need to know? As well as the curbs that continue to be part of the conversation. We'll be right back.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time to focus on our 360 round, all about semiconductors. A lot of news breaking today. We had ASML's numbers released. Those were leaked. It brought down some of the other names, such as NVIDIA, and also the ongoing conversation about curbs, U.S. export curbs, and how much of that provides a headwind to some of these names as well. Logan Gilland is with us, analyst at Jewel Financial, and Ryan Shaw is with us, Futurum's president at Signal 65. Thank you both for being with us. Logan, how big of a story is the export restrictions that are proposed by the United States? We've already seen some put into place for the smartest chips. We certainly don't want to give that access to China and such. Where do we stand now on this, and how big of a deal is it?
Yeah, I mean, I think it plays into it. I don't think it's necessarily a bigger deal. Obviously, the markets were down slightly. NVIDIA and AMD and those type of names were down slightly on that news this morning. But then as soon as that ASML news came out, that really influenced the stock prices. And now I think NVIDIA is down over 5% today. So that's more of the bigger news, kind of what's going on the consumer side. I think it is a factor. Obviously, we have a presidential election 3 weeks from today, so that might influence as well who the winner of that election is and some of the restrictions that might go into place on tariffs or overseas or whatever it might be. I do think it's a factor, but I don't think necessarily it's the biggest one right now. I think more so the demand and ASML coming out and saying, hey, it looks like the consumer is getting a little bit more hesitant. These businesses that have been buying chips left and right are slowing down a little bit, and they're trying to really kind of suss out and figure out how are we going to actually make money on this AI.
I was sitting right on top of this short strike.
It's more the more traditional side of their business, not necessarily the AI side of the business.
Briefly went through it earlier
It's interesting to see
and bounced right around 1040. We're starting to do it again.
And I do think it's the big concern that we've been expecting such high growth, and what could happen if the growth does not continue.
So I understand that you're saying the big picture here is the slide, for example, in ASML earnings.
NVIDIA is still trying to turn.
The group. I do want to stay, and I want to look at specific.
Apple looking strong.
But I do just want to stay on the topic for one brief moment. The curbs, the tariffs. Where do you think that fits into the story, Ryan? Does it worry you, or does it seem right on point?
I don't think this is unexpected. I think we've gone through it a few times. I also don't think, just kind of fundamentally, that those types of kind of export restrictions really mean a whole lot. NVIDIA can still sell chips under a certain performance level. AMD could do the same. Intel could do the same. And it's all about kind of showing the ability or desire to kind of update their roadmap to provide those lower performing chips. And then, foreign countries can just buy more of those lower performing options to get relatively close to the same kind of performance levels that you would get otherwise. So it really just kind of adds, in my view, a complication to the mix than anything.
Mm-hmm. I know you actually wrote up a lot, Ryan, about each particular company. We may not be able to go through all of these. Which one seems to be best positioned to you? And are you worried, Ryan, on the other hand, about any of the other names?
I don't think anything really stands out to me. I think that the ASML news is interesting, but as Logan mentioned, it looks like it's affecting some of the secondary markets. I'd say the non-flagship, non-leading edge parts of the businesses. I think we need to wait until we see some of the results from Microsoft or Amazon or Google to see if they're actually slowing down any investment in this infrastructure. I don't see that happening, which means I still see NVIDIA as a lot of room to grow, AMD has room to grow, Intel as an option maybe as well there, but I still see the sales coming through and kind of the indications of that being true.
Yeah, we're showing Micron right here at 105 and change. Logan, that is a name that you like it. In fact, I believe you like it even more than NVIDIA right now.
Yeah, we do. And it's based almost purely on valuation and where that valuation is right now. I mean, Micron is sitting at 0.3 debt to equity, so really strong balance sheet. They also have about an 8.5% forward multiple, or 8.5 forward multiple, and they're expected to grow earnings at about 40% next year. So there's some really strong valuation going towards Micron. I think it's a good one in the space. It's one that hasn't had that great, tremendous run that NVIDIA has had. Obviously has had some, but I think the valuations on some of the big leaders, the AMDs or the NVIDIAs, are something that we're staying away from right now, probably seeing a pullback in that for a little while, and then potentially going into those if valuations come down a little bit.
Yeah, we also have Dell will start shipping servers with new NVIDIA AI chips in November. So we have some breaking news there that we continue to follow. ASML is down about 16%. NVIDIA is at 130, folks. Logan Gilland, Ryan Shrouch, thank you both very much for being with us today. Thank you, friends, for being here. I'm Nicole Petalides on Trading 360. I'll see you at 2 o'clock. Download our free Schwab Network app in the Apple App Store for free. SchwabNetwork.com. I'll see you at 2 p.m. for the watch list. Fast Market is next.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and the brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up. Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
afternoon, traders. We're up to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions, and we'll have some option strategies in Boeing, which is off over 40% this year, and announced some capital raises today, and Morgan Stanley, which hit an all-time high today into their earnings report ahead of tomorrow's opening bell. And like Foley will break down consumer sentiment.
All right, it's 12 o'clock. Let's tune into CNBC and see what they have to say.
And reports earnings after the close.
Get to the half.
All right, Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. We are live today in Beverly Hills, California at the Case Alternative Investment Summit. And over the next hour, we'll bring you actionable ideas beyond just stocks and bonds and exclusive interviews with several industry leaders here. Eldridge co-founder and CEO Todd Boehly will join me shortly with the CEO of one of his portfolio companies, a rare interview that we cannot wait for. And later, Ian Charles of Arctos is going to tell us why his firm has focused so heavily on arguably the hottest alternative asset class of all right now, sports. The traders, they're with me as well. Josh Brown, Joe Terranova, Shannon Sakosha. We will check the markets. We are given a little bit back today, as you see on your screen here. United Health is a big drag. As you know, NVIDIA's lower. Oil is lower today. But, Joe, I want to begin with you. Yes, we're giving a little bit back, but I thought something really interesting. Optimism around this rally is not lacking, okay? Bank of America Fund Manager Survey, global investor optimism, the biggest jump since June of 2020. So, you know, the markets may be a little rocky this day or that day, but optimism abounds.
Yeah, and automatically when you hear optimism, those that are bearish bring forth the skepticism, and they say that's a reason to sell the market. In fact, it's not. You want to talk about optimism, how about David Solomon countering some of the pessimism that we've heard from Jamie Dimon? David Solomon talking very optimistically about the operating environment. So I think there's good reason to be optimistic in the current setting. The concerns that we had at the end of the week regarding maybe an uptick in inflation, what are we seeing today? You've got oil down 5%, below $70. You've got yields pulling back a little bit. Financials are strong. We've got earnings from financials that have beaten very low expectations. So, Scott, I think there's good reason to be optimistic.
Yeah, Shannon, what about you? I mean, you look deeper into this survey, equity allocations rose to a net 31% overweight. Cash is actually dropping. There's been a good conversation in these markets about if cash does come off the sidelines, where is it going to find itself? Well, there may be a chase into year end, too.
Scott, we talked about this last week. I mean, we continue to see a meaningful amount of uncertainty in terms of the rate path here in the U.S. That has extension to areas like the dollar. Will it weaken? Will it remain strong? There's also this sense, Scott, that I think is inaccurate or perhaps inelegant, that because we continue to rally over the last year in the equity market, that companies were not burdened by higher rates. And frankly, we saw those rolling recessions through different parts of the economy. There clearly were losers in terms of a higher rate environment. So while we may not see the cuts happen as quickly as maybe we anticipated in August, we are seeing an environment that's becoming more accommodative. There is an opening up or a relaxation in terms of capital markets. We're seeing that in bank earnings that has meaningful implications for the alternative space that I know you're going to talk about later in the show. But I think, again, you're sort of you have an opportunity to take advantage of places that perhaps were burdened by higher rates and higher costs and now have the opportunity to grow their earnings into 2025.
Yeah, Shannon, I've got the year-end price target at UBS going to 58.50. Not that impressive considering where we are right now. Again, the highest, just to remind everybody, Shannon, is our own Brian Belsky of BMO at 6,100. I mean, what seems realistic to you if we do think there's room to run, but we have an election ahead of us too, and we do expect volatility like UBS as well, even as they raise their target, is looking for?
I think the one thing that you really have to be mindful of, Scott, over the next few weeks is some of the economic data. I think that we could see some hiccups. Obviously, we have earnings. That always creates, as you said, some of that day-to-day volatility, that day-to-day ebb and flow of enthusiasm or constructiveness. we also are in a period where companies are admittedly looking at an election in a few weeks and not wanting to make any big moves in terms of capital expenditure or business plans. And so you're seeing that in some of the manufacturing surveys, some of the small business confidence surveys. And so we might see a little bit of weakness here over the next few weeks because of the economic data. But realistically, that strength into year end has a pretty good foundation. And it comes from, in large part, what you just talked about. People are moving out of cash and they are afraid of taking too much duration in this market. And so therefore, they're putting it in the equity asset class.
Yeah, we're looking at the S&P here. We're not down by all that much, Josh, in part because when NVIDIA takes a day off, Apple says, okay, I'll pick up the slack. And Apple's hitting an all-time high today. Just give us your view here of this market.
Yeah, those stocks are very important mathematically, and we've talked ad nauseum about why they're important for the market spiritually. They've been the leaders for a long time. But I want everyone to just remember when we were around this time last year, what the conversation was. It was basically like, all right, 7 stocks led the whole market in 2023. The economy's decelerating. The Fed's probably going to have to do 5 or 6 or 7 cuts because they tightened too much. And now there's going to be like kind of this emergency thing where we're going to get all these rate cuts as if it's a traditional cycle. And none of that stuff really played out. So right now at 5,800 on the S&P, we are 400 points above where the highest of the 2024 strategists were at this time last year. We are 20% above the average strategist target this time last year for 2024. So all of these strategists have had to kind of chase this rally higher, and they're not just doing it on the basis of multiple expansion. We got better earnings growth than expected.
Nice one, Oklo. Frano, nice one.
Acceleration for the consumer. None of the negatives played out. Now, what's ahead of us? We thought we were going to be in election chaos right now. That's not the case. You're probably going to get a divided government. The first thing that's going to happen is another Fed rate cut. And then right after that, they're going to spend the next year figuring out how to extend the tax cuts in some sort of bipartisan way. Neither party benefits by having them just sunset. So like that.
All right, S&P is starting to bounce.
That's why the analysts are all scrambling to get their targets higher. We are in a night and day scenario versus what even the bulls were saying a year ago at this time.
I still think, though, Josh, there's a good debate to be had of where I am supposed to be within the equity market, whether it's mega cap, whether it's financials, which are coming off a record close, whether it's industrials that are coming off a record close. I still don't feel like that debate has been settled.
I think most investors are settling it by not choosing a side. So if you look at the typical portfolio, you're not finding people making that choice. Do I own Apple or do I own mid caps? The typical portfolio right now is in that barbell approach. Some of them in advance, betting on the broadening out, and some of them now chasing that move. But we're seeing flows away from tech. Like of course, tech remains the biggest story because we're in the midst of this new industrial revolution around AI. It's $1 trillion build-outs for AI. So of course, tech companies have a lot of earnings power, and we're seeing people allocate there. But they're also buying
Tesla moving back above PMZ.
Buying the GLP-1 stocks. They're buying the utilities. There are so many other stories that are not just NVIDIA, Apple. And I think by now most people have caught on to that. I think you're seeing that everywhere. So that's why this is such a different situation than the one we were in late 23. In late 23, it was like, if Apple, Microsoft, NVIDIA don't hold up, we're dead. We already saw multiple periods of time during the course of this.
There goes the S&P.
Those stocks took a break and other stocks rallied. And people remember, oh, that's what it's like in a real bull market. That kind of week-to-week rotation where there's a new superstar every few days. That's kind of what's happening right now, and I think it's really healthy.
I think the other conversation.
Okay, let me take a look at Meta.
forget about what sectors you want to be in. What does the ideal portfolio look like in the future of investing for our viewers? And that brings the Case Alternatives Investment Summit.
All right, so Meta looking really good for an ABCD pattern. Meta ABCD.
With the wealth management industry. John Taft is vice chair of Baird. He formerly ran RBC Wealth Management for more than a decade.
ABCD on Meta. Let's see. Meta. I don't have a position. Let me just buy some Meta. Friday cheap calls. Let's see if we can get something out of this. Meta. Okay, Meta. Let's go. At the money. 587.50.
Straightforward, simple question with lots behind it. And that is
587.50 and 590. It's a buck. Buck 13. Okay, I just bought some Meta. Just bought some Meta calls.
we are looking at, or we're talking about a playbook that's been executed for decades by the most sophisticated investors in the world, institutional investors, who have had outsized allocations to alternatives since the 60s. And David Swensen at Yale, probably the most famous of the proponents of alternatives. It's worked for them. And now the question is, can we bring that capability, the ability to invest in alternatives, down to the individual investor world?
So when we look at, let's say, the traditional 60-40 portfolio, which has been hotly debated over the last 18 months, just given what the Fed has been doing with interest rates, some declaring it dead, now some declaring it back, I get a sense of talking to people here that the 60-40 portfolio is done, that it's time for something like the 50-30-20, and alternatives need to be part of that, maybe the 20.
Well, there's a lot of talk about that. The issue is that stock and bonds are no longer the contra-correlated asset classes that they used to be. We've seen a couple of times in the last couple of years. You mentioned
Okay, looking for Meta to continue.
The question is, if bringing in
I'll come back to Meta. I just want to keep an eye on the S&P. S&P.
managed futures, more liquid alt strategies can.
Okay, OKLO mentioned by Frano several weeks ago. That one continues. Looks good. It's at new highs. Okay. Nice one.
You make a great point when you note the difference between
Apple hanging in there.
and then more liquid assets, because in general, when you talk about alternatives, for the most part,
IWM. Let's take a look at IWM. Okay, looking a little better. IWM looking better.
So what kind of risk do you think comes with that? How do we educate people about that to understand the differences between very liquid investments and then what for the most
IWM continues to put, it's about to take out the highs here on the weekly.
Illiquidity is a benefit in the sense that it conveys a premium to investors who are willing to absorb that illiquidity risk. So if you can do that,
Okay.
improve your returns.
IWM looking very strong.
One of the things that's going on,
Okay, the weekly over here. Weekly is looking good.
innovation in the alt space. It used to be, let's just take private equity, it was a very clunky investment tool. There would be serial capital raises, one every 2 years. There would be drawdowns. You never knew when they were going to take your money. Your money didn't go to work right away.
Okay, we're bullish above 220, so IWM continues to show strength.
What you have is private equity funds that are offered evergreen, so you can invest whenever you want, and the money goes to work right away. They offer quarterly liquidity, and on top of all of that, they offer tax reporting that's a lot more beneficial to investors. So some of the liquidity is being taken out by product innovation. Still got to educate though.
You said a couple of years ago that we were only in the second or third inning of this movement. When you look at the amount of money that's flowing towards alternative assets, it's pretty astounding. It's expected to hit $15 trillion by the year 2025 and more than $18 trillion by 2027. I mean, why does so much money continue to flow to this area? And I assume those
IWM looks good. IWM.
Across all the wealth management platforms in America, the average exposure to alternatives right now on the part of individual investors is 3 to 5%.
If you look at what alternative exposure is in the institutional world, it's 20, 25, sometimes up to 50%. So this is the second or third inning in a long trend, a mega trend in wealth management.
So if I asked you sort of look out a year from now, will the best returns, do you think, be made in the public or the private markets?
As I said at the outset, this isn't a trade. No, seriously, this is one of the most important things individuals have to
Let's say
consider.
5 years from now, can we look at it from a runway that long? Will we have?
Here's it's not the way to look at it. Forgive me.
Yeah.
The question is, will a portfolio that isn't 60-40 stocks bonds, but is 60-20, 60 equity, 20 bonds, and 20 alts, 5 years from now, will that portfolio have had better risk-adjusted returns than the 60-40 traditional portfolio? I can answer with confidence. The answer is yes.
I'm glad you framed it that way, and it was a better way to look at it. I just want to involve our own Josh Brown for a moment, because when you hear that, Josh, from John, I mean, what do you think about in the way that you're trying to craft your own clients' portfolios and advise them?
Well, I guess my question for John would be, when we talk about risk-adjusted portfolio, that's obviously a concept from the institutional and the endowment and the insurance world that may not necessarily translate as perfectly for every high net worth investor. For most high net worth investors, the actual risk is not short-term volatility in the market where they have to go talk to a board of trustees.
All right.
Sole owner of the account. The real risk is running out of money in 25 or 30 years when everything costs 4 times as much as it does today. And from that standpoint, I guess the question is, by prioritizing smoother, more risk-adjusted returns in the short term, what are we giving up in the long term, given what equities can do versus pretty much any alternative category that exists? What's your answer to that when you're talking to wealth managers who are trying to decide what percentage they should be looking at alts for?
Well, let's take a simple example. Let's just look at the 60% of the portfolio that is in public equities. You know, and documented that the number of public companies available to invest in has been declining over time, and the range of alternative companies in the private markets has been increasing. So if you're an investor, why would you want to restrict yourself to public markets only? Wouldn't you want to expand your opportunity set to private markets as well? And here's the deal. I've chaired investment committees for institutional investors for 30 years, about half a dozen of them. And there's no question that private equity earns a return premium to public equity. So if you can understand the liquidity risk and allocate appropriately, you will earn higher returns from private equity than you do public equity. What's wrong with that would be my question.
Let's leave it there. I think you've given us some really great perspective on how we all.
Okay, looks good. All right, IWM, let's S&P. Need to launch off of this level, S&P 500.
Up next, a rare exclusive interview with billionaire investor Todd Bowley and the CEO of one of his portfolio companies, Zinnia. We're back in Beverly Hills.
NVIDIA still stuck down here on that ASML supposed leak of earnings. Looking for a sustained bounce into the evening session so we can take some profits off in the strength. Tesla is above the PMZ level. Tesla PMZ is the pre-market zone. Okay. Trendy John's terminology. PMZ, pre-market zone, for the scripts that he sells over at John Carter's site, Simpler Trading. All right, so we got a nice move here on Tesla. Tesla's on the move. Watch Tesla. Tesla, looking good. Okay, you can make the case for an ABCD pattern, okay, on Tesla. Okay, Tesla can make the case for an ABCD pattern. A, B, C, D, E, F, G. Okay, don't get carried away, Vinny. Okay, A, B, C, D, A, B, C, D. Tesla. Okay, there's A over there. At the open this morning, let me just goose this size here. B. With a stop under there. Stop. S-T-O-P. A, B, C, D. Looking good. Tesla. Case can be made for an ABCD pattern on Tesla at the moment. It needs to follow through.
She's the CEO of Zinnia, a tech performer, a platform disrupting industry. It's also an Eldridge portfolio company. I should say welcome. It's great to have you both with us. Michelle, welcome to you. For those who might not know, you're a cloud-based platform in the life insurance and annuity business. I described you today as a disruptor in what has really been a traditional industry. How are you doing that?
That's right. Well, first of all, thanks for having us here today. So we believe that life and annuities represent a huge opportunity.
Okay, Tesla watching for confirmation. Confirmation will be if we continue to see volume coming in.
For us, it's simplify insurance. So we're a tech platform. We tackle everything for carriers, consumers, and advisors. And what we really do is offer a platform that can enable simpler buying, selling, and servicing of those products so that everybody has a better experience. They trust the products more, and the industry grows.
The annuity side of what you do is reasonably new, correct? I mean, you made an acquisition earlier in the year, which you call transformational. In what sense?
So what that acquisition enabled us to do was to really be embedded in the sales process of all of our customers. So we have about 2,500 distributors and 8 of the top 10 banks that we distribute for. And we originally had everything on the product building and servicing side of the business. Now we have the sales and distribution. So we've really been able to
We do have some news to break today with you. You're announcing a new financing deal, $300 million raised from Vista Credit. What are you going to do with that capital?
So we'll continue to grow. So I'm sitting next to Todd, obviously, who's been a phenomenal investor.
Okay, watching Tesla, watching S&P. Okay, stocks are just kind of sitting here.
And data, we just look to use that capital and their expertise with our own to help us grow more.
Yeah, Todd, I mentioned how insurance has become a real key part of your growth strategy. We discussed it a year ago here, and obviously we've seen the growth that Zinnia has produced since then. Why insurance? Why do you have this belief in that part of the business?
Well, it's one of the biggest markets in the world. I mean, in annuities this year alone, they should sell over $400 billion worth of products. And as the population continues to age, annuities are becoming more and more relevant. People stop thinking about what are their IRRs, and they start thinking about how much cash am I going to get every month, every year. And annuities are a perfect product for solving that income solution. And as the population
Okay, Apple's starting to fade a little bit more. Apple.
types of solutions are going to become more and more relevant. There's more 100-year-old insurance companies than any other industry in America. And that's a great testament to the robustness of the business model But what it also means is that there's really old technology that's powering the whole industry. And Zinnia's opportunity is to replace that technology. So they can launch products, get to market quicker on Zinnia than they can if they build it themselves.
How are you generally thinking about the companies that are in your portfolio? As we talk about alternative assets and certainly private equity, one of the key ones that's going to be talked about a lot today, the lack of exits, what the roadmap looks like for a company like Zinnia within your portfolio.
All right, stocks are just sitting here. We need to see a bid in these New York FANG index components that are sitting at the lows. Microsoft, Broadcom, NVIDIA, AMD, not a component, but watching. Micron, same thing. Tesla, trying to catch a bid. Supermicro, looking for it to get above the 200-day. Supermicro, looking for that to catch a bid. Okay, Supermicro is still below, I'm sorry, the 50-day. Needs to get above the 50-day. It's been consolidating here at 47.50 for a week and a couple of days. Okay, looking for a follow through. RSI is still flat, so this is still on the fence. Could go, could get rejected. OKLO is on the move. OKLO. Thank you for that one, Frano. Okay, Meta. Looking for Meta to follow through. All right, Meta looking a little better. Okay. S&P. Got to get through this area of supply just overhead. If we get north of 58.48, that should do it. Histogram is still mostly yellow on the 5-minute. Let's see what the 15 looks like. 15-minute. Okay, 15-minute is still red. Okay.
In whatever market you're talking about, for more than a year, Zinnia uses it. It's a disruptive force in and of itself. It impacts your call centers, the way you operate those. Can you just speak to how disruptive that has been and what the future of that looks like?
Yeah, sure. I mean, look, I'm a massive technology lover anyway, always have been. AI is tremendously useful to us today and just has a huge promise for the future. Right now, we've been able to AI enable our call centers. That gives us more information about what customers want, what they don't want, how they want to work with us and engage with us. And it's already brought massive productivity to us. Now we're pushing that out to our customers as well, so they can understand, more about what people really
OKLO is continuing to push higher.
They want to see. So it's a huge productivity gain for us right now. And every month we just see more and more opportunities to embed AI in kind of the user experience and and the carrier experience.
A year ago in these very chairs, we're talking about.
Okay, so Google going nuclear for AI power. Okay. Department of Energy approved the company's conceptual safety design for a report. Okay.
I think we're looking for very basic solutions. And for example, we just took a company called SP Plus Parking private with a company called Metropolis. And the whole idea there is to use computer vision to be able to replace the tickets.
Okay, so you'd think nanonuclear would catch a bit on that too. All right, nanonuclear is turning the corner. Might be an opportunity, a nanonuclear. I'm not gonna trade shares this time. I'm just gonna take some options. Make go to January 25. Those are big spread. Let's see. These got pretty big spreads. All right, so I am gonna buy shares. All right, nanonuclear. I'm gonna buy some shares. And E starting to turn, getting some activity thanks to OKLO. OKLO. Okay. Okay.
And then we'll have a business that should make over $500 million of EBITDA. So we're looking for angles that are kind of low touch, if you will, but meaningfully.
Okay. Nanonuclear, I just bought some shares. We'll see how far this goes. I'll scale in. Okay, so a couple of hundred shares at a time. Nano Nuclear, NNE, scaling in too. 100 shares for now. We'll add double if it keeps going. All right, day trade for now. Nano Nuclear starting to see a bounce, following through. Okay, Nano Nuclear. They're still prone to failure. This one, Nano Nuclear, still prone to failure. Only because it's right at this level where we've run into resistance. At the 9 EMA, we got the 21 day of support. So we need to see buyers continue to show up. The problem is we've been moving sideways. In the past, we would like dip and then immediately rip, dip, immediately rip, and so on. As it cruises along this 20 level, we're spending more time the last, 8, 9 trading days. We've been sitting here right at 18, between 16 and 20. Okay, so it's prone to failure. If it does get going, it'll be obvious. Okay, so where do you want to buy? Do you want to buy at the high or do you want to buy at the low? I prefer to buy at the low. I like to buy the dips, have a stop underneath 1575, 1580. If it takes out 1580, then you know you're wrong. Okay, that's only a buck. Okay, stop. Recent low, 1575. Okay, watch Nano. Okay, Nano Nuclear. Okay, you don't see what I'm looking at here. Okay, here's Nano Nuclear. Okay, so this might get going. If it does, you got to stop underneath. Okay. Let's do this. Let's look at this here. Short term, the short term turning. Yeah, it's turning. Okay, cool. Let me do a zoom thumbnail here. Zoom thumbnail. Okay. All right. Okay, watch this one. Stop. Dollar stop. Looking for $2 upside. Can we get $2 upside? Can we get $2 up there? Yeah, we can get $2. Okay.
Live today from the Case Alternative Investment Summit here in Beverly Hills. Todd Foley of Eldridge Industries joins us once again. Thank you for spending some more time with us. Let me just get your broad view on where you think we are in the markets these days. How do things look to you? We visited a year ago, looked all right. The Fed you thought was done hiking. Now they're starting to cut. Just give us your read on where you think we are.
I think we're in the process of having lots of M&A get started. I think we're seeing more and more activity. I think we're seeing people want to transact. People have to kind of get back to, the transaction.
Nano Nuclear.
So, across our portfolio.
Okay, let me just adjust this.
Consolidation discussions going on.
It is prone to failure, so this is a risky proposition. So you want to put a stop underneath recent low?
To reopen. I had a conversation not that long ago with David Solomon of Goldman Sachs, who's maybe more optimistic than most, but even was like, okay, let's get this started already. What's going to kickstart it?
I think ultimately the fact that private equity firms have to recycle capital is going to be the thing that drives the whole process back.
1230.
You're starting to see,
1233.
And I think scale is going to continue to get more and more important. And as long as kind of scale continues to be, the thing that people are focused on, you're going to see consolidation. You're going to see M&A. You're going to see a lot of activity, in my opinion, coming up.
Yeah, I mean, that's been one of the key questions, specifically as it relates to private equity, the lack of realizations, the lack of exits. But you do have a sense that we're about to have a page turn in that story.
It feels that way. I just think there's a lot of activity out there. There's a lot of conversations going on. We're seeing these consolidation discussions come up, in every industry now. But I still think the consumer's doing well. I think that if you look at just hotel room rates and ADRs and what's going on across our portfolio, whether it's the Raffles in Boston, the Hilton here in LA, Aman in New York City, these are all doing very well. And I think they're a testament to the strength of the underlying economy.
Are you reasonably bullish then on the overall economy and the consumer, soft landing, no recession? Where do you come down on that question?
To me, it just feels like we're continuing to plow along, and people are continuing to feel reasonably good. I think if you go back and look
Nanonuclear.
4% 10-year doesn't seem to be a horrible interest rate environment to be in, and I think we're going to continue to see the front end come down and the curve will flatten. And I don't think the 4% 10-year environment is one that will be prohibitive for business.
Impact things like part of your business, private lending, credit. Where's
Nanonuclear.
Changing interest rate world?
Supermicro. Back above PMZ, pre-market zone. The rest of the New York FANG, they're just kind of sitting here. Okay. S&P 500 still sitting here.
So you're seeing them get a little more competitive with each other. And I think that's good for borrowers. It's good for the country, and it's good for access to capital. I mean, the thing that makes America so great is our capital markets are by far the deepest, right? So if you look at how much volume
The first cut is the deepest.
it equals basically 1 day of
All right, Oklo is still going. Oklo, OKLO.
It's just awesome. And I think that's really the edge that America has, and that's what everyone wants.
I feel like you can't either turn on the TV these days or open a financial related, newsletter or newspaper and not have the question asked, is private credit a bubble? I'm curious your thoughts on that, because everybody seems to be discussing that. What are your own thoughts?
I think if you're not a practitioner, it's hard to sit here and kind of suggest that something's a bubble, right? In the end, you're lending money to these businesses somewhere between, let's call it 4.5 and 6.5 times. And these are businesses that are worth between 9 and 11 times, right? So as long as the businesses are worth more than the debt, the lenders are going to be fine, right? So, I think when you look at what happens in industries get sick, and then the credits within the industries get sick because the industry gets sick, right? Whether it's energy or
Oklo still going. Oklo is ripping here. Nice one, Frano. Very nice.
And then the underlying
Très bien, mon ami.
I don't really see a whole lot of industries that are sick right now.
Oklo.
Sports. Let's talk that for a second, because you've made it a key asset class of its own for you.
Okay.
Why do you continue to believe
So these stocks,
Lakers, Chelsea,
NNE.
by the way, is looking pretty good to start the season. 4th place, I think, the last time I checked in the table. But why now a more durable investable asset class?
So the simple way I think about it is, if you think about the aggregate market cap or net worth of all the billionaires in the world, and you think about that continuing to expand, right? The number of teams.
Did he say insane?
Right? So to me, these are good assets that have well-protected borders.
Okay, 1220.
They're moats around them. They've got very big brands. They're connected to very big leagues, and they're not making more of it. So, maybe they'll have one here or two there or something. But in the scheme of it all, the percentage increase in the number of teams is going to be very small relative to the long-term increase in the net worth of all the billionaires in the world. And ultimately, those are the assets that billionaires want, right? Because they're fun, they are protecting value, and they're giving really good human experiences, unlike anything else.
Okay.
Right? So it's the only thing that people don't time shift their life around, right? It's sports.
So when people look at what's happened with valuations of sports teams, which have basically gone straight up in the major sports. And they suggest, well, the valuations can't go up forever. It sounds like you offer a counter argument.
Have position in both of those.
Just seeing new forms of capital coming into these sports businesses and these teams. And the second that more pockets of capital become available to be able to invest in an asset class, that's going to be good for the rates of return if you're along the asset class. Yeah. So we're seeing more and more of that. And again, I just think that more and more revenue is also coming to these. So I think the Dodgers will probably be the first team to reach $1 billion of revenue. And I think that that's just going to, because there's more and more use cases for the underlying intellectual property that is the
Oklo.
Players and the brands and the marks.
Nice move on Oklo.
Upset any of the Met fans who may be watching, and I know there are many. But
What do you think of that one, Frano?
is it for somebody like you to see
Looks good.
Yankees World Series, which hasn't happened since I think 1981.
Yeah,
all
81.
that comes with that.
Yeah, listen, I think that.
Yeah, watched the game last night. LCS Yankees. And the used to be the Cleveland Indians. Now they're Cleveland Guardians. I don't know. I don't like the name. I like the Indians. I guess I'm not woke enough. Oklo. Nice pop in Oklo.
The biggest stars, Juan Soto, Shohei Ohtani, Mookie Betts, Freddie Freeman.
Yeah, I got a lot of good players in the potential World Series matchup.
There's been a lot. You've been in the news a lot about the Chelsea and your future ownership there, that you want to buy out Clear Lake, and that you might make an offer. They don't want to sell. Can you give us an idea of what's happening there?
We're thinking long term around
Bitcoin bouncing again. Wow, Bitcoin is really quite volatile today. Oklo, let me just change this. This is not NNE. This is Oklo. OKLO. OKLO.
because of how this team got sold. So now we're just
OKLO. Is anybody in there?
Is it possible that you'll make an offer that they'll
Okay, nice run up. Lots of fair value gaps on that move with Oklo.
I appreciate you spending the time with us once again. It's an annual tradition that I hope continues. Todd, thank you.
Thank you very much.
All right, that's Todd Bowley joining us here exclusively at the Pace Summit. We're going to talk more about one of the
Okay, IWM. Let's go see what IWM is looking like.
Sports with Arctos co-founder Ian Charles. He's at the center of all of this action. But next, it's back to the committee.
Okay.
They are beating the broader market this year. We're back in Beverly Hills after this.
Okay. NVIDIA looking for more bounce. Oklo still looking good. Okay, looks like Nanonuclear is pulling back a little bit right now. Okay, there is a NVIDIA whale that adjusted to a higher strike with a $100 million gain. Locks in a $100 million gain. Okay, it looks good. All right, NVIDIA. So if you're throwing your shares away, I hate to say it that way because I don't know if it's going to keep going, but we've seen big traders taking some interesting positions. Let me post this in the trading room. You'll see what I'm talking about. Noted by some people here. 12:43. Where are we here? NVIDIA looking for a pop. All right, nanonuclear, a little profit taking. All right, we're coming back down again. Nanonuclear. Figured that might happen. Hence the stop. Okay, Oklo continues. Oklo. Okay, S&P, got to keep an eye on the S&P. Okay, still hanging out here, S&P. No foray into the higher levels yet.
We're back on halftime. I'm Pippa Stevens with your CNBC News Update. The Supreme Court keeping in place a Pennsylvania law barring people under 21 from carrying guns in public during declared states of emergencies. The court overturning today a federal appeals ruling that found the law violated the Second Amendment. For now, the justices have declined to hear arguments for the case. The Department of Transportation fined Germany's flagship airline Lufthansa a record $4 million for discriminating against a group of Jewish passengers. The agency said the airline blocked 128 people from boarding in Germany in 2022 based on the alleged misconduct of a few passengers who violated Lufthansa's mask policy. The fine is the largest ever issued by the DOT against an airline for civil rights violation. And according to multiple reports, the New York Jets acquired wide receiver Devontae Adams from the Las Vegas Raiders in exchange for a conditional draft pick. The trade will reunite Adams and quarterback Adam Rodgers, who played 8 seasons together on the Green Bay Packers. The trade comes as the Jets lost.
Okay, S&P not making any progress. Doesn't look good for the Bulls short term unless we can get back up to the highs.
We'll do our calls of the day now. Truist reiterated buy ratings on both Shake Shack and Chipotle. So Josh, I know, obviously people know about you and Shake Shack. What's your read on this call today?
Look, these are companies that have done a very good job.
Oklo pushing higher again.
Chipotle is further advanced at getting themselves into new territories, knowing when to walk away, not cannibalizing their own stores, and maintaining discipline on raising prices, but not so much so that people give up on making these things a part of their lives. So I like the call. I think both can continue to work.
Apple.
I believe
Apple's still fading a bit.
Probably in the second or third inning in terms of the.
All right, it just feels like there's not a lot of interest in the markets at the moment. Still 50-50. About 50-50.
CEO right now after being the COO on Monday, August 12th.
Okay, S&P 500. Walgreens Boots Alliance is number 1. Carnival Cruise Lines is number 2. Schwab is number 3. Norwegian Cruise Lines is number 4. United Health, number 5. PNC Bank, number 6. Virtus, VTRS, number 7. No, okay, it's moving up the list. VTRS. S&P trying to hold on to this level. S&P cash trying to hold on to this level.
Well, and that's because of the volatility. Look, remember the stock in November of 2021 through 2022 declined from 691 to 166. So if you're an owner of Netflix, you're going to have to incur significant volatility. But the story has been about free cash flow generation and revenue growth. This upcoming quarter, the revenue growth is going to slow modestly, 14%. It's not going to look like the previous 2 quarters. So I have a problem if you want to take some profit off the table, because that's what you're doing with this stock. But keep in mind, from a secular perspective, as it relates to streaming, I keep saying Netflix has the benefit of focusing on growth. Disney and Warner Brothers, they have to focus on profits.
Another stock that's done pretty well.
NVIDIA trying to turn. All right, NVIDIA watching histogram. Okay, trying to turn the corner. NVIDIA, this is a 15-minute. The 5-minute turned. 5-minute turned. Okay, watching 5-minute, 15-minute. Short time frames on NVIDIA, trying to get this to turn back up. Got a lot of fair value gaps overhead, all because ASML supposedly early leak on their report card.
It's the ethos of your entire firm. Why have you leaned in so heavily to sports?
So 5 years ago, when we started Arctos, we identified this $400 to $500 billion asset class that had been inaccessible to institutional investors. And as part of a diversified portfolio, sports has historically been a return enhancer and a risk reducer. The leagues just didn't let you invest as an institutional owner. And that started to change in 2019 when Major League Baseball changed its constitution. And Arctos is the first mover in this space. We're the only investor approved to own multiple teams in each of the leagues that allows institutional capital. And it's been a phenomenal 5 years, and I'm excited to be here.
It's interesting. As you say, you're a multi-league, multi-franchise, multi-region investor, including the Dodgers, the Pittsburgh Penguins, the Red Sox, Golden State Warriors, PSG, Aston Martin, F1. Why have you chosen to be so broad in all of those areas? What does that afford you as well?
Tesla looking for a follow through.
Institutional investors coming into this asset class, what they're looking for.
Nvidia, watching Nvidia. I'd like to see Nvidia turn the corner decisively.
A lack of correlation with all of the other assets in their portfolio. With a diversified portfolio approach and the approvals in each of these leagues, we can diversify away the league beta, diversify away the local market and operator beta, and really just focus on
Nvidia looking for that bounce. Pull back the breakout on Nvidia.
with alpha as a manager. And whether you're a big institutional investor or a high net worth investor, this is additive to your portfolio.
So you've had, a front row seat, if you will, to the evolution of the institutional investor community viewing sports as a durable, investable asset class. Correct?
Correct.
What kind of conversations are you having with them to educate them on what the true value is, how what kind of metrics you should use to value them, because you're into that too.
No, look, we have a huge data science business that we call Arctos Insights, and one of the purposes of that platform is to educate the institutional investor community about sports as an asset class, but it's also to help our league partners and our owner partners identify opportunities for growth and optimization. So through all of that work, what we're trying to do is bring down the steepness of that learning curve and help investors understand the place for sports in their private markets portfolio and how it can be additive in a risk return framework.
I thought it was interesting, Todd Bowley making the case of why valuations are so durable, why they continue to increase. Can it continue forever? I have people telling me valuations just can't continue to go up like they have, and then another team comes up for sale. The Dolphins are a good example, even a stake with other assets included at a valuation of more than $11 billion.
As an investor, what you want to make sure is that the valuation trajectory is connected to the business fundamentals of sports. And the business fundamentals of North American sports assets are thriving. Revenue is growing, structural profitability is attractive, future growth potential is significant. And just as proof points for that, in the last 12 months, 150 million Americans attended a sporting event with one of the big 5 sports teams. The NBA had 12 of its
Okay, Oklo still looking good.
almost 900 sellouts across the league. The NHL had record league-wide revenue, 10% year-over-year increase in
All right, cruise lines obviously doing a good job today. Cruise lines. Carnival's number 2 on the S&P 500. Carnival can't chase it up here, but it is bullish, so I'd be looking for something similar to what we had to start the week, where Friday we had a doji. We pulled back a doji again on Monday for potential entries, stop underneath the 9 EMA or the low of the day, and of course today much higher. So it's also good to have the whole group. Also good to have the whole group moving higher. Norwegian Cruise Lines and Royal Caribbean moving higher. Most of you in the trading room have been watching these or trading them. Looks good. It is so gorgeous outside. Micron, okay, starting to fade a little bit. Micron, ARM, same thing. Nvidia looking similar. Chips have had a nice run this week.
As a media asset, as a business, is really unique. It's a sports fans, 75% of them consider the NFL political content. Last year, of the top 100 TV broadcasts, 94 of the top 100 were NFL games. And so for the NFL, unlocking access to institutional capital for liquidity and growth is a phenomenal opportunity for the investor community, but also for NFL owners who are looking to grow.
Are you looking at potential opportunities as we speak without being specific if there are any ones? But I mean, once the approval came, is that sort of fast?
Tesla looking for a bid in Tesla. Tesla looking for a bid.
4.5 years with the intent.
Okay, so 3 days down here. Could last another week or so before moving higher. Tesla. Oklo continues to push. Apple. A little fade on Apple.
Because it's non-traditional for PE to be a partner. They want to be the owner. You guys have no issue at all being partners. That's what you do. I mean, you're a minority investor and happy to be so.
Correct. Our team was purpose-built to serve the leagues and serve the owners. Some of my colleagues have worked at the leagues, have run some of these franchises. But another part of our team comes from passive private market strategies. So we're very comfortable in a non-control position. We're very comfortable providing value-added services, data services to help our partners grow their business in collaboration and in partnership. Our firm was purpose-built to serve these teams and these leagues as a partner, not as a control owner, because the leagues don't let you be a control owner in North America.
All right, there goes Oklo. Oklo moving a bit more.
Joining us right here exclusively at Case. By the way, be sure to sign up for the CNBC Sport newsletter. You can scan the QR code or go to cnbc.com/sport newsletter. We'll do finals next.
Okay, Oklo. Oklo, I'm looking at leaps. That way I know what my maximum pain is. Looking at leaps, options rather than shares. Sell some shares into strength. I've had these for a few weeks. Frano mentioned them. Oklo, OKLO. I'm looking at buying some leaps, Frano, just so you know. 1250, maybe sell the 15, buy the 1250. If I can get a fill. There is currently a 50-cent spread on the, so if I split it 25 cents, maybe I can get in on the 1250 calls. Okay. Oklo. Oklo. Okay, Frano, I'm selling the shares, and I bought the 1250s for 2026.
trade. 3 o'clock Eastern, we have Jenny Johnson, Franklin Templeton, President and CEO, and Matt Brown, he's the host here. He is the founder, chairman, and CEO of Pace, and we'll catch up with both of them in a couple hours. Let's do final trades. Joe, what do you have for us today?
The JOTI ETF has 28% financial exposure on top of your conference, Scott.
Okay, all right. Josh?
Amazon, undervalued. I think the quarter's going to be okay.
Okay. Shan?
REIT, plenty out there besides office, Scott.
All right, good stuff. I'll see you on the closing bell, everybody. And welcome to the exchange. I am Brian Sullivan in for Kelly Evans today. Here's what's ahead. Oil is down, even with the threat of an Israel attack on Iran. We'll tell you what changed overnight and where oil may be headed. And this stock and the sector it belongs to, not typically considered a growth trade, but your market guest says should be. He's here to make the case why you may want to own it from here. Flying, shipping, and storing. That is the theme for today's earning exchange. We've got the trade into
Boeing.
Airlines, JB Hunt, and Prolog.
They're gonna probably do something. There's a lot of people that recommend Boeing. Just give the unions what they're looking for, because if they don't, they have run the risk of going bankrupt. Funding wise, that's what the scuttlebutt is. Boeing.
A similar decline percentage-wise for the S&P 500, which currently sits at 58.36, down about 23 points. At the lows of the session, we were down 28. We were actually up 11 points at the high. So again, drifting towards those session lows right now. And the tech-heavier NASDAQ Composite Index down about 0.75%. 18,359 for the NASDAQ Composite Index. That's down about 142 now points. One of the reasons why that technology trade is failing a little bit more today has to do with semiconductors, but it's been a tale of two headliners so far today. The big upside move, bucking the trend, has been Wolfspeed on that semiconductor side after securing a big grant from the CHIPS Act, also a new round of funding from investors. Those shares up 23%. ASML Holdings, though, biggest tech company in all of Europe, semiconductor equipment manufacturing, down 17% after its quarterly results disappointed, especially on the booking side of things, and they cut their full-year guidance for 2025 as well. So that's the big downside drag.
All right, so Lori posting in the room earlier at about 12:53, about 10 minutes ago. A large short put position at 58.35. Looks like a short spread. I guess that lines up with that iron condor that we were talking about earlier. If it loses that level, it could get ugly pretty quickly. Right where we are right now, 58.35.
And the potential sales it could have in the future. So all of those things mixed together drive a record high for Apple. Brian, I'll send things back over. For those of us new to the exchange, what's this blue star? What is it, the Dominic Chu seal of approval? It's not a seal of approval. It is a factual check on whether or not a stock or asset has made a record high. So that's when it gets a star. Fact checking you to financial news now. Dominic Chu, really appreciate it. All right, so there's a lot more.
Palantir, you looking at? Okay, let's take a look at Palantir. PLTR.
Now, there really are a couple of reasons why. Number one, you got the IEA trimming its demand.
Yeah, I'm still waiting for a little bit more of a pullback on Palantir.
New reports overnight that Israel is willing to not strike Iranian oil or nuclear targets. Instead, Israel may hit purely military targets. Now, those reports calming concerns of a major supply shock, which had moved oil higher. Obviously, fluid situation. Many things can change. Let's dig into all of it. Joining us now is AEI's Derek Scissors. He'll join us in a moment on the China part of the story. But RBC Capital's Halima Croft and again Capital's John Philip are both here. Chat about oil. Halima, I'm going to go with you first because we were both in D.C.
S&P diddling with this level here. 58.35. Got to hold this level if you're bullish. Otherwise, we could pull back to the 21-day. 21 day is down there. Looks like 57.42, 57.42, 57.43. That's the 21 day on the daily. Okay, Microsoft is turning. Microsoft ABCD pattern. CrowdStrike turn. It looks like a little bit more bids coming in. Apple still fading. Apple still fading. Okay, back below 235. Apple. So that's a major level. That 235 is where the dealers want prices to be. There or below. They have an incentive to keep prices below 235. Since they're short a lot of calls. We had a brief run up, selling into strength. Apple.
If I were any of Iran's neighbors, I wouldn't be one bit afraid of any kind of retaliation from them. Fundamentally, though, Brian, look, when you have the United States position continuing to be what it is, number one oil producer, major exporter of crude, recent ramp up in gasoline exports to the rest of the world, the LNG exports that we're doing, the Guyana reservoir,
Brazil maybe going to 4+ million by next year.
Libya finally figuring out that it's really not in their interest not to sell their oil to the global market and play along necessarily completely with the OPEC plus quotas. There's supply abounding out there, and you have China also as well. I know you're having a guest come on and talk about that, but China is also sitting on this Middle East situation, telling the players involved, don't disrupt our oil.
Inside day for now. S&P. So we'll have a bearish bias for tomorrow if we close like this. Just watching these New York FANG index stocks for a turn.
So, Halim, I'll go back to you obviously on that because I know who you've talked to, and it's the highest levels. Okay, we'll leave it there. And we'll say this, which is, we always talk about the Fed put in the stock market, the sort of the idea the Fed's got your back, they can cut rates.
Okay, here's a New York FANG index. So we did pull back. We do have some buyers stepping up at the low of the day today. So we'll see how that works for NVIDIA. Okay, this is turning back down. This is still neutral. RSI is neutral. MACD looks like it's peaking. Okay. Okay. Stochastics. It's turning down. All right, so definitely not the area where you want to put on a lot of risk. So let's see what happens first. Once we see what happens, we can navigate this area. We've had 5 days up. We're pulling back 1 day. We broke out 2 weeks ago. New York FANG index broke out 2 weeks ago. Okay. 10 stocks, you know what they are. Okay, Microsoft is trying to turn the corner. Microsoft charts hasn't looked that great lately. Microsoft. Okay, we're trying to hold on to the 50 and the 200 day. The 50 day is turning right along a tangent. The 200 day is a tangent to the 50 day. 21 day is also turning. You see that? Microsoft.
Yes, the IEA is trimming its demand growth forecast. I want to remind everybody they still see growth. And I think that they're not cutting from where they were. It's just a slower pace of add. I do think that is something we need to remember, even with a world that is awash in oil.
And things could tighten up, Brian, and the structure of the market does reflect that. So we're not out of the woods. We're never out of the woods.
It's oil.
It's
sell your one mine in the Strait of Hormuz from a $10 pop.
Or even the talk of them.
Yeah,
for sure.
All right, Tesla, no follow through. All right, so it's kind of fading a little bit.
Reservoirs, given the Saudi spare capacity and other
Apple, ARM.
really hard to make a bull case for oil.
Okay, so the chips have had a really nice week. To start this week, we pushed higher. Last week we looked good. Microsoft, let's see, semiconductors, let's take a look at those as a sector. Okay, big move lower, semiconductors, bombing for now.
So there is still that risk that, to your point, I think you alluded to it at the top, Israel strikes something, not energy.
SQ, yeah, you got something on SQ.
And then Israel says, enough's enough.
Block, all right, so that's moving higher. Block looks good. Let's see the others like Synchrony Financial, Synchrony, okay. Capital One Finance, okay. MasterCard, okay, that looks good. Visa, all right, so something brewing. Yeah, they all look pretty good. SYF, CMA, Visa, etc.
Iranian politics, I'm sure you know a lot more about it than I do. It's kind of a vague world from the Western side. We don't get a lot of real inside baseball.
Financials. Okay, nanonuclear not working. Watch nanonuclear. If you took any new entries, looking for a bounce.
The relatively new president of Iran is trying to strike a more moderate tone on the domestic economy. So there is still some good news chance that Iran does, for lack of a better term, stay calm. Is there not?
Well, that is the question. Will they behave like they did in April? Remember, when they had that Israeli surgical strike in April, the Iranians came out and essentially said, okay, we're done with this round for now. The question is, who's going to be calling the shots in terms of what happens with the Israeli strike? Will it be the Iranian president? He's not seen as someone having a lot of sway over military affairs. Will it be the Revolutionary Guard? And people say that Iranian ballistic missile attack that we saw earlier this month.
All right, enough of this crap.
It was the guardsmen who basically
Talk finance, dude. God, I'm so tired of geopolitics on these financial shows. Yeah, I get it. Okay, we all know that there's issues, but to spend so much time talking about the Middle East, I don't know, it's just me. It's my opinion, so disregard. Supermicro trying to bounce. I just want to talk finance. I want to see what stocks are moving, see what kind of advantage we might have. We know there's geopolitical risk. That's one of the reasons why we want to take some profits off into strength. We got a VIX expiration tomorrow and a call heavy skewed expiration on Friday. OPEX on Friday is call skewed.
They believe Tesla will likely keep using its aggressive finance promos globally.
Okay, ARM Holdings looks like a higher low is printing again. Looking for a higher high on ARM Holdings.
So they think that both of these
Okay.
companies will miss most of the marks.
Let's see, S&P 500. So far, looks like an inside day. Could turn into a bearish engulfing. So we definitely at an area. I mean, think about it. We're at all-time highs. For us to pull back after, what, 5 days up? 4 days up. 1 day was a little doji there. For a little pullback, it's perfectly normal. Okay, so if you have opportunities to take profits off into strength, or even if you want to close positions that you've had that are flat, not a bad idea. Take some risk off. We're more than likely going to get an opportunity to buy at a lower level going into the election. Will it be 1 or 2 days down, or was it just price stay right here? It's possible we can just stay here too. S&P. Okay, we could accelerate. Watch the S&P.
Yeah, and that's a good point as well. I mean, and this name is one we'll be covering daily here because there's always news. There's always
Okay, they keep fighting with this price action right here.
we'll actually be putting
58.35.
that name. We'll be diving more into our upvoted names. We'll be looking at Apple, which is up now about 1.
Super micro grinding a bit higher. Super micro needs to get above the 50-day.
We'll be diving into the technicals as well as some example trades. Stick around. Next Gen Investing. I'll be right back.
Really sucks when price action's not moving. You know, a lot of things are just kind of sitting here doing nothing. Okay, look at CrowdStrike, for example. CrowdStrike, okay, security's been pretty decent lately, but it is pulling back on the right screen. Super micro hanging out at the 50-day moving average, needs to get something going. 50-day is right over there on top of price. What's junk bonds doing? Junk bonds. Okay, junk bonds grinding a bit higher. 10-year yield, US 10-year. Okay, drifting lower, so that's bullish. Okay, so we got mixed signals right now. Junk is higher, that's bullish. 10 years moving lower, that's bullish. What about DXY, the dollar? Dollar bouncing a bit. Okay, a little bit of a safety trade maybe? I don't know. Gold futures. GC, gold futures. Okay, that's still hanging out at the highs. Okay. Nano nuclear bouncing, nano, Apple, Micron. Okay, so it could just be
3 p.m. Eastern. It's market on close.
S&P 500, mostly green. S&P 500.
Now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk. Our team of passionate
Okay, the NASDAQ 100 is 50-50. Just a few more declining than advancing, but basically 50-50. The New York NASDAQ 100. S&P 500. Believe it or not, 335 stocks are green on the NASDAQ 100. 165 are declining. 335 are advancing. So that's pretty interesting. Gold pulling back a little bit. Gold pulling back. Okay, so despite the fact that we're dealing with this level right now, I mean, that could change, obviously, if we start to sell off on the S&P.
Joining me for our Chartmaster segment is Kevin Horner, the senior
Okay, S&P, if it starts to go, maybe some puts on the S&P cash. Let me see what the chart looked like. Interesting. Vold is higher. Okay, Vold is higher, fading. Let's see what ADD looks like. ADD. That's 708.
Jenny, I agree. First, thanks for having me. Obviously, I love doing these things.
Okay, Vol. Okay, S&P.
The chart on Apple really intriguing today.
Maybe a hedge S&P.
That 237 level, the same peak we saw back with the last high on July 15. We stayed there for all of 20 minutes today, and then gave back a little bit here, pulled back intraday. But I think what it's done potentially, Jenny, is give us an idea of the importance of that level. Right? We've achieved the measured move range that we saw from back in the late of 2023.
What I find interesting is the S&P cash is at the low, yet the number of stocks advancing are 335 versus 165 declining. Let's go look at advanced decline percent. Advanced decline percent. Okay. Look at breadth. All right, so we got mixed signals here too. Okay, the S&P, mid caps, small caps, NASDAQ is taking a little bit off, but these three, S&P, big caps, mid caps, small caps in descending order, they're all pointing higher. Interesting with 334 stocks, 335 stocks advancing versus 170 declining, that the S&P is at the low. Okay, so that analysis doesn't agree for a sell-off. I would think it would be the opposite. I would think there'd be 170 stocks advancing, 330 stocks declining. It's the opposite. We got more stocks advancing than declining. That's pretty interesting. Namo and NIMO, last night's data. This looks like it's trying to turn up. Still wouldn't be surprising to see a little bit of a consolidation up here. Okay. Okay, advanced decline percent. Okay. S&P 500, mid cap, small caps in descending order. Those all look good. NASDAQ turned down. Let's look at the S&P equal weight index. If we take the weight of the big cap tech out of it, let's see how that looks. Okay, so we got a shooting star or a doji, shooting star for now, at the highs. Number of stocks above the 20-day are advancing. Number of stocks above the 50-day are advancing, starting to peak a little bit. Okay. Okay, Bitcoin pushing a bit higher. All right, so we got a lot of mixed signals right now. Mucho next mixed signals. Okay. What else we want to look at? We want to look at, let's look at the New York Stock Exchange, 2,000 stocks on the composite. You got the McClellan volume oscillator turned up. That's a good sign. Along with breadth. Number of stocks above the 20-day advancing. Okay. This doesn't really look bearish to me. I mean, that could change. We could see a couple of days down. But the New York Stock Exchange is giving us bullish signals. We got advanced decline. New York Stock Exchange advanced decline is at a new high.
There's still, I mean, there's always the case to see some further upside. And as Kevin did just point out, I mean, we could still see more of this breakout continue. So with this in mind, obviously higher today, giving up some of that strength in real time, but walk us through a bullish way of trading this thing.
Yeah, it's never super comfortable buying something at all-time highs, so risk-defined strategy can help protect from that drawdown in the event that it does fail basically at its old all-time high, which could act as resistance. But say you do see a breakout and say you see a move towards maybe 250 over the next month or so, which would be about 5-6% from those all-time highs, seems reasonable on the trajectory. You look at the strength that the stock has had today, despite the fact that the overall market's lower, that can bring confidence as well. But deferring to the trend, which has been higher, and looking for more upside, looked at buying a call calendar in which the anchor of this trade was the middle of November, that November monthly 250 call, and then just selling the November 1st 250 call to reduce the debit on that trade. What you'll see is the debit was $1 overall for this, so the max loss then theoretically would be $100 for this trade. So a chance to participate in some upside, but most importantly, risk defined in the event that that does not happen. Give yourself a little bit of time, about a month away, and if it does continue to move higher and test that 250 mark, there's a chance that this could be a pretty profitable one.
Yeah, and then that's a good way to look at it here. Now to shift gears and look at our next name, Meta Platforms, which is down now about 0.9% on the session. But a name that also has been able to be a really strong performer. That's why we're looking at these two, frankly, of the Mag 7, two of the best, of course, outside of NVIDIA. It's up still 65% on the year. So, Kevin, now walk us through what you're watching here as far as the overall technical picture, because I don't think many would have said the year of efficiency could have continued as well as it has. But hey, we're also only about now 3% off of those highs.
Yeah, you're absolutely right. A monster on the year. Almost, I think my number said almost 69% when I was putting this together.
Okay, still sitting here, even though we've got
it's up 30%
more stocks advancing than declining. 330 versus 170.
We had on August 5, where the negativity got a little bit too deep, I think, and then the market has since pushed higher. This has been a really nice mover. It's up 9% as well since breaking the 540 zone, which is where my white line resides. 540 was prior all-time highs, so you're looking at essentially an ascending triangle that has thus broken. We've had that 9% move since, That was coincident with the same move the
Okay.
S&P 500 has
So, I mean, I'm not saying we can't move lower, but stocks are doing the opposite of the index right now.
be in the process of building a bull flag
Mhm.
allowing that 20-day moving average to get caught up with the trend. So I think a lot of traders are eyeballing that 20-day if you're a short-term trader.
Okay, so we got 2 hours and 35 minutes to go. 2 hours and 35 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Tuesday, the 15th of October. Tuesday. Tomorrow we got a VIX expiration, and Friday we have a call skewed, call heavy OPEX. So there's lots of calls being bought. Dealers have an incentive to wipe those calls out. So that's why we want to take a little profits off. This is just intraday and short-term swings, not to do with investing time frames. Futures continue to tickle the lows of the day.
Also a really interesting chart, and oddly very similar again to Apple. So as far as like some longer term trends you're watching again into their earnings, which are just in the next few weeks, I mean, what are the key differences you see with a name like Meta versus Apple? And what are you sort of watching here into earnings?
Well, it's always, as Alex just said, risk-defined approach, right? We must know the levels where it makes sense for us to be positioning ourselves. If you're a short-term trader, you got to eyeball that 20-day. But on the lengthy weekly chart, I think it does call out the extended nature of this recent move to the upside. And we want to remain bullish, sure. But at the same time, if we start to see those bleeding givebacks on the daily chart, perhaps the weekly trader needs to start making note of it. One call out on this weekly chart that has to be made is that lower RSI. It's notable that the last RSI peak has been reached, but we've not pushed into overbought territory on this lengthy chart.
All right. We continue to move lower. So if you're hedging, perfectly makes perfect sense. We could drop off pretty quick. The stocks will follow more than likely. I don't know. Right now, I'm just looking at more stocks advancing.
On these breakouts, we do get the throwback and retest. It's an area where a bullish trader might feel a little bit more confident deploying new money on a retested scenario like that.
Yeah, both of these charts, I mean, I think continue to surprise. And frankly, it's nice to talk about two names that have been performing so well over not only this year, but over the last several years. So great breakdown, great insight today. Kevin Horner, Senior Manager of Trading Services Education at Charles Schwab. Thank you so much for joining us today. So now, Alex, of course, we trade this.
Okay, we're starting to lose some levels here, so we could accelerate lower. All right, there's big shorts here. Maybe you want to buy some puts. Maybe I'll buy some SPY puts just for the hell of it for Friday, just in case. I don't know. We're at the low of the day. I don't like to do that at the low of the day. I'll wait. Apple, ARM, Micron, Meta, NVIDIA. Okay.
But it's structured in a way that you're risking $150 with
It's possible that we're seeing rotation as well. You know, that's something I didn't check. Let's go check that real quick. Let's look at rotation. Let's look at the rotation in the markets potentially. Okay, there you go. That's what it looks like to me. Okay, so we're coming out of growth, which is at a highs, all-time highs. Growth is seeing a low profit taking, and value, materials, energy, financials, industrials, etc., and healthcare, those are seeing buyers. So it looks like rotation. Looks like rotation.
Following along the volatility that is all things Meta platforms, not so much Apple, but obviously we'll be watching those results as well. Now that'll do it for our Chartmaster segment. Coming up next, time to talk another fun volatile name that we revisit on the show pretty much every single day. That is NVIDIA. As its selling has picked up here, it is off of session lows ever so slightly, but down 5% on some various news. Are we seeing ASML perhaps weigh on this stock, or are we seeing exports out of the U.S. also weighing on shares? We'll dive more into that story coming up next.
Yeah, I can do a sector rotation. You can see it in the growth and value. It gives you most sectors. Okay. Let's see. RRG.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to
S&P 500 sectors.
choose from over 40 themes, each with up to 25
We'll
stocks
go
identified by
to the, let's go to the 60-minute first.
customized to align with your goals. All
60-minute.
Schwab investing themes, 40 customizable themes, up to 25 stocks.
Okay, we can see, look at what sectors are strong. All of your value sectors are strong, okay? Consumer staples, materials, industrials, financials, utilities, real estate, and the tech stocks are moving lower. Okay, energy is not participating. That's due to all the turmoil. Healthcare is turning back up. Consumer discretionary is turned up. Okay, this is a 60-minute time frame. Okay, 60-minute. Okay, so this is coming into today. You can see what started to find a bid. Look at financials in it. Financials and industrials had started lagging. Now they're turning back up. Okay, I'm just scrolling back, scrubbing back and forth. Utilities, longest tails on utilities, real estate, materials, consumer staples. You can see technology crossing from leading to lagging or weakening. Okay, XLK right in the center of the screen. Okay, that makes sense. XLB, materials turning up. All right, so all of the value sectors have turned up. So this looks like rotation to me. Looks like rotation. So chips are probably going to take a breather for a few days. Makes sense. So you want to make sure you have options that are further out if you're trading options in time.
Releasing earnings a bit too early, but
okay.
Actually this morning I was looking at the stock with Oliver Rennick and we were saying maybe it's this whole crackdown.
Okay, we're starting to get yellow histogram bars, or trying to anyway. S&P 500 trying to produce some yellow histogram bars.
Yeah, shares of Nvidia heading lower right now, as you said, down about 5%, which pales in comparison to Dutch chipmaker.
No, it's not heading down right now. It's actually making a higher low. That's misleading. That's misleading. Na 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 na. Why don't you tell them why? Why don't you tell them why Nvidia stopped short of 140? See, they won't tell you that. They won't tell you that on Schwab. Well, sometimes they will. This black kid, I don't want to call him a kid. He's a grown man, but this black guy that comes in, he talks about options a lot, gamma and levels. And if he was talking Nvidia, he would tell you what we saw, which is Nvidia has a 140 strike, which is very prominent. If you look at the Money Magic levels, if you look at Nvidia, you'll see that Nvidia has a 140 strike as the top call wall. What does that mean? That means that's where dealers are positioned. Okay, so if you buy a ton of calls at 140, okay, now let me just show you this real quick. Okay, this is really important to understand. Okay.
The Biden administration has actually already restricted AI chip shipments by chip companies, including NVIDIA and including AMD, to more than 40 countries across the Middle East and Asia, as well as Africa, over fears that those chips could then end up in Chinese hands. So there were already restrictions,
Okay, let me see if I can find it.
Point, but this would be in addition to those. It's an interesting timing, though, because last month the U.S. and the UAE actually issued a joint statement on artificial intelligence, and they said
Okay,
the
let me
agency will
just
prepare
copy this here.
to develop a government-to-government memorandum of understanding on AI between the U.S. and the UAE, saying we recognize the tremendous potential of AI for good, including to accelerate economic growth, transform education and healthcare, create jobs, and drive environmental sustainability. At the same time, we acknowledge the challenges and risks of this emerging technology and the vital importance of safeguards and protections with respect to the most advanced technologies. So working together, but also this could potentially, cap the amount of chips that some of these Middle Eastern countries.
Okay,
actually
well,
get.
if you look at the, I can't get this to load for some reason. Okay, so if you look at NVIDIA, okay, if you look at NVIDIA, the money magic levels, if you look at NVIDIA, you'll notice that the upper call wall is right at 140, right along in here, okay? So if the call wall is at 140, where would you think NVIDIA would stop? Well, there's no guarantee because we saw that happen with Apple this morning. Apple ran above 135, but if price action moves up to 140, the dealers that sold you those calls, you're long, he's short, or she's short, to be woke and politically correct. The dealer is short those calls at 140, so they have an incentive to keep prices below 140. Well, ASML unfortunately supposedly leaked their numbers, and it wasn't good for ASML, and it wasn't good for chips. So we stopped right at 140. So when you come up to that area, people start taking profits, and the dealer has incentive to keep prices below. So no surprise that we stopped at 140. Money Magic can tell you the same thing. Here's 140 over here as well. Over on, oh, you don't see what I'm looking at. 140. Okay, so this is 140 here and 140 here. Okay. Okay, so you got 140 there, you got 140 over here. And once we come up to that area, what happens? People start taking profits into yesterday. The dealer wants you to take profits. The dealer wants to keep prices below 140 because they're short a ton of 140 calls. If you break above 140, that's when you start to see a short squeeze where the dealer has to buy, the underlying has to buy, in this case would be NVIDIA. If we got above 140, the dealer would have to buy shares in order to hedge their position because they're short calls. Apple did that this morning. Okay, Apple did that this morning, moved through 135, and now we're back below 135, 235, sorry. We're back below 235. So the dealer is cool as long as we stay below 235. For a brief moment there, they had to buy shares, and we had that little short covering rally into the highs. If you understand this, you can keep from buying at the wrong time at the high of the day. We like to buy dips. You can buy the dips, and you have a better entry with the potential to go back up to that call wall. All right, enough of that. So S&P, still a lot of stocks are advancing versus declining. So the S&P doesn't agree with what we're seeing. Is it a stock market or a market of stocks, right? Is it an index or an index of stocks? It's an index of stocks. So why, if more stocks are advancing, probably because the ones that are declining or have more weight, right? Like NVIDIA. Does that make sense? That's why I'm not sitting here freaking out or anything. I would like to take a little bit more profits off, though. NVIDIA is starting to turn. Okay, NVIDIA is looking a lot better here all of a sudden. NVIDIA.
For this particular example, the 1 month exponential moving average, so that 21-day EMA, one that Rick talks to us about a lot, is right at 126 and a dime. So let's just call it 126. I use that as a level here for our short hook vertical. Going up to November 15th, you don't have earnings for quite some time in NVIDIA. It's one of the later reporters, and we don't actually hear from them until November 20th. So still ahead of that earnings event by going out to November 15th. Selling the 126 put, that's the key of this trade, and then defining the risk by buying the 123. $3 wide spread, $1 credit, so creates a 2-to-1 risk reward. You can make $100, stays above 126, break even at 125. Risk of $200 if it does fall below not just 126 but all the way below 123 and stays there going out through a month from now on November 15th.
Yeah, and we do have some time there, but gosh, I feel like it'll be November before we know it, and I hate that we're saying that. It's just like last year when we were all of a sudden looking at 2025 expiration dates, and I was not ready for it. But we'll leave it there for all things NVIDIA and FOMO, of course. Still substantially lower on the session, but off of those session lows. But coming up next, we'll be talking a factor.
I just find it interesting that they don't tell you until this young fellow, this young black guy comes in. He's about in his 30s, I guess. But he always talks about gamma and levels. So he's the only one on the ball here. The rest of them are just jabbering. $140. Okay.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. Now I'd like to welcome in Kevin Green, senior markets correspondent for the network, to talk about what is apparently dragging on the overall market.
Super micro pushing a bit higher. Super micro.
It's not our first conversation about this stock, and I have to say that looking at their earnings now, they weren't terrible. They did still say demand is strong, but everyone wants to blame this name on like the overall sell-off today. I mean, I just don't really get that.
Well, it's actually, when you're kind of looking at the numbers, they did actually miss significantly when it came to the net bookings. That came in at around 2.6 billion euros. The street was looking for 5.6 billion. So you're talking about coming up around 3 billion short there. That's actually the issue that you are seeing with this earnings announcement, is why we are seeing the share down right now around 16.5, almost 17%. It's not the AI side of the story, which is what Caroline was actually talking about earlier. It's the other businesses. It's more of the analog side of their business that continues to see a lot more weakness. And then they are being impacted when it comes to some of the export restrictions to certain countries due to certain restrictions that the U.S. has placed on them, as well as maybe some other countries. So unfortunately, this is the reason why we are seeing the shares down. Our gross margins
Okay.
50.8%, which was in the company's expected range, and net income came in at 2.1 billion euros. So once again, it's not so much the top line number that was reported, it's the bookings, it's the outlook moving forward and the demand moving forward. When you miss by a healthy amount there, the stock's going to get a negative reaction from that. So that's why we're seeing these shares down and kind of dragging down the semiconductor space. I'm not sure if it's the sole reason why the overall market is down, but it's a really big component of it.
Yeah, and Kevin, kind of has that feel if you even think that some of the reason a name like NVIDIA is selling off is due to this. And it's sort of like when Snapchat would come out and tell us that their business was abysmal, and then you'd see Meta crash, and then you'd see Apple go down. And it's kind of like, is Snap really going to tell us how Apple's doing when they sell iPhones and Snap's the digital advertising company? Is ASML even enough alike some of these other semiconductor names like an NVIDIA for us to even draw comparisons?
No, so ASML is the one that creates the equipment for the fab. So it's a really good gauge as to demand within the space. But once again, if the AI side of the business is really doing well, that's really what NVIDIA and even AMD is really driving on. So I'm not sure if it's a direct one-to-one correlation, but if you're looking at some of these other names like an Intel or even a Micron, yeah, you could kind of say, okay, well, demand is still waning. Maybe supply growth are still going on here, and you might not need some of the equipment from ASML. It could be
All right, looking for the bounce.
indicator for some of those other analog
58.35 Iron Condor held. Amazon's starting to go. Amazon going. All right, turning the corner.
I know. I guess I can understand the weakness in their metrics. Not to say they have like a blowout earnings. I mean, by no means was it strong, but I guess
Amazon's turning. Watching Meta.
To me, it didn't signal
Looking for Meta to push higher.
shock to NVIDIA, and that's where I guess I have a hard time making that relationship because, frankly, I did not realize how massive this company is. But if demand is as really just abundant as everyone says it is, I mean, shouldn't NVIDIA and these other names be fine, or is it just more of this perhaps export unknown story?
I think it's more just weighting of the sector in general. So sometimes you can actually have a situation where one company impacts a whole sector, and that could just be based on the institutional flows in general, right? ETFs, balancing out, and things of that nature. I think that's another reason why NVIDIA is moving down to the downside here. And you also did have the CEO kind of make a mention of China's contributions.
Supermicro trying to go. Supermicro.
To around 20% in 2025.
Tesla.
So I mean, once again,
Tesla turning back up above PMZ. Meta trying to get back up to PMZ.
Purchasers of your product is pretty much going to be cut in half when it comes to revenue stream is kind of a big deal, and then the booking side of it coming in well below almost half of the expected guidance is or expectations for the street is also something that's a little concerning. But I think this is just a scenario of once again, you impact the semiconductor sector, it's going to have an impact on some names that are just caught in the crossfire and really not a direct beneficiary of a good report or a bad report.
Kev, when you look at the overall market, a little bit of weakness today, just overdue, natural, healthy selling and a pullback here, or is there something to be worried about yet?
I would not be too concerned right now. I mean, we've had 5 days in the green here for the S&P 500. So, if you go to the casino and you're playing roulette, at one point in time, you're going to hit red. And I think that's kind of what's happening right now. I think we're just seeing a little bit of a sell-off, and even a 0.5%.
Okay, looking for a bounce. ARM. Okay. NVIDIA. Come on, NVIDIA. Get back above 132. Nanonuclear still just off the lows. Nanonuclear. Meta looking better. Meta looking better.
An interesting story nonetheless. I mean, rarely do you see a company that reports early.
Meta's looking better.
See errors, but it is just always an interesting way to look at some of the pressure, obviously, here today. But we'll leave it there. Kevin Green, senior markets correspondent for the network. Now, coming up next, time to end on a more positive note here. We are looking at Wolfspeed, which did secure a pretty good chunk of some new funding. Shares are up now 19% after rallying about 26% earlier today. We'll dive more into that story coming up next.
All right.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customized to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Okay, looking for this to push higher. I hate buying puts at the low of the day, especially in the face of data that suggests more stocks are advancing versus declining, yet we're here at the lows. Looking for the turn in the last 2 hours of the trading day.
Trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market. Weekdays at noon on the Schwab Network.
Okay, S&P turning.
Time for Under 30. Today we discuss Wolfspeed. Joining us now is George Tillis, senior markets correspondent for the Schwab Network. And George, not all semiconductors got the memo that today was a down day. Wolfspeed up about 20% here after announcing that it secured some new financing. How big of a game changer is this?
Well, I don't know if it's the biggest game changer that the company needs. And you're right, this is a semiconductor.
Okay, S&P looks like Amazon's moving a bit higher.
They actually produce and, of course, develop silicon carbide technologies, which are sort of
Okay,
silicon
let's take a
substitutes or
look.
light substitutes that help with energy density and thermal displacement. In other words, help deal with heat and, of course, make electric vehicles and, of course, technologies more energy efficient. And from a materials standpoint, the company's facing a lot of competition, it looks like, globally. And one of the challenges the company's really faced in the last few years, I mean, if you look at the stock the last few years, even the last year, it's down about 60%. But if you do look at the last 30 days, the stock is higher by over 50%. And I think one of the reasons why it's higher overall in the last 30 days, it's a small cap company. Based on yesterday's close, market cap was about $1.5 billion. Lower interest rates have really helped some of the small caps. Look at the Russell 2000, actually trading quite well today. But nonetheless, the company did get a lifeline, and this comes from the Department of Commerce, essentially giving the company some debt financing conditions of around $750 million. So typically speaking, when the Department of Energy or the Department of Commerce provides debt financing for companies as part of the CHIPS Development Act to actually produce and manufacture in the United States their materials, there are better conditions. And these conditions are sorely needed for Wolfspeed. And one thing I'll mention also just quickly is that there are some contingencies and some milestone events, but one of the contingencies is that the company must raise an additional $750 million from private financing. And it looks like they did secure that as well. And these are senior secured debt financing conditions. So essentially what's happened here is the company has gotten about $1.5 billion in additional debt financing. And what that's going to do is help alleviate some of the financial pressures the company's been under. And the financial pressures really stem from the automotive segment. The automotive segment for Wolfspeed is about 75% of revenues. And we know that total competition for materials has gone up globally. And of course, prices of materials and autos, for that matter, have been down. That's put underlying pressure on Wolfspeed's financials. If you look at the sales in context, last year on $850 million, the company lost about $570 million. And that's a significant amount relative to those sales. And the company right now, relative to $1.5
$145.
billion in equity, has about $6.2 billion in debt already. So the debt situation for Wolfspeed is really encroached on the stockholders' equity. And short interest is quite high. So there's a little bit of a short squeeze going on for this name, 30%. Last time looked in terms of the short interest. So that's part of this movement we've seen in the last 30 days. But nonetheless, this does provide some relief to equity holders, and that's why the stock is higher by close to 20%.
So George, I guess I don't follow this name closely enough to understand why it's underperformed so greatly. I mean, I know we rallied like so substantially, 40% this month at this point, but and some good news today and everything you just explained objectively is a positive story for this company. But why has it underperformed this vastly this year?
Well, I think there's a lot of R&D expenses associated with their material science, and so that has been expensive. While at the same time, sales and price projections have actually come down. And so when costs are rising and sales and price projections are coming down, you end up in a situation where you're losing money. To alleviate those concerns, you have to issue equity, secondaries, or debt. The company has had a lot of debt starting to build up, but its equity sliver has actually been reduced. So as the debt to equity ratios rise, it becomes more expensive to get financing, and that puts additional pressure on the equity. So today's news is good in the sense that it helps alleviate some of that pressure, but I don't see any profits for this company, at the very least based on projections until 2027. So this may be a short-lived rally, but again, there's something substantive going on here from a small cap standpoint with those names all moving higher.
Yeah, and I will say this is now one I've done more research on today than I have in quite some time, so I will be watching more closely from here on. But appreciate it, George Chillis, senior markets correspondent for the network, and that will do it for Alex and myself for Next Gen Investing for this Tuesday. Coming up next, we have the watch list with Nicole Padalides.
This election season, stay out of the muck and the mudslinging. The Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly can have.
All right, so S&P still drifting lower.
Insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by
Traders with puts down here are enjoying themselves. We've had, we only have one down day in 5. One down day in 5.
another good sale. Turns out I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Okay.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly? It's controversial. The old guard is
Okay, Bitcoin's still grinding higher. Bitcoin.
Controversial, and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up. Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
Okay, NVIDIA looking for a bounce.
Now there's a market for every single one of these people. There's a market for you. Market overtime on the Schwab
Are we going to get a stick save? Is NVIDIA going to give us a stick save? Okay, let's take a look at IWM. Small caps also catching a bid. Okay, we're at the highs. Also,
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange, where markets are under pressure. Energy, technology, both under pressure, making it a little hard for stocks to take off and set new highs like they did yesterday. In the meantime, with a busy show for you, we'll welcome in Sam Rubin of Unit 42 at Palo Alto Networks to discuss the current state of generative AI in the cybersecurity threat landscape thus far for 2024. Technical Tuesday, so Kevin Horner will be standing by and he'll watch the key trends for the S&P 500, Best Buy, and DR Horton.
IWM, okay, looks good. Apple's still drifting back below 235. Dealers and market makers are happy there. Okay. NVIDIA, love to see NVIDIA launch. That'd be nice. Under pressure. Under pressure. And the Russell gaining 0.75%. Okay. Oil and gold are mixed. Oil's been pulling back. We're going to have Kevin talk a lot about why that's happening. It's down $3.50, $70.38 the barrel. And gold is gaining almost $15. 2028 for the VIX, the dollar 103. So that gets back to that 103 level, 103.10. And Bitcoin gains 66,995 is the level there. 67,000. We haven't seen 67,000 in some time. So definitely worth noting the 1.3% move here that pushes us up to that new handle today for Bitcoin. So we have a lot to discuss throughout this hour. Kevin Hincks will kick it off, host of Fast Market here on Schwab Network. I did mention the sell-off we were seeing in crude, which was notable. Tell us a little bit about what's behind the move.
Hey, Nicole. So by definition, the macro story on crude oil is a somewhat bearish one, right? You've got OPEC Plus pivoting away from price and more towards market share. That's bearish for crude oil. You've got lack of demand from China. That's bearish. You've got larger outputs from the U.S. That's bearish. But there was geopolitical risks like Iran and the wars and all the things that put geopolitical risk into crude oil. Now that Israel has stated that they weren't going to go after Iranian oil fields, that takes some of the political risk, geopolitical risk, out of crude oil and puts our focus back.
Supermicro trying to take the high.
The macroeconomic look at crude oil, and that
Okay, Meta turning up.
fundamentally bearish.
NVIDIA's turning.
Supply and demand from China is waning, and supply seems to be growing, Nicole. So I think that, and the fact that Israel is not going to affect
Zillow, I was looking at some of the real estate brokerage type names like Zillow, Rocket Mortgage, Redfin, and companies like that. Looking for a real estate to bounce. Okay, Meta's starting to go. Meta looking better.
Well, obviously we watched JP Morgan and Wells Fargo last Friday. Then we took Monday off and we're watching the banks today that came out. Bank of America up small, but here's the thing. Bank of America is higher on the day. Goldman Sachs, which traded as high as $540 today, is very close to unchanged on the day. And you saw Citigroup that traded as high as $67 today and some change is now down 4.5% on the day. So what happens, Nicole, is later as the sector gets out with earnings, a different story comes and some of the reactions are a little bit less. And Goldman Sachs put up some good solid numbers. Citigroup, not as impressive as they are still rebuilding that company. But the banks started out very strong this morning and now have come back down towards unchanged, or in Citigroup's case, down on the day. I think that the overall tone this morning was fairly bullish despite news on chips, and then ASML news hit, and the whole market.
All right, there goes Semi. Semi's bouncing. Okay.
All right, Kevin Hanks, great to see you.
Okay,
Thank you so much for
S&P.
joining us. Now let's take a look at the bigger picture here. Joining me right now, George Schulte, founder of Schulte Asset Management.
Nvidia turning.
Yesterday, do you think we'll see more records between now and the end of the year, George?
Well, it's certainly possible, Nicole.
Nvidia turn.
Thanks for having me. Yeah, we're seeing all sorts of melt-ups, and I think given where we are, though, in the cycle, as well.
Okay, looking good.
Have sudden and dramatic sell-offs as well. The S&P reached a new record yesterday. You have similar.
Okay, nice move on Nvidia. All right, shorts will start to cover now.
Nvidia stock's been all over the place, but we're now entering, of course, and importantly, earnings season with the banks reporting. I guess today and this week, it was Bank of America, Goldman Sachs, Johnson & Johnson, and others. Morgan Stanley and United Airlines will report later this week. So we've entered, I guess, the depth of earnings cycle, earnings season, and a lot of interesting action.
Okay.
Its stock having hit a new 52-week low last week due to the strike and other big issues. But it is an interesting and challenging macroeconomic environment, we believe, here at Schulte Asset Management, because you do have higher interest rates, much higher than they were about 36 months ago, even though they've been dropping a little bit. You do have money supply growth, but continuing risk of massive fiscal deficit spending, regardless of which party wins the presidential battle that we're going to conclude, I guess, in a few more weeks here. And so with all this deficit spending, you create a really uncertain environment where, again, you can have continuing market melt-ups like we've seen, and most likely also corrections going forward. So we'll be on the lookout for those.
Yeah, you did mention the pullback. So on those pullbacks, what would you be buying? I mean, there's opportunity there, right? So what do you buy on a pullback?
Yes, we agree with that for sure. There's a number of great opportunities. Really, a focus for us is.
All right, Redfin. Let's see.
Changes, corporate reorganizations, for example. That's a growth market right now with higher interest rates and so much junk-rated debt outstanding in both the loan market and the bond market. And so we're focused on companies that previously had too much debt and have restructured it and now present themselves as interesting value-oriented equities. For example, Vistra Energy, ticker VST. This is a very interesting post-distress stock situation. This company eliminated close to $35 billion of debt through a corporate reorganization a few years ago. And then more recently, just a couple of years ago, they were
Supermicro.
Storm Uri in Texas. But the company has since recovered.
Nvidia, nice little pop. Fair value gap on Nvidia. S&P still begrudgingly holding the lows. Nvidia trying to turn. Banner. Nvidia.
It's been using a lot of that free cash flow to buy back stock. It's repurchased about 30% of its stock. And demand for electricity that it generates is skyrocketing due to the evolving nature of our economy, due to AI applications and electric vehicles, etc. So we think that'll all bode very well for Vistra and Vistra stock.
So VST is the ticker symbol there. You also had Vista Outdoors. And, just quickly, any follow-ups for that?
Yeah, RKT. That's another good one. Yeah, RKT. RKT, Rocket. They used to be. RKT was my original.
Out of its second bankruptcy a few years ago, but it bought it at an attractive price, a very low price. And since then, it's taken steps because that business is somewhat out of favor. It's taken steps to sell the arms and ammunition business that it has. That led to a bidding war, and now the whole company has agreed to be sold. The whole company at $45 a share of cash. And that, we're coming to the conclusion of what was about a year-long M&A M&A process for Vista Outdoor, multiple bids from multiple parties. So you never know. There may still be another topping bid, but we think we're probably close to the end, and likely shareholders will exit here at about $45 a share, up from the low 20s just about 2 years ago. So it's been a great return for that company.
Yeah, understood. When you think about the banks and you're watching the banks, do you like the group overall? Financials, which have been leading, which have been, as a group, the sector is hitting some new highs. Do you like financials or not necessarily?
Not necessarily. I think a lot of the financials, I mean, it's a bit of a black box there. A lot of the financials still have unrealized losses in their loan books. And now with interest rates having dropped a little bit, you have a situation where the yield curve is still inverted, but now net interest income margins will be squeezed with the lower interest rates that the Fed recently put forth. So to us, it doesn't really look like a great opportunity, but there are some post-distress names that look very attractive. For instance, UBS, after it made the big acquisition of Credit Suisse, looks attractive. There are a couple others that have books of post-distress portfolios that they recently acquired that look excitingly cheap as well.
I wanted to, we're out of time, but I did not want to leave out your thoughts on Warren Buffett's move on Sirius XM and John Malone's media and what was going on there. Can you just give me a sentence on that and how you felt about it all?
Okay, NVIDIA looking for more follow-through.
Increased his ownership stake here. It's over 30%. I think it's also just a value play. John Malone is another phenomenal investor, and I think that's the main thing Warren Buffett sees in buying his stake with Sirius.
Anybody in mortgage banking?
Yeah.
Do they get I've gone through, got to be 6 or 7, maybe 8 mortgage companies. Your original lender gets bought out by, say, Merrill Lynch, gets bought out by Coldwell Banker, gets bought out by Rocket Mortgage, gets bought out by Mr. Cooper, and so on and so forth. I wonder if they get a premium for doing that. Because my FICO is over 800, and I got to believe that's what the deal is. I don't know if they would buy a mortgage that, if you had like a 600 score or something like that, a 500 score, if they were more interested. You pay your bills on time and everything. Anybody know? I'm just curious because it kind of pisses me off. Every time I get comfortable with a mortgage holder and the way their system works, somebody else buys them out, buys my mortgage, and I have to go learn a new system. It's just a pain. Anyway, NVIDIA watching for a follow-through. VIX is starting to move higher. VIX expiration tomorrow. Okay, let's go take a look at junk bonds. Okay, junk bonds moving higher, so that's another bullish indicator. Okay, we talked about that. The 10-year moving lower. That I would consider neutral to bullish. All right, so if we back off of this 200-day, head back towards the 50-day. The 10-year yield, U.S. dollar. U.S. dollar did bounce 3 weeks ago, and it's starting to slow down a little bit. Junk bonds. Junk bonds. Higher, but dojis back to the 21-day. It could get rejected here and roll over. RSI is above 50. MACD and stochastics turning, so it's likely that junk bonds will continue to push higher. So it doesn't look like institutions, anyone who would trade junk bonds, it doesn't look like they're that worried about the markets pulling back.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Semis. Okay, CLAC, KLAC. Yeah, CLAC, yeah, a lot worse.
George Phillips saying that this was a meme hitting some new lows, 25-year lows, not that long ago. But just looking at the 1 year, I can't tell. So you have to tell us. And I do see that it has had a recent pop higher. Like to hear more about it, Tom.
Yeah, definitely in the news. And this one's been under pressure because they make those chips for EVs, right? And now we've seen EV demand continue to wane here, not only domestically, but globally, where hybrids have taken over. But they make those silicon carbide chips that kind of tie into power systems with the motors in the EVs. And that's why the stock, I think, has been falling. Gross margins have been getting hit recently, and then also slowing in sales and growth for this company. But you can see there from the chart, just coming off the recent multi-year lows. But they did get some big news here this morning, kind of the opening bell, where part of the Chips and Science Act, they get $750 million grant from the Department of Commerce. And they're also getting another investment from Apollo Group and some other investment.
Yeah, Clack looked pretty nasty.
$50 million.
Nvidia. Okay, buyers stepping up on Nvidia. If there's any chip stock out there that people would buy the dips, I would imagine it would be Nvidia. Maybe some AMD. AMD has yet to bounce. That's still here.
But that big investment's going to help them develop those new silicon carbide chips, which are the high efficiency chips.
Okay, Micron still drifting lower.
That the industry needs at this point. So waiting for a pickup in demand, but this will definitely bolster their build out of that and their investment in their own plants here in the U.S. We did see a lot of unusual option activity in here today due to that nearly 20% pop that we're seeing in the shares. Call volume is about 14.
TLT, nice gap up. TLT.
Over the last 5 days.
Yeah, I can see that moving back up.
The one that stuck out to me was up in the November 15th monthly cycle. Trader bought over 2,000 of the 20 strike calls. So these are far out of the money to the upside. So taking a long shot here on some upside calls, and we can see some continued gains in here. They paid an average debit of $1.30.
Okay.
About 2,000.
Supply right overhead.
Break even up to 21.30 over the next 31 days. That's over 50%
30 minute.
of the current share price in there. So you're going to need some more days for this trader to be profitable on this position. But besides that one that kind of stuck out to me, we're seeing a lot of near-term options trading in the October 18th weekly cycle, also around at the money here. But not surprising that we're seeing some speculators take some long shots to the upside and call buyers in here.
Look, not surprised to see the volume and the different options trades that you're finding on the heels of new contract and big volatility in this particular name. To your point, I mean, I went back and I looked, and it goes all the way back to the late 90s, some of these levels where we are now at 4 Wolf Speed. So probably a lot of excitement about trading this name in the first place here. That being said, we turn our attention over to the next name here, and that is Apple. And, we always have Dan Ives on. He's still very bullish on Apple in the big picture. What are you finding as far as the bullish trade you saw?
Well, yeah, it's been good to be a bull in Apple as the stock hit all-time highs, intraday highs in today's session, kind of helping stem some of the losses that we're seeing.
All right, need to get through the supply.
Shares are up about 22% this year, up over 1% today, as I mentioned, hitting those all-time highs. Morgan Stanley came out with a positive note on them also today that lead times are about the same or about improving, where demand's not kind of waning as we've seen in the last couple of iPhone cycles, where after that initial push, kind of get that response where sales start to decline until we get towards the height of holiday shopping season. But they're seeing lead times kind of stabilize here, so that's been a positive. Evercore yesterday.
Okay, TMT trying to make it through this level.
List ahead of earnings at the end of October, and then JP Morgan also came out with a note over the last couple of days indicating that resilience of lead times, indicating recovery and demand momentum for the iPhone 16 Pro models. But you've got to take into consideration the iOS update that's going to have some of the AI tools is released on October 28th, and that's right before earnings for this company. So I think that's why you're seeing the hype and Apple kind of recover versus the slide that we're seeing in big tech today. But we saw a lot of call volume in there today. So Apple's historically and on a daily basis has, most or is top 5 as far as option volumes on a daily basis. And today call volume is about 4 times global daily average volume that we've seen over the last week of trading. So it's kind of reflective that, hey, everybody that's maybe getting out.
All right, so Roku, I'm seeing HCPG talking Roku. Roku, huh? I haven't looked at Roku in a while. Roku. Huh, interesting. Roku actually trending.
That comes on at the end of October. Trader bought over 17,000 to 250 strike calls. So far out of the money calls to the upside. Bought over 17,000 of those. Paid an average debit of about $1 for those.
Roku is actually trending above the 200-day.
Is about 7% above the current share price. So maybe
50-day 200 cross. 50-day 200-day cross. I see that. Wow, that looks cool.
All right, and I also saw iPad minis and that small phone. They're resurrecting the small little phone, bringing that back, but it's all about AI in the 16, without a doubt. And I know people already have the 16, but are certainly waiting for the improved part of that name. That being said, Aqua, a name we don't follow as closely or as often, but we think about energy, and they have a deal with the Department of Energy. Tell us a little bit more about the bullish trade you found on Aqua.
Yeah, this is the overlooked segment within Options Corner here today.
Yeah, Roku with a 50-day 200-day cross. I like it. I like it. Is Roku a small cap or a medium, mid cap? I would imagine small cap, right? Market cap's got to be pretty small. Okay, NVIDIA. NVIDIA turning. Okay, we got 2 massive fair value gaps overhead. Look for the first one to get tested. Maybe it gets up there and rolls over. Maybe it makes it through and makes the second one and rolls over. I don't know. We'll see. Okay, ARM is about to attack the VWAP. ARM attacking VWAP here. ARM is attacking. There goes NVIDIA. NVIDIA about to blow. What time is it?
Maybe overlooked a little bit. That might be in the mix there, but we did see a lot of call activity in here today. Call volume about 12 times normal daily average volume that we've seen over the last week of trading. In one of the positions that stuck out to me.
Okay, we're starting to get a turn. What do institutions do? I like to look for it after 2 o'clock. All right, looking good. NVIDIA about to blow. There we go. Power hour. Getting there. Yeah, I like to look for institutions signature, if you will. Volume coming in, whatever. You can see NVIDIA here. NVIDIA. Let me switch to the 5-minute chart. Okay. Looking for this to get going. Looking for some more volume. Okay, we're moving above. Okay, we got a buy order block. You see that NVIDIA? There's a buy order block right there at 1:45 p.m. Okay, looking for this buy order block to lead to higher prices. Love to see this get up to 135, another buy order block, and then blast higher towards 140. Look, if we get near 140 again, I'd be taking profits off into strength, just for the record. Matter of fact, putting in some limit orders into strength make a lot of sense. Okay, Broadcom, all of these stocks are showing TTM changing from red to yellow to cyan. Apple's still fading. Amazon looks like it wants to go. This is looking pretty exciting. Maybe we'll get some excitement in the evening session. Okay, let's go. Let's see, 15-minute. Okay.
continue, or is this going to be one of those one-day drops where they start to buy it up over the next 24 hours?
Yeah, baby.
Yeah, right now, and it's been trending
Yeah, baby.
or at least part of the day.
Pull back the breakout. That looks good. Pull back the breakout. Okay, right there. Pull back the breakout level. And they showed up right there. Looks good. Looking good. All right, TTM is turning. Whoops. Okay, watching that volume. Okay, looking good.
Is powered by Ameritrade, bringing you futures and forex around-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
All right.
Stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead, tune in to our election coverage on Schwab.
Okay, here we go. NVIDIA looking much better. Okay, I'm going to post this on X. NVIDIA.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab. Have a choice in how you invest with Schwab.
Okay, looks good.
And shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. I want to take a look at a few movers for you. Walgreens moving higher after reporting positive earnings this morning. Fourth quarter, the company reporting adjusted earnings 39 cents a share, beating the estimates of 36 cents. Also reported revenue of $37.5 billion, that being $35.8 billion. Walgreens also announced that it will be closing 1,200 stores over the next 3 years, including about 500 closures.
All right, Meta looking for you to follow through. Meta. Meta looking better.
Stabilizing the retail pharmacy by optimizing the output.
AMD turning.
Now to the downside, we briefly touched on it. ASML Holdings.
I believe I got stopped out of AMD yesterday. For a loss on that one, AMD. I had a limit order. One cancels other. Come on, Tesla.
Other market segments are taking longer to recover. All right. Well, Palo Alto's Networks Unit 42 brings together world-renowned threat researchers, elite incident responders, expert security consultants, creates an intelligence-driven organization passionate about helping proactively manage all the cybersecurity threats and risks. We have a member of that special team, the Unit 42 team.
Okay, Roku looking good.
Sam Rubin, VP Global Head of Operations, Unit 42, Palo Alto Networks. Thank you for being here. pressure being on this unit, huh? When you think about the big picture and how everything is, all the talk of AI and the concerns about what AI does, somehow that all seemed to go away, and everything just really exploded in AI and technology and such. Where do we stand now, and how concerned are you?
Bitcoin, quick drop when everything else dropped, but a nice grind higher. So above that weekly trend still. Bitcoin looking for the follow through.
Starting to use it, dipping their toes into it, but I would say really looking for that exploit market fit. And the changes we're seeing, we would call them more on the evolutionary side, not revolutionary in terms of how they're using it. That said, they are absolutely using it to identify organizations to attack and speed up those attacks to take our data, lock up our systems faster.
So it's not only the method, the attacker methodology, probably they use some of the same methods they used to, but also how quickly the attacks with speed. It makes it very hard to shut down fast, right? How do you even quantify maybe an attack today versus 5 years ago?
Okay, there goes Supermicro.
Sure. So in Unit 42, as you said, my team does thousands of incident response investigations, and we track how long it takes from when the threat actors get into an environment until when they're actually exploiting
3.78 million shares.
And we've seen that time drop precipitously over the past couple of years. 2 years ago, the mean time was about 10 days. In recent attacks, about 2 days now, and in some even an hour. So we are tracking.
Okay, NVIDIA, get going, NVIDIA. CrowdStrike, still no follow through on CrowdStrike. Supermicro at the highs. Apple back down to PMZ.
And center the way it should be. What goes on behind the scenes? Are you worried about that too?
Yeah, I mean, no surprise here. 2024 is the year of voting. I think I saw over 60 countries.
NVIDIA looking, need to take out these highs. Here we got a almost equal highs here.
And yes, we know
NVIDIA.
Entities that are targeting these elections
Okay.
to undermine.
Need to see this pop above 132.50.
Outcomes in one way or another that they see favorable. So this is a target. They're using technology like deepfakes, like misinformation and disinformation campaigns on social media, hacking into campaigns. This is all happening.
When I think about Palo Alto, I mean, is this something really, this sounds like something really unique and really special to have this team put together. A lot of specialists with a lot of experience, right? I mean, how thankful are you to the team and to Palo Alto for having this?
Yeah, so incredibly thankful. The Unit 42 team is a phenomenal team of experts that we have globally here to fundamentally help and protect our customers, our clients. We do that with our expertise. We do that with Palo Alto Networks' world-leading cybersecurity technology, and we do that with the threat intelligence that we have from understanding the adversary, from all the data that Palo Alto Networks collects.
Okay, watching NVIDIA.
From our cloud security, from our endpoint security, and other telemetry.
Okay, watching NVIDIA closely.
Great service that Palo Alto Networks provides, and our team is busy, as I said, helping and protecting our customers globally.
I think about when people sort of do blackmailing or extortion.
Bitcoin. I'd like to see a follow through next week as well, obviously. This week has been pretty good. Testing that upper trend line on the channel, Bitcoin.
Ransomware in many instances. If you're a threat actor,
Bitcoin.
Hack into an organization and you encrypt files or you get access to sensitive information, that really is the best way to get leverage over that organization and extort it for money. And so, yes, ransomware is on the rise. We've seen on a year-over-year basis a 50% increase in ransomware attacks. We've seen those attacks increase the demands, the amount requested or asked for from the victim. And really, it's this model.
Okay, Tesla is trying to get back.
Franchising of ransomware.
Get back.
Ransomware as a service.
Get back, Jojo.
Enabling more criminals or would-be criminals to get into the game where they otherwise wouldn't have the sophistication to do it on their own.
When we think about the different incidents, I mean, it seems to be in every sector. I know you have some sector focus here, but as AI advances and we think about Gen AI and the features, and it's sort of like no business and no sector is immune.
Yeah, you're right, Nicole. Our response, our investigations, they cut across every sector. Now, certainly there are certain sectors that can be riper targets for threat actors. Traditionally, from our view, we've seen manufacturing, state,
Bitcoin, watching Bitcoin for follow through.
Being targeted, and that's really because
over there on the right, looking for that breakout to continue.
Environment with not necessarily the best protection.
Looking for this breakout to continue. Okay, let me shift to the weekly. Okay, the weekly. All right, so you can see what I'm thinking here. Bitcoin clearly pushing through that upper trend line. Okay, we got supply overhead. I'd like to see that follow through over the next few days, next few weeks, and take out 72, 75 maybe would be nice. Okay. All right, NVIDIA.
Come down to us as users being vigilant about obviously what we're clicking on, now what we're listening and what we're seeing increasingly with deepfakes. And so you're absolutely right, Nicole. We need to be careful. We are increasingly seeing incident response matters. So severe cyber incidents that are starting with a help desk social engineer, and that social engineer is leveraging deepfake audio. So the criminals are using audio that sounds like an employee that they got off the internet and using that to bypass or engineer getting that password from the IT help desk. So this is something that we're absolutely seeing, and we need to stay vigilant.
Sam Rubin, VP Global Head of Operations Unit 42 at Palo Alto Networks. Thank you. Really interesting conversation, and one that we will continue, and maybe through the election and into next year. Look forward to chatting about this more. Thank you. Still ahead, it's Technical Tuesday.
Yeah, S&P not able to get back above that put wall.
Best Buy, D.R. Horton. We'll be right back.
Roku. Yeah, Bollinger Bands are opening up. RSI is pointing higher. Roku looks like it's going to keep going. Roku. Bounce off the 20-day. 1 day, or if you count today, 2-day pullback and then a bounce. Looks good. Roku. I would probably take some. I'm just trying to reduce my exposure to the markets going into Friday. So I'll do more day trades. I don't want to buy it at the high of the day. Amazon, Tesla just stuck to this area, 220. Okay, we got about an hour and 20 minutes to go. Hour and 20 minutes to go.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. Time for Technical Tuesday and some stocks trends to watch. Kevin Horner's with us, Senior Manager, Trading Services Education for Schwab. And we always kick it off here with the S&P 500, the levels to watch. Clearly, yesterday, a lot of excitement as we saw new highs once again. And not uncommon because we've been seeing a lot of them. What say you about the current levels that we are bouncing around here?
Well, you're absolutely right. We had that lovely little consolidation following the FOMC announcement, 50 basis point cut back on the 18th of September. And after that brief consolidation in the S&P, we've seen a nice push higher over the last week, moving really clearly through 5,800, made that new intraday high just yesterday at 58.59, just shy of 58.60. And today we're getting a little bit of weakness, probably tracking lower on semiconductors pulling back, but the level to which we've fallen today is pretty notable. It happens to coincide with basically the gap move we made from last Friday into yesterday's open, so we basically filled that gap. What we want to see is, if we're looking for immediate continued strength, we'd like to see this ledge that we fall into today on the short-term side held. Obviously, we can get back down to the 20-day moving average at around 57.40 and still be okay in any trend trade scenario on the S&P 500, Nicole. But, initially here, probably for short-term traders who have maybe been long over the last week plus, I could surely see some of them maybe tightening up some stocks, utilizing today's lows for a reason, take a little bit of profit if we violate that. Might imply that we make that deeper pullback, which could be somewhere in the neighborhood of, say, maybe 60 to 80 points down to that 20-day moving average potentially. So that's kind of what I'm keeping an eye on here initially.
Yeah, without a doubt. We watched volatility. We've seen a recent breakout to T71 in the most recent high. So a lot to watch here, particularly as we go into the elections and all that.
All right.
Take a look here at Best Buy. I mean, you're watching PC.
Just scanning some stocks. All right, S&P continues to drift lower. We're probably going to head lower for the next couple of days. So if you want a hedge, maybe do SPY or whatever. I'm just watching the IWM, which is making new highs. We're right up against supply now. IWM. NVIDIA still hasn't taken off.
Really trading in about an 8-point range here following that most recent earnings report. And that 8-point range at this point means now that we've pulled back a little on today's action, maybe a trader who's looking for a continuation of the uptrend here could be a buyer in this area because you're looking at a trend that is apt to hold that $95 area of support. It was really nicely tested with yesterday's lows. And if we can just maintain that level going forward, we're going to quickly see the 50-day moving average in purple.
Supermicro making new highs in the evening session. Supermicro.
It could be stated here
that a
short-term trader
has
risk versus reward for entry as long as the 50-day moving average is maintained by price
DJT. All right, so I took some off. Good. All right, well, I'll look for a...
This gets to be really opportunistic.
Okay, moving in the opposite direction. All right, so headed back towards the 50-day, 9 EMA. Dow, Trump media.
Of an upside move over what could be the next 6 to 8 weeks potentially. And that gives an area of about 110 to 111, which obviously for entry near 98 sounds fantastic if it can be achieved. But obviously everything has to play out favorably for us. So as usual, Nicole, traders need to have their exit strategies both below the market price and above it so that they know what they're up to should things play out.
I saw a couple of buy ratings too. I mean, Guggenheim had the buy rating, but it went down to $90. The stock is at $97. So I always find that's a little disconcerting when they have a price target that is at or below the current price target.
Yeah.
They did bring it down from 100, so from 100.
NVIDIA turning. Okay, NVIDIA is turning here.
But D.A. Davidson maintained the Best Buy at $117 price target, much better than the $97.95 where we are today. So that's
Okay.
by the way with today, folks. So that's one of the calls to watch. Then we have D.R. Horton. What's going on in the housing world as everybody's watching rates, right? D.R. Horton on your radar?
Yep. Yeah, you're absolutely right. In fact, as you just said, it's never as much fun when you get an adjustment or a price target that's beneath the current price level. But that's actually what happened on D.R. Horton today. They got upgraded at Wedbush today, and their new price target from Wedbush came in around 165, up from their 130.
IWM.
Here we got the stock.
Okay, NVIDIA is about to take a new high here. NVIDIA, watching NVIDIA.
So stock is up 30% year to date, better than 19% just in the last 3 months.
Okay, watching this buy order block right here. Watching that buy order block, looking for a push through this area. Like to see a push through this area right here. Maybe we can get that in the next few minutes.
Obviously, that last high calls out. It's just shy of $200 a share. So from here, that could mean maybe 10 points of upside. And maybe if you're utilizing that 182 downside target, that's about 8 points of risk. It's not ideal from a risk versus reward standpoint unless we trade through that upside target at 200 and we start talking about the potential to take maybe a 15, 20 point move over 200, which would just basically be the range we traded within. So a common trader approach is to just utilize the range we have been in, and if broken to the upside, just add the value of that range to the upside, like we just discussed with Best Buy, for example. So it does give the opportunity there, perhaps, but it might be a layered entrance approach, Nicole, where maybe a trader starts
Supermicro is still pushing.
and then wants to see things continuing, maybe trading through that 200 level before adding further, where things get a little bit more clear on the upside.
Meta, no follow through in Meta.
Future piece on Edgar Wackenheim, who is a big investor in home builders, and as a matter of fact, a really large position, and just saying that lower rates would merely be an icing on the cake, and that the home builders themselves are the cake. And while they've already run up, there's still upside potential, only because of one thing, and that is there are just not enough homes. So speaking positively about the group and saying the builders will continue to surge. He's a value investor. That was on Barron's.com. So thank you for all of that, Kevin Horner, Senior Manager, Trading Services Education Trading Services. Charles Schwab, thank you so much for being with us. Still ahead, we need to turn our attention over to Johnson & Johnson, pharmaceutical company reporting those earnings this morning, but there's still a lot to discuss when it comes to J&J, a little more intricate than you may think. We'll be right back.
All right.
Neil, that's my favorite client. Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full service wealth management, advice, and investment.
Need to trim those need to trim those nails. There you go. Claws.
Gotta run, Carl.
Okay, Amazon pushing a bit higher. Okay.
Have a choice in how you invest.
NVIDIA turning the corner under its own speed, not doing much off the lows of the day.
Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
S&P. Okay, getting close to 5,800.
Bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab.
S&P moving lower.
Management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network. Welcome back to the watch list. Time to break down the Johnson & Johnson numbers from this morning. JJ did have double beats and good guidance as well, but we're still under the hood of J&J. We remember the spinoff right here at the New York Stock Exchange for some of the consumer products. It's now Kenvue, and that has gotten some buy ratings of late, so that's had some good news. But what remains of Johnson & Johnson in the world of pharma? So Lee Brown is with us, Global Sector Lead for Healthcare, Third Bridge, and Matt Montefusco is with us, Wealth Advisor, Point Wealth Capital Management, LPL Financial. Thank you both for being with us. Lee, what stands out to you in Johnson & Johnson, and either in a good way or a big headwind?
Sure, thanks for having us on. I think the big story is the EPS beat. They came in ahead of consensus by 11%, and I think it could have been a lot stronger. Think about their R&D spend. They spent nearly $5 billion in Q3. That compares to $11.9 billion year to date. R&D investment came in over $400 million ahead of consensus. Had it come in closer to expectations, you would have seen another 10 to 14 cents to the bottom line.
Yeah, they talk about, I see what you mean. So maybe not as strong as what you had anticipated or hoped for. We think about the cancer drugs. That was certainly a bright spot. They mentioned the V-Wave acquisition. Another thing which potentially should help the company. I still remember all the talc powder situation. Is that totally done, Matt? Some of your thoughts.
No, it's definitely not totally done. I mean, Johnson & Johnson has around 60,000 lawsuits that stem from that. So that's probably the biggest headwind. Their oncology treatments were definitely a bright spot. Oncology treatments were up 19% year over year. And I think for them,
Okay, Supermicro popping.
Mostly positive, maybe more neutral. And I think for them, it's going to be about their future growth. And can they really
Supermicro popping. SMCI is popping. Trying to get through that 50-day.
That Johnson & Johnson is maybe late in the game too, but that they need to really focus on.
Yeah. Lee, what are some of your thoughts? I mean, we think about the oncology side of things. You still consider Johnson & Johnson a big competitor in this?
All right, Supermicro keeps banging its head on the 50-day. At some point, it's going to break through here, it looks like. Supermicro.
Did you feel that this is one of the power players?
Sure, I want to clarify.
Okay, Supermicro.
With the bottom line, I was just underscoring the fact that it would have been stronger had J&J not elected to invest into its innovation. Oncology is certainly a huge bright spot in the innovative medicine segment. You're looking at Darzalex. It's really moving into earlier and earlier multiple myeloma treatment. That's a much bigger market than, say, second or third line treatments. It's doing phenomenally well. Its prostate drug, Erleada, is also performing extremely well. And then lastly, although it's taken some time, its CAR T-cell therapy, Carvykti, is just rocketing. If I recall, sales were up over 80%. That's an acceleration from an already powerful performance in Q2, where sales were up 60% year over year.
Right, understood. So when you take a look at this, Matt, I mean, what do you want people to know? Would you consider this stock a buy? What is it that you're still hoping for J&J as they sort of streamline what it is that they're doing?
Yeah, I mean, I think the big.
All right, Supermicro on the move.
Less about pharma. I mean, pharma has done great for them. I think 11 out of 13 drugs this quarter outperformed. For them, it's going to be about the med tech space, and investors should really be looking at, can J&J invest heavily? Can they get it? Can they be ahead of the curve? I think healthcare is really at a big inflection point, with technology being more intertwined over the next 2, 3, 4 years. It's going to be up to Johnson & Johnson to really make sure that they are at the forefront, that they invest properly, and that they really have the right technologies in place for when that switch happens.
Understood. Lee, I want you to leave us with some of your final thoughts here on the innovation and what could come going forward for J&J.
Yeah, I think the comments around the MedTech division resonate with me. If you look at orthopedics, really a lackluster performance. Same with surgery. The real bright spot in the MedTech division clearly was cardiovascular. Electrophysiology is doing really well. They have a portfolio of products that continues to really see some market share. I also think they're doing a lot of smart M&A in that space. You saw previously Abiomed. Now we've got Shockwave. That was a $12.5 billion deal earlier this year. It contributed nearly $230 million in the quarter. It really pushed up the cardiovascular franchise's growth. And then you're seeing this deal on the V-Wave. This is a novel implantable device. It's called the Ventura atrial shunt. I should say the interatrial shunt. This could be a first of its kind device in its space for patients experiencing heart failure with reduced ejection fraction. So where J&J might look to plug some of its growth efficiency.
Okay, Super Micro looking for a follow through.
In MedTech to drive innovation.
A little profit taken there. A fair value gap. Probably have to fill it first.
All right, thank you both. Lee Brown and Matt Montefusco, thank you both.
Looking forward to get through the 50-day.
I want to just take a look at the Trump Media stock, DJT, Trump Media and Technology. Those shares closed up 18% yesterday. A lot of the bettors started to think that Trump was leading over Harris, and that was one of the reasons for the surge in Truth Social and even its own new spinoff of a social.
Okay, NVIDIA, no follow through yet. Need to stay above 132, 133. Apple, watching Apple.
Before falling today, but it's been 79 at the high, 11 and 75 at the low. But definitely a name to continue to watch. It's been halted. It's now resumed trading. Thanks for being with me. I'm Nicole Petalides. I'll see you tomorrow.
This election season, stay out of the muck and the mudslinging. Schwab Network.
Okay, looks like Oklo wants to go again.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed.
Okay, Super Micro pulling back has a tendency to do this. Rejected at the 50-day again.
When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
A lot of the best and brightest students, because it's a bonus data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So, how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through
Okay.
staggering amounts of data. You certainly see patterns. Context is
AMD trying to turn.
I think the best traders I've seen.
NVIDIA tried to turn. It looks like it's still trying.
Certain parts of your skills.
Okay, kind of a weird day. Trading wise, it didn't feel like there's too much going on. Nanonuclear is down near the morning low. Nanonuclear, that might get stopped out. I'd have to drop about 30, 40 more cents.
I've traded
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Okay, super micro profit taking. Super micro, like nice little pop and some profit taking. ARM, okay. Bitcoin sitting on top, prices sitting on top the channel at the highs. Okay, it's 3 o'clock. We're still drifting lower, 3 o'clock.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in. Good afternoon and welcome to Market on Close. I'm Oliver Bennett. We've got an interesting session as we head into the last hour, trying to recover lost ground, but not doing a great job at it right now. The Russell 2000 is up, but the NASDAQ down pretty handily. This morning, we got a few items that were hurting the semiconductor group. First, possible limitation of sales into the Middle East, but really the big one was ASML, who, as I understand it, accidentally published their earnings early. So something between a leak and a misclick. Whatever it may be, the information's out there. The market did not like the message from a pretty important European semiconductor business that supplies to some of the big ones like Taiwan Semi and others. We'll take you through the implications of that, and that has been the story of the day. So tech's down a lot. Russell is up a decent amount. Maybe something worth noting there too. A pretty good spread there, mostly because the NASDAQ's down, but also small caps are up, and we're getting the first real meaningful bond rally in a little bit. So that is also playing a role. So it's a session that's got some micro stuff and some macro.
Okay, we got an hour, a little bit less than an hour to go now.
Big moves from ASML, it's down double digits. Chart next to the rest of the semiconductors has already been a weaker one, but if you take kind of a close look at the way ASML shapes its trajectory compared to the larger semiconductor basket here at home and abroad, the SMH is pretty far-reaching. It actually does overlap up until basically 3 months ago. And since then, there have still been some similarities. In fact, over the last month, the shares of ASML and SMH both rose together, not as much. This is where our technical stuff comes into account, though, because remember, we talked a lot about how the
S&P is still moving lower. Just feels like traders are taking profits into strength. We've had a nice run up over the last couple of weeks. Okay, let's look at the New York FANG index. Before we do that, let's take a look at junk bonds. Junk bonds. Okay, a doji, but not selling off. We are below the 21-day. We're above the 9 EMA. Bollinger Bands are tight, so that's telling me, just looking at junk bonds, that we could see price action move sideways for a few days. I'm talking about the S&P and the NYSE. Let's look at the New York Stock Exchange. New York Stock Exchange coming back from the highs. You can see that over there. New highs, new lows. We're not going to go up every single day. So if you're depressed because the markets have pulled back a little bit, breadth still looks pretty good. Advanced decline is making new highs. We're probably going to close on a blue stick down here. If we close a little bit lower, that'll tell us that we have a bearish to neutral bias tomorrow. Okay, number of stocks making new highs. I just keep thinking that rotation is what we're seeing. Out of tech into value. So if you have 100% tech, maybe you want to take a little profits off.
Now, looking at some of the other news flow, there is a little economic impact in today's session.
Nanonuclear pulling back. Nanonuclear.
Dropping, and it didn't find any bounce. WTI up a tiny bit off the lows, almost $71 now. Story there, compiling with the recent reports of low
Nanonuclear is at the low of the day.
a little extra supply, but crude also geopolitically influenced, which means that if things
Nvidia pulling back, no follow through. Nvidia chewing through some order blocks. Okay. Watching TTM.
but not perfect. It's very reasonable to find inflation implications from crude oil as a leader among commodity prices. But lately, the two had departed a little bit, the 10-year yield from WTI. But that still is just adding on to the fact that the macro story today is one that is about little looking more like growth concern than anything else, not necessarily inflation or anything dramatic. But we did also just
Okay, so that's that. Let's look at the New York Stock Exchange, NYSE composite. Okay, so 2 days up, 1 day back. Okay, we could come down to the 9 or the 21 day. With the call heavy VIX, with the call heavy OPEX on Friday, we could see a couple of days of lower. Nvidia pulling back now. Nvidia.
Right at 67, so perhaps
RSI is still above 50. Stochastics MACD are still bullish. Volume looks okay. New York Stock Exchange composite. Let's look at XII. This is what institutions have in their core portfolios typically. Okay, we got a blue elder stick. All this is telling you is pause right now. We had a pause a few weeks ago. Came down to the 21 day, bounced. Made new all-time highs on XII.
But the 5 that are down are engulfing the 6 that are higher.
Yeah.
Energy, information technology, and healthcare are just overtaking.
Yeah, and one of those matters more than the other two.
Right, and a bunch of stories.
All right, so today's not the best day for tech. XLK. Tech with a reversal, taking out 4 days gains. Okay, back to a breakout level. All right, volume. Okay, so it looks like we might be resetting oscillators, reset for the next few days. Doesn't mean we have to go straight down. We could be moving sideways. We could bounce here. We could do all kinds of things. We'll watch for that the next couple of days.
Nvidia was high, just like the rest of the market's high. And what does that make it? It makes it more fragile to things like this, right? That's why, but I think Apple making a new high today is pretty solid news.
That was
I thought the banks was pretty solid, although they are all way off their highs, including Citigroup that's down pretty handily today. But the banks have pretty much come through earnings season unscathed. But now you get to this Nvidia. Is it a
All right, so we are headed down to, looks like 5,800 is within reach now. I see a lot of you looking at 5,800.
You probably do, because Nvidia is different than the others.
Yeah, I think so too. The other thing as well is it's still a story about disappointment, not contraction, not some big breakdown, not like a fraud. You know, it's not like some of the concerns.
Okay, most stocks are showing the same thing. We're starting to see an escalation lower now. Okay. All right, we've got 52 minutes to go. $52 minutes to go.
Both in individual names and in the S&P 500 in general, the market gets more fragile to any type of bad news. The bar is high going into this earnings season to start with. So therefore, any misses, any hiccups, anything that might be construed as weakness it could hurt some names along the way. So I think
We've already seen that a lot.
All right, looking for a bounce. We are mushing down to the 5,800 level. Histogram is red, so that's telling you to, if you're not short and you're thinking about longs, don't do anything at the moment. Real estate leading, okay. Real estate, RKT, Rocket Mortgage, XLRE, real estate. Nice bounce at the 50-day, showing strength. Just looks like a rotation to me. Yeah, the S&P looks pretty nasty right now. S&P looks pretty nasty, but it's rotation. Okay, it doesn't mean that everything is selling. It just means there's some rotation. Let's look at materials, for example. Materials near the highs, a little shooting star. XLF, financials at the highs. XLI, industrials, yeah, at the highs, pulling back a little bit. Healthcare, XLV. All right, back below the 50-day. XLU, utilities, bounce. XLP, consumer staples, bounce. Okay, so out of tech, XLK, rotation out, rotation out of tech. Also, real estate, obviously real estate doing well. What's transports? IYT. These look good earlier last week. Yeah, we finished on a big candle on Friday, new highs. So we'll have a neutral to bearish bias for tomorrow on many of these. Communications, XLC. Okay, that's at highs.
Even though banking revenue has improved, there's still
It's semiconductors, tech. Semiconductors pulling back after a big move. So if you want to sell call credit spreads overhead, maybe that's an idea. Call credit spreads overhead.
Is pretty optimistic actually about what's about to happen in M&A and capital markets. I want you to listen to what Todd told me in our exclusive interview and get your take on the other side of that.
I think we're in the process of having lots of M&A get started. I think we're seeing people want to transact. People have to kind of get back to, the transaction business. So, across our portfolio, we're seeing lots of kind of merger and consolidation discussions going on. I think some of them are in their earlier days, but I think the animal spirits are coming back and people want to get back to it.
Leslie, what do you think? It's been a while since we've heard the animal spirits.
Yeah, but we have heard about green shoots for quite some time, and I think.
All right, so tech, semis, caution, obviously, after this big down day. NVIDIA. Okay, NVIDIA tried to bounce. Doesn't look like we're going to go very far. Pulling back a bit. CrowdStrike, a lot of software. Software sector, actually not that bad. If you look at the software sector, at the highs, it's actually pretty good. 50-day, look how the 50-day is turning up like that. Still, companies like Microsoft aren't doing that great, but CRM, Salesforce, that's doing okay. What else? Biotechs, XBI, that ended the week with a nice pop. Okay, biotechs look okay. That's a pretty risky proposition. If you're buying biotechs, you're not worried about the markets. You're thinking the same thing I'm thinking, rotation. IBB. Okay, we're above it. Okay, so it looks like rotation. I can't see anything else at this point. If all the sectors were selling, it would be a different story. If all the sectors were at extremes and turning back down, yeah, I would say that that's pretty bearish. Dow Jones. Let's take a look at the Dow Jones. Okay, components. Dow Jones components. Let's see. Where are we? Dow Jones components. Here's the composite. Dow Jones composite. Okay. Okay, 65 stocks, about 50-50, about what you see on the S&P right now. Very interesting. The S&P is currently, okay, so we went from 330, 340 stocks green on the day. We're at 50-50. Actually, we're a little bit more than 50-50. We're at 260 stocks green and advancing versus 240 declining. So we're essentially, the declining ones are on higher volume too. We're essentially 50-50 right now. So we could see a doji. We could see more downside. We need to see more stocks selling. Okay. Keeps telling me rotation is what we're seeing. Okay, about 50-50. These are the Dow Jones composite. Dow Jones composite is basically Dow theory. Okay, Dow Jones composite is Dow theory. The whole idea that you produce products, the industrials produce products, they have to ship them out via the transports. Transports have to get to the end location. That involves energy. So those three industry groups are what drive Dow theory. It's still applicable. Applicable. All right. So Dow theory. All right, we're coming back in. So this is telling you caution. Okay, so no big deal. If you look at it from a weekly standpoint, okay, the weekly trend, okay, is above the 10 EMA. Are we due for a pullback? Probably. We talked about that last week. Maybe we see a pullback. Okay, but we're in a bullish trend. Volume looks good. All right, so that's the Dow 65. Let's look at the Dow 30 components. Okay, Dow 30 components. Apple with a doji, long-legged doji. Okay, here's the Dow. Okay, we're at 50-50 here as well. Okay, a little bit more than 50-50. About 55 green, 45 red. Okay, Boeing with a bounce. Okay, do we follow through, Boeing? Okay, so it just looks like tech and semis are seeing outflows. Money is going into value. So you would look at value. Okay, let's say that you're looking for investment ideas, not day trading. Okay, you would be looking at the value sector, SPHD. That should be making new highs. It is. That's another reason to believe it's rotation. Okay, SPHD making a new all-time high. Okay, and retreating. But still, there's a lot of rotation into value. The components of SPHD, okay, are all value related. Okay, so these names are what we're seeing moving and money flowing in. Utilities like PPL and Edison, Duke Energy, Philip Morris and Altria, General Mills, Kraft Heinz, Kellogg. You even have some tech in here, IBM. These all pay good dividends. AT&T, Verizon. Okay. Kinder Morgan, Merck, Gilead, Johnson & Johnson. Let's look at IBM. IBM, I mean, that doesn't look bad. It's just consolidating. So am I worried about the markets? Not really. It's never comfortable if you're long for the markets to pull back on you, but it doesn't go straight up every single day. All right, so tech is definitely semiconductors closing at the low of the day. Semis, this is probably headed to the 50-day. The faster it gets here and the faster it can bounce. There's a big volume by price band right in here. All right. Okay, Amazon. Amazon with the doji right at the 21 day, 50 days below. Bollinger Bands are tight, so we could see price stay between 195 and 180. Makes sense. Amazon. Okay, S&P. What is S&P doing? S&P. Okay, S&P trying to bounce. S&P. Okay, so if we close right here, we'll definitely have, obviously, a bearish bias for tomorrow. No big surprise there. We'd need a close above yesterday's high or yesterday's close to give us a bullish bias, so that's not in the cards for tomorrow. All right. Starting to see some short covering now. We didn't get all the way down to 5,800. Got close. All right, Amazon's starting to motor higher. Amazon. S&P continues lower. Yes, one of the hardest things for new traders to get used to is, you're always thinking bullish, bullish, bullish. Well, most of them anyway. And, we don't go up every single day. We've gone up for 5 days in a row. Well, on day 3, which was Thursday last week, we had a doji on the S&P. And then Friday we were up, made a new all-time highs to close the week. We had a bullish bias. The bullish bias turned out to be correct. We opened higher on Monday and closed near the highs of the session, new all-time high. But we're not going to go up every single day like we did a few weeks ago. We did pull back from all-time highs right there, back to the 21 day. Looks like that's where we're headed at a minimum. So you got to get used to the idea that we're not going to go up every single day, and you have to be taking profits into strength, because if you don't, and you also have to be looking at other sectors, because if you stay in the same sector and 100% of your portfolio is in, or 100% of your trading account is in tech, you're probably suffering a little bit today. So that's why I've been talking about taking profits off in the strength. Some of you took puts today. Mondo, I see you with puts. Michael with puts. Okay. I know this seems like the obvious thing, but we're due for a couple of days down. We got a VIX expiration tomorrow. It'd be pretty funny if we all of a sudden start seeing shorts covering like crazy here with 37 minutes to go. 37 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Tuesday the 15th. We had a down day today after 5 days up. We finished the week on a bullish bias, so I'm not surprised. We were expecting a pullback tomorrow. We got it 1 day early on a VIX expiration, or expecting or anticipating we could see OPEX on Friday with a down to a bearish end to the week. Instead, we're getting it today. Brent also mentioned that this morning in the Gamma update.
just over 2 weeks. That level though, the all-time high level, 234.82, off a little bit from that, but it did hit it earlier today, Scott.
Part of the point here, Steve, is that it feels like we're going to have to wait a good while now to really see what the demand picture is going to look like, specifically due to Apple Intelligence, and what that really is going to mean for the upgrade cycle.
Yeah, and that's exactly it. And also just note today in that iPad announcement and for all the other.
Okay, so we'll have a bearish bias for tomorrow, so you should anticipate that we could see more downside. What does that mean? That means, you know, if you have profits, maybe you want to reduce your risk in the positions that you have profits in. Maybe you want to take some of the risk off. Let's say you have 1,000 shares of, I don't know, Wells Fargo. What's Wells Fargo doing? Wells Fargo was up, right? Okay, Wells Fargo made a new high. So if you came into the week, Wells Fargo's been on the watch list for 2 weeks. If you came into the week with Wells Fargo up and then you follow through today, maybe you want to take some profits off. If you got 1,000 shares of Wells Fargo, maybe you take 500 off. You keep some of that as cash on the side. Let's say you bought some Roku last week or so, and you know you're up on Roku. It's at the highs. You're expecting a breakout. I'm expecting resistance until proven otherwise. So let's say you in Roku for the last week or two, and you finally at a profit. Maybe you want to take some of Roku off. You know, maybe you're in Caterpillar. Okay, Caterpillar pulled back a couple of days, but maybe you bought Caterpillar a couple of weeks ago or 3 weeks ago, and you know you didn't get out at the high, but you still got a nice profit. You might be saying to yourself, you know what, I'm going to hold on to it. I'll look for it to bounce tomorrow. Maybe it does. I'm just saying that consider, you know, reducing your risk. Maybe you only you have 1,000 shares of Caterpillar. Maybe you reduce it to 500. You still look for the bounce, but you're taking a little risk off. That's what I like to do. It's not for everybody, but when you're day trading, short-term swinging, and you're faced with a VIX expiration tomorrow and a call-heavy OPEX on Friday, maybe you want to consider taking a little profits off. That's what I've been doing. So yeah, it stings a little bit on some of these. You know, NVIDIA, I'd like to see higher. I do have January 2026 verticals. So this pullback actually isn't hurting that much. Let's see what NVIDIA looks like here. I have NVIDIA 2026. Yeah, it's off. It's off $18 per contract. Actually, it's $9 per contract because I have I got to take half. Okay, $9. Okay, so $9 per contract. Those are the January 2026 135 140 on NVIDIA. Okay. Let's see what DJT looks like right now. Let's see, S&P. S&P, nice little bounce. Shorts, I would just deem this shorts covering for now. This would have to put together a half dozen or more candles in the opposite direction to think it's new money coming in, more than just short covering. This just looks like short covering to me. We will have a bearish bias. Even if we rallied 10 points from here, we'd still have a bearish bias for tomorrow. Even 20 points, we'd still be having a bearish bias to start the trading day tomorrow. It's in our DNA, and we're going from liquid to more privates. And so we've launched. Okay, Home Depot. Home Depot had a nice bounce. All right, so that's another example. Okay, let's say you took Home Depot a couple of weeks ago when Helene was coming through town, and you still have a profit here. I would take some off. I mean, I just would. I would take some profits off if the markets pull back 2-3%. You know, you'll be sitting pretty. You'll have cash. You'll be ready, and you can keep some on. Maybe if you got 1,000 shares of Home Depot, maybe you take 500 off. You know, and hopefully it holds up here. If it starts to break out, you can always add back. But I would just see where it goes between now and Friday. Okay, Amazon. Let's see. IWM, of course. IWM. IWM is doing well. Okay. Maybe, I don't know. IWM, I kind of got a sense that there's rotation into small caps after 4 days off of the 50-day. We bounced at the 50-day last week on Thursday. Big candle on Friday. So that gave us a bullish bias coming into Monday. We had the Monday close higher, and today we're higher than yesterday. So that looks pretty good. We'll have a bullish bias on IWM for tomorrow.
Especially here on the RIA channels, that's increasingly growing versus some of the wirehouses that, been the traditional.
What's Intel doing? I see Jeff talking Intel. Intel. Okay, Intel pulling back. Yeah, Intel just can't get out of its own way. What's Taiwan Semi doing? Taiwan Semi? Okay, big bearish candle today. So we'll have a bearish bias on the semis tomorrow. Okay. We'll have a bearish bias on semis tomorrow. So if 100% of your account or your trading account is semis right now, you might want to take a hedge. Okay, S&P 500. So we'll have a bearish bias for, okay, looks like another bear flag.
It's changing now. Big time, yeah. And you think that's just going to continue to go that direction?
I think the market's changing completely. I think that these interval funds, especially the liquidity that you have, some are like 5% per quarter, which is better than no liquidity or 5-10-year lockup. It's a big deal. No K1s, which has been something that's a lot of people don't want to deal with. So that's a great thing as well. And being able to get
okay, we got a lot of negative gamma down here below 58.25, was it? We said 58.25. That's where we shifted to a negative 58.35. 58.35, we shifted below 58.35. It becomes negative gamma. So what happens with negative gamma? Well, dealers, in order to hedge, many times will short futures. That exacerbates the downward movement. Okay, so we need to see more puts fill in here.
Where she is finding pockets of opportunity right now in these markets. We're live in Beverly Hills. We're back on the panel after this.
Okay, Tesla back below 220. Okay, yeah, semis going to have a bearish bias for tomorrow. I'm not telling you anything you probably don't already know. If you want to hedge, maybe you want to hedge with, I don't know. Let's take a look at a few hedge ideas. Okay, SPXU. Okay, SPXU. Coming off the low. I don't know. These are deteriorating assets, so look at the weekly. If you bought SPXU anytime this year, it was a losing proposition, except for a few weeks where it actually pushed a bit higher when the markets were pulling back. If you take, let's see, SPXS, same idea. Deteriorating asset. Yeah, you might get a couple of days. Probably the best thing to do is SPY puts. I don't like the idea of buying them at the low of the day, but we definitely have a bearish bias for tomorrow. So it's not like there's not a high probability that we'll push lower first. I just wouldn't go too far out of the money if you're going to buy SPY puts. Go like maybe $1 or $2 out of the money. Closing at the low of the day, we haven't done that in a while. S&P, haven't done that in a while. Okay, SPY, moving lower. Okay. Okay, SPY, let's see. Okay, looking for a bounce. We had a brief bounce, short covering, and then that rolled over again. $579, $580, $575, $575. Okay, let's see, SPY. 580, 581, 582. We dropped to negative gamma on SPY. Okay, 582 right there. 582, 581, 582, 581. Right there. That's where we flipped to negative gamma. Okay. Okay, SPY. S&P. 560 is the put wall. I don't see us getting there.
Who's back with us now? It's good to see you again. Welcome. Great to have you on our program. You know, I have to admit, I didn't know, and I don't think many people out there watching would know that Franklin Templeton is now a top 10 alts manager. Yes, it is. It sort of happened under our noses here, and you've done a number of what you
All right, SPY.
acquisitions. Why?
Oh, I mean, there's definitely a secular.
All right, so we're going to have a bearish bias for tomorrow. If you're hedging, maybe you want to buy near the money puts. If you're going to buy them at the low of the day, I'm not advising it. I'm just saying that if you do buy them, we do have a bearish bias for tomorrow. So we'll probably open up lower, I would think. There's a good probability of that.
What does the runway look like to you? Just feel like, as I discussed with almost everybody here, they don't think that we're near the end of the runway. That there's a long way ahead of us where assets are going to continue to flow here.
Well, I think again, I don't think people are rushing to be a public company CEO. I think that they are happily staying in the private markets as long as there is the ability to be funded. And so, you see it. I mean, the average company used to go public after 3 years. Now it's 10 plus years. So as long as that's happening and you have this increase in it, you're going to have more and more investments there. And I think what's happened so far is it's only been the accredited investors. Now it's about, this is what CASE does, it's about democratizing so everybody has access. Because think about those early growth years of a company. It used to be post-IPO, everybody had an opportunity to invest in it. Now, you have to be accredited investor.
All right.
Some people suggest, Matt,
Looking for a bounce.
everybody's talking about alts.
Okay, Amazon.
Every part of alts. How would you counter that?
Well, I would say that many years ago, no one was talking about alts. And those are very lonely days, but especially as an entrepreneur building a business around alts. But look, it's definitely the topic. You've seen really a transformational moment in how investors are thinking about getting the best returns, creating portfolios that have true opportunity. I think, as Jenny mentioned, in the private markets, many companies are not going public. So how do you really participate in the growth of private companies and its private markets and private market investing? And firms like Franklin Templeton that have been focused on marrying their traditional business and expanding it with alternative investment capabilities really make them the ideal partner to be on our platform. They have the DNA, they understand the advisor community. They've been doing that for decades with their traditional business. And now with this additional added alternative investment capability, we're really excited to work with Franklin Templeton.
How do you bridge these two cultures of sort of investing in private markets versus public markets, educating your clients, educating your advisors?
Yeah, no, this is actually, a huge part of this because traditional private alternative managers will go into a pension fund, you sell a pension fund, they know exactly what their cash flow liabilities are for the next 20 years. But you go into a financial advisor, you know, some clients should have zero allocated, and some clients maybe should have 40% of their portfolio allocated. And so that tip of the spear of that financial advisor who is determining what is suitable for the client. Because again, these are illiquid assets. So number one, it's education, and we've built a alternative, right, Franklin Templeton, which is education. Essex Case has a great education platform for advisors. We also built a team of specialists who can sit down with advisors and talk about what's appropriate. But the challenge the advisor has is they put the client in the wrong vehicle.
All right, so a little humor there from Steve Martin. My Blue Heaven, you want to laugh. That is one funny movie. Just thinking about it. Oh, man. I've seen that movie a couple of dozen times with friends.
Now we're entertaining the idea. Some have suggested 50, 30, 20. We talked earlier. How are you thinking about that?
I think the technology now enables people to manage portfolios.
All right, so we got 20 minutes to go, 20 minutes to go. And the market's not having it. Market's just extended and ready for a little pullback. Now, if you look at the size, you look at the range today, you look at the range a couple of weeks ago, we've had the same thing for a few days, and then we wound up moving higher. I got to believe we're going to move higher into the election and into year end with occasional pullbacks. RSI is still above 50. Volume still looks good. We just need to reset some of these oscillators, maybe. I don't know. And all I can see, given the advanced decline, stocks advancing versus declining, we're still at 260 stocks advancing versus 240 declining on the S&P. 260 advancing, 240 declining. So it's almost 50-50. But what that tells me is, okay, look for rotation. That's what happens when we get a little extended in something like tech. Okay, so we go and look at the sectors just to verify. We look at our sectors to verify, and what do we see? We see value, although it did pull back a little bit from the high. Tech is by far suffering a little more of the profit taking. Value, see some rotation, but this is pulling back too a little bit, so it's 50-50. Okay, and New York Stock Exchange. So I'm not worried about the markets. If you're worried about the markets, then maybe you want to buy some puts, even if the low of the day. We do have a bearish bias for tomorrow. Number of stocks making new highs today, 192. Just take this, subtract the new highs minus new lows is a great calculation and a good indicator to watch. Advanced decline, New York Stock Exchange advanced decline in the lower panel. That made a new high today. We do have a blue elder stick, 2,000 stocks on the composite. Is that a reason to abandon ship? No, it's not. It's just a reason to think that we could see something like rotation. Okay, now if you want to day trade, that's a different story. If you're day trading and you've held puts all day, you still got a shot for these puts to add more to your gains tomorrow, even though we're bouncing towards the end of the day. Shorts will take profits, but with a bearish bias for tomorrow, given where we're closing, we could open up at 5,800 or a little bit lower and then bounce or not. So if you have puts, maybe you want to keep some for tomorrow. My strategy has been to be reducing exposure, take a little bit less in the tech exposure category. Okay, watching NVIDIA, I have the positions I have in Micron, for example, are December, so I'm not worried about that so much. Also, NVIDIA, I have January 2026 calls, 135, 140. So got plenty of time. Those are down $9 a contract, so that's not a big deal. I'm still up on the position. Supermicro, okay, looking for a bounce there. Tesla, All right, the longer it lingers here, the more worthless the iron condor becomes. Okay. Apple pulling back a bit. Tech, I'd be cautious with tech next couple of days. So let's see how tomorrow turns out. But we got 16 minutes to go. 16 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, the 15th of October. Coming into the closing bell, 15 minutes away.
Last week was pretty busy, 11 IP and more than 1.5 billion. Seasonality wise, does it typically slow down the last couple months, or should we expect something different? Because it seemed like last year it petered off pretty quick around this time.
Yeah, I think you're right. I think it slows down. I mean, Q4 is good for the market generally, for the broad indexes, but you're correct, especially right around the election. You're probably going to have a lot of radio silence for that 10 days around that. And that's mainly because companies just simply don't know yet who your winner is going to be. It's too close to call, and also where your Congress is going to be. So in some cases, they're going to wait to see how that plays out. And I often think of it that, we operate in the market on headline speed, and the markets for the IPOs.
Supermicro bouncing.
Call it regulatory filing speed. So if they have to do
It popped, and they sold into that pop a few minutes ago. Okay, they popped it right around 250, and they sold that candle. A little liquidity grab on Supermicro. Okay, SMCI, Supermicro. Okay, there was not quite a liquidity grab, but you know what I mean. They popped it up here and they sold it. Now we're starting to bounce Supermicro. Supermicro starting to bounce.
And the trends, as you mentioned, the reasons to expect to pick up. Take me through that. We've got about a minute.
Yeah, there's a lot to like. So, I mean, you have a very accommodative Fed, we think. Good economic data, probably 3% GDP. You have, 12% earnings growth. 14% earnings growth expected. So, and the markets, depending on where you're looking, if it's the S&P, you're at an all-time high. The Russell 2000 is about 8% off of that. So, a lot to like in terms of the overall market environment. And I do think that once you get some clarity in and around interest rates and where they might be going and where the regulatory environment is going to be post-election, 2025 can be a good year. And also,
Apple faded back into the call walls, below the call wall 235.
Seems like we should expect the
Walgreens Boots Alliance, WBA, that was most active today. Okay, that cleared the 50 day. That's what we want. That's what Supermicro to do. WBA is what is
from the NASDAQ. Got that developing story in the solar world. Jenny's in the studio and the newsroom, rather, markets correspondent, and host the next gen. Looking at in phase, down pretty big and kind of adding to a very choppy year.
I mean, it doesn't feel like it's anything abnormal to see Enphase honestly down 10%. But frankly, this name also can make jumps and maybe on track for slower growth next year, and they gave some pretty substantial reasons why, and did also issue some guidance now below what the street is expecting. But they downgraded shares to sector perform from outperform.
Okay, NVIDIA trying to grind off the lows. Looks like a little short recovering. NVIDIA. Okay, NVIDIA. If any semiconductor manages to move, I would think it'd be NVIDIA. If it moves at all tomorrow. I'm not saying it will, but if any semiconductors move tomorrow, it'll probably be NVIDIA, I would think. Okay, you can see all of these fair value gaps here. Okay, so we're coming back up to test it. So we could turn back down after testing these fair value gaps right in here. Those two red boxes. Watching TTM, end of day, TTM. Supermicro also turning. Supermicro is turning up. Trying to turn back up. Supermicro.
Compact home battery that does hold energy generated by solar is now adopted. So Tesla, if it's successful in driving the conversion of that Powerwall 3, Enphase would then lose this inverter share because the Powerwall 3 does include its own integrated solar inverter. So finally, third, they mentioned that battery demand has been strong this year, but we could start to see that wane in the back half this year. They did mention that, well, battery demand has exceeded expectations. They could continue to see that, just expecting a bit of a slowdown. So there was somewhat of a bright spot in which the note ended, but I mean, yeah, you look at the solar space and there's the clear winners and losers. There's the haves and have-nots. I mean, thankfully this name is not looking anything like Solar Edge, but
All right, so watching Supermicro.
Yeah, okay. It's a pretty big move. It's definitely having some reverberations through the sector, but one that has been quite sensitive to any negative surprise. So bulls leaving, never going to be particularly inspiring, and it seems like that's a whole group getting blasted. Got our big picture discussion to take us into the bell. 10 minutes for stocks to right themselves. Doesn't look like it's going to happen for the NASDAQ. Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard is saying, away off with their head.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in. Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Stocks heading into the bell.
Okay, Amazon.
Right now is that
Catching a bid, Amazon.
most of the session, thanks to an ASML guidance. Kevin Gordon joins us alongside Colin Martin. We mentioned at the top of the show, we've got some micro stuff with stocks on the semiconductor side, but we've also got some macro with data and a decent bond rally. So good to see you both. Mr. Gordon, get us started here on the stock side. Should we be like scrambling to reprice semiconductor earnings right now?
Amazon catching a bid.
I don't know about scrambling. I think, it's part of a broader story and a leadership shift that, it's not just been evident in semis, it's been evident in the broader tech sector, where if you look back over the past couple of months, yes, even though tech has done relatively well off of its
Microsoft turning.
early August low, it has definitely ceded leadership to other parts of the market. And I would say other sectors that matter.
Microsoft shorts are covering, looks like.
Up as much in the early days of this bull market, but as you've seen it mature and grow more, they have really taken more of a leadership status, namely financials and industrials, which were, in the spotlight yesterday.
Okay, we're starting to bounce. The futures are starting to bounce.
So I think that's part of the bigger story, in addition to the fact that you're not really seeing any sort of life being breathed into the traditional or classic.
Okay, Amazon on the move.
It would tell me that the tech sell-off or the semi sell-off is a little bit more idiosyncratic in nature and not, some sort of dire economic message.
Yeah, good point. We got low vol funds doing all right, anti-beta stuff, factor-wise. But to your point, the moves are pretty muted here. And you got banks up, consumer discretionary. So, yeah, point taken. Colin, what about the bond situation? I mean, I don't know. I didn't think Empire Manufacturing was a big print, but I mean, it's a big miss. And we do have a decent bond rally. How would you characterize today's strength in comparison to the last several weeks of bond selling?
Well, I think it's just a modest reversal of what has been a relatively large up in terms of yields. We got this repricing after we saw a significant decline in Treasury yields. Then we started to see some stronger than expected data with, of course, the last jobs report sending yields back to 4% or higher. We've been in the camp that we're not expecting yields to move significantly higher from here because we just don't think we're going to see any sort of re-acceleration in the economy or inflation, more importantly. I mean, the economy is strong, it's been resilient, but we're not necessarily expecting a re-acceleration. So if we get a day like today where that Empire Manufacturing number was very weak relative to where we've been over the past few years, I mean, that alone isn't enough to usually pull yields down. But if you get that number on otherwise light economic slate, you get, some stock price.
All right, Supermicro starting to turn. Yeah, that's the only reason. I mean, Supermicro, I would only trade options. I would not trade shares, even though it's a more affordable at $45 or whatever. Supermicro, $47. I don't want to trade. I don't want to trade shares just in case this thing implodes. So I have a maximum defined loss, the cost of the option, cost of the position, So yeah, I'm not trading options. I mean, there's always that risk that they don't file.
At the end of the day, the price of gas impacted by the price of oil plays a huge role in that. And you do tend to see a relationship between
My trades tend to be intraday anyway.
Treasury yields. Oil's been, we see these ups and downs on a day-to-day basis, but if we look at the past, the recent history, it's traded in a relatively tight band. Unless we see a huge move in either direction, rather, I don't necessarily see it sending Treasury yields significantly higher or lower anytime soon.
Okay, so more kind of a non-factor at this point. I think that's an interesting take. Kevin, I don't want to push too far on a single session, but the other thing too, when I see yields down today, kind of a notable first move in a while, bonds rallying, and then that's kind of the day where the NASDAQ goes down, the Russell goes up. Certainly this could be coming just from the chips, but I know you know where I'm going with it is like, should we be mindful for possibilities of like that rotation stuff again at all?
You should be mindful of it, but also mindful of the fact that a lot of rotation has already happened in certain parts of small caps. So, we bring it up a lot in terms of the reference to higher quality or profitable small caps, but we bring it up a lot because it's still happening and it's continuing to happen. So
Amazon, okay, Supermicro
is still struggling to not only get back to its all-time high, but bumping up against that ceiling, even just this year, whether it was post the June CPI report or post the Fed cut. I think the story is still much more so what's going on under the surface of that index, but also what's going on under the surface of the NASDAQ. I mean, if you're looking at the NASDAQ or the S&P or all NYSE stocks today, Brent is for the most part flat. So the fact that the indexes are being dragged down by, the mega caps is still part of the story where the churn has been, more positive under the surface of the indexes in the second half so far of this year. Pretty much the opposite of what was the case in the first half.
To that point, the follow-up, Kevin, is on the regional banks. To see that sector trying to break out today while the market's kind of so-so, regional banks up 1%, coming up against this area technically where I think if you're a chartist, you may not say it's a breakout, but if they do, how important is that and what role does that sector play in your assessment of earnings risk and just kind of general risk going forward?
I think the move is notable, but I think the more important story is what comes after the breakout if it is to be sustained, because you have to keep in mind if you zoom out farther on any chart that's banks, whether they're regional, whether they're large, whether it's just financials in general, even down the cap spectrum, I think is probably more the important story. That to me, I think is the important trend to look for, because a lot of it has just been a catch up to, a prior all-time high where they've lagged the broader indexes significantly. And, there's a lot to that narrative or that story, whether it was all the banking stress last year, whether it's been a relatively sluggish recovery for small caps in terms of profits. I think the from here is much more important, not necessarily how much the gain has been, because it's just been working off of, a pretty significant sort of downdraft that you saw coming out of the bear market, but even after the fact that the bear market had turned one. So I'd be much more focused on what the breadth profile is from here. And so far, it's been pretty strong, not even just at the large cap level, but even down small caps. Russell 2000 financials are, last I checked on an intraday basis today, at a new 52-week high. So there's a lot more momentum in the all cap universe for financials. It's not just concentrated in one area.
All right, good stuff. Nice. Yeah, good point. I think is important, which is there are other small cap indexes that are like technically breaking out. So the Russell's the Russell, bears the most weight, but some of those other ETFs that have little tweaks in them, towards anything, especially if it tweaks to quality, it's going to be having broken out now for a while. Hey, Colin, real quick, any of the Fed stuff, any speakers, any of that matter this week?
Okay, we're about to close here. We're about to close.
What I'll be looking for is
Yep.
repetition of
We're up.
We got that last week, the idea of a pause given the stronger than expected data. We got that from Bostic. If we start to get hints of that from other officials, maybe that'll become more likely. But again, there's tons of Fed communications this week, as well as last week. So those are the hints we're looking for. Our view right now is that a cut in November is still likely. As we look forward to December, I'd say it's too early to tell. If the economic data does come in strong, especially the next jobs report or two, then a pause could be on the table.
All right. Fantastic conversation. Thanks, guys. Good to have you both today. Pretty interesting day for markets. Nice analysis. Good answers there from Kevin Gordon, Senior Investment Strategist, and Colin Martin, Director and Fixed Income Strategist at the Schwab Center for Financial Research. And take this thing through here because the bell's ringing right now. S&P is closing at 58.15. It's a little bit of a pullback here today of 44 points. There you go, 42-ish. So dollar, little changed. Bonds caught the bid for sure. Nice little move in treasuries we were just talking about there. As a 10-year yield did drop. We were at 4.1, ended closer to 4.03. So that's going to be the biggest rally, it looks like, maybe since the low. Just look at the candle. Yeah, it looks like a pretty notable drop. Probably the biggest drop in yield since the low in September, which was about 3.6. I'm eyeballing that candle right. So either way, it was a notable move because we've been generally selling bonds quite consistently since the Fed cut rates. And Francis making a good observation earlier in the show that we've been pretty much a one-way street. Yields up. So is that what the Fed wanted? It depends if you believe the message about potential news cycle behavior in the economy. And today did kind of suggest that. Banks were up. Financials did close positive. Russell was up. Not much, though, at the end of the day, but kind of faded there for the Russell. But still, their bias was a little bit more towards some of the more cyclical themes. Banks up 0.25%, consumer discretionary up, the real estate up, and staples too. So one could argue a small little kind of value bias in the market. So value did better than growth today, but not by a huge margin. About 40 basis points looks like a value outperformance today, roughly, just using the couple factor ETFs. High beta down about 2%. So that's a pretty decent little sell-off. Kind of came out of nowhere, too, because it looked like we were pretty steady as it goes and almost cruise control, I guess is regrettably the word I think I used this morning. It seemed like stocks were on cruise control. Well, not an iceberg, but we
All right.
a little bit.
So we are closed. Hope everyone had a great day today. It was a little disappointing in the evening session as the markets rolled over, especially with the tech and semiconductors.
What do you think is the more powerful story?
And we have a bearish bias into tomorrow. So we're looking for a open a little bit lower tomorrow, maybe a test of the low, whatever. So given what we know right now, I'd anticipate we could see lower tomorrow, back down towards the 21 day. Anyway, have a great evening, everyone. Take care, and we'll see you in the morning. Ciao.